Goldman Sachs had a really interesting note out, I think, a month or two ago about market concentration being in the 93rd percentile. I mean, it just goes to show the power of the Mag 7 or the performance of the entire index. It's been that way for a while. So why would that break now, and why is that such a bad thing given so much money is going overall to indexing and ETFs, and those are the biggest weights? So it's sort of like a cycle here where money keeps funneling into ETFs, and those are most heavily weighted toward these 7 stocks anyway.
Absolutely. I mean, it really has been the trend for a while, and there's no real indication that trend is changing. I mean, I really kind of think of tech as an invasive species, and the rest of the sectors in the market are kind of its addressable market to gobble up. And I think that the danger is just when you look at the earnings expectations that are priced in for these companies now, you are really at massive valuations and massive earning expectations. So, if these companies don't substantially beat and raise, for the first quarter, I think you've got this possibility of more severe pullbacks in those names. And I think, the positive silver lining is if you look even within tech and you look at some of the chip names, for example, that are not perceived to be AI winners, there may be some value there, So it may just be time for a little bit of a broadening, to take a look at some of the kind of relative losers of 24 and look and see if some of those names are bottoming instead of just continuing to pile everything into Mag 7 and Mag 7 related. That Mag 7 trend is still super strong. There's no real indication that it's breaking, but as we come into earnings season, and we that's accompanied with the inflation report around the same time, we should just realize that we're priced with a lot of optimism here.
Right. It's interesting you mentioned the semiconductor stocks, because I feel like that is one sector where you are seeing almost the most dispersion, because the losers in this sector, they're most exposed to end markets like auto, which has had some problems, to industrial, which has had some problems, and some of them are just structurally, not flawed, but troubled companies. Is that where you see value to rotate from a winner like an NVIDIA or Broadcom to go into some of these underperformers? Because some of these underperformers are just facing even some secular issues like PC demand being low.
Yeah, PC demand, auto demand, some of these more traditional staid industries, which tend to grow, but, they're not growing exponentially. They're growing in the 2, 3, 4% range. But if you look at a value comparison between the AI winners in tech and semis and the AI non-winners, that value differential is just huge. And technically, I think you are seeing some nascent signs of bottoming in those names. And some of them are really good companies that really print consistently good earnings. They're just not perceived to be AI winners. So I think that's an interesting area of the market. UBS has put out some really neat research kind of highlighting some of those companies this year, and I think that's one area to look again, just trying to kind of broaden the portfolio a little bit, beyond the usual suspects.
All right, Michael, great to speak with you. Thank you.
Thank you.
Okay, coming up, the founder of Sam Adams Brewery is outlining a succession plan. We'll bring you details about that after the break. And then later, the FDA raising its alert on recalled eggs from Costco. Now to the highest level, folks. So you don't want to miss this. We're going to talk about it right after the break. Spot Bite, come right back. Squawk Box, Boston beer founder Jim Koch outlining his succession plan. For years, he said that his plan was, quote, don't die. Not a bad plan, by the way. Now he says his wife, Cynthia Fisher, will inherit his controlling interest in the company. Fisher is a healthcare entrepreneur, also a Boston beer board member. She has been married to Cook now for more than 30 years. Cook said he has no plans to retire soon. So, a succession plan of sorts. Not really.
Why is that
Not really.
It's a succession plan. Somebody else is taking over.
He's taking over.
And
yes.
somebody happens to be his wife.
His wife, right. It's interesting. For a public company, right?
Yeah.
Unusual.
It's unusual.
Unusual. Coming up on the other side of this, we're going to talk retail
That makes
trends with
sense.
the co-founder and CEO of clothing company Ministry of Supply. A lot of issues about tariffs and the like that we're going to discuss with him. As we head to a break, here's a look at the best and worst performers from Tuesday's holiday shorting trading session. Squawk Box, coming right back.
Save.
Good morning. Welcome to Squawk Box right here on CNBC. We are live at the NASDAQ market site in Times Square. Merry Christmas. Happy Hanukkah. Take a look at the futures right now. We got some red, unfortunately, on the screen right here. Dow off about 238 points. The NASDAQ looking open down about 110 points. You got the S&P 500 off about 28 points. So the Santa Claus rally, which seems like this beginning, is not really beginning.
Don't be a Grinch.
Yet.
It could still come. The FDA has raised an egg recall at Costco to its highest risk level. Back in November, the agency announced that nearly 11,000 units of organic 24-count eggs sold under Costco's Kirkland brand were being recalled over possible salmonella exposure. Now the recall has been upgraded to a Class 1, which says that there's a reasonable probability that the use of the product will cause serious adverse health consequences or death. The eggs were sold in 25 Costco stores in Alabama, Georgia, North Carolina, South Carolina, and Tennessee, beginning on November 22nd.
Meantime, as we move into 2025, the U.S. labor market offering a mixed picture, with job security remaining strong, hiring rates slowing, and more companies requiring employees to return to the office. To discuss all this and so much more, Jason Greer, Greer Consulting founder and president. Good morning to you. Happy holidays, sir.
Hey, great to see you. How are you?
We've always talked about the return. When are we going to stop talking about return to office? When is that just over?
You know, it's interesting because you and I have been talking about this for the better part of 2 years. I think we're going to continue to talk about it, especially going into 2025. You have President-elect Trump, who has literally said he is going to force federal employees to go back to work. And I kind of wonder if that's going to be a ripple effect that we'll see in private industry as well. Who knows at this point?
What do you think right now, if you were to look across the country, what do you think the sort of like, how many days do you think people in the white collar world are actually working in office today?
Basically about 4 days a week. That's generally what I'm seeing in terms of dealing with my clients, in terms of things that I'm hearing across industry. And I really think that...
Oh, goodness. Oh, goodness. He has not lost his job, folks, just yet.
But if you were in studio.
But he was in
there would be
studio, we
no
hopefully
issue.
wouldn't have this problem.
That's right.
That is actually possibly true. It's interesting that you're saying 4 days. The reason why I was asking the question in a way is because it does feel like we are
Back.
back.
Back,
Most
yeah.
offices in New York, I would say, are 4 to 5 days. And the truth is that I think even in the 5-day universe pre-pandemic, it really was only, I want to say it was only 4.5 days, but people traveled.
Right.
So this whole idea that 5 days is 5 days. I mean, the thing is, it really, in New York, for certain, like at a bank, was like 7 days.
Right, because you're working from home on the weekend.
Hey, Jason, you're back with us?
Okay, my apologies for that.
No, all good. So we were trying to figure this out. So you think 4 days around the country is what the sort of world looks like today, and you think we're moving
Yes.
towards 5?
I think we're moving towards 5 largely because there's going to be a push for 5. I mean, when you consider that even 2 years ago, the push was we just need to keep our employees employed. We just need to make sure that they're not job shopping elsewhere. So we saw more of the hybrid model. But again, it depends on the industry. But what I'm seeing from my clients, what I'm hearing across industry, is that more employers are going to the 4-day work week to see if that model works, and potentially 5 days if that's what's necessary.
Has the pendulum, though, Jason, swung back to the employers having more power to command their workers back to the office? I mean, at this point, in terms of the labor market's cycle, people are worried about their jobs, right? I mean, they want to keep their jobs, they want to make the same amount of money, they don't want to sacrifice anything. Something's got to give, and that may be they got to go back to the office.
I think you said it perfectly when you talked about the pendulum switching back to the employers. Here's what I continue to hear from employees, and actually the survey data bears this out as well, is that you have a number of employees who are frustrated in terms of where their current position is, but they're scared to jump into the job market, especially when you consider the vast majority of employees won't move to a new job unless they're making at least $81,000 or more. So what you have is employees who are essentially saying, the glory days of us going to another job making $20,000 or $30,000 or more is pretty much done. I'm going to stay here, and if my employer forces me to come back to work, I'm going to do so at least begrudgingly.
What does that tell you about the labor market in general, that sentiment, that people are worried to go back to the job market, that they think that they may not make more money if they do jump jobs, in terms of what the Fed is looking at in the employment picture overall?
Yeah, great question. I think what it's ultimately saying is that employees are scared. I've often said this, that the economy needs a better PR agency because the economy is doing relatively well. You still have a number of job openings that are available, but from the sentiment of employees and the internal thinking is, I'm scared to death that if I do leave my job and I jump out there, I'm not going to find a job that's going to at least pay me as much, if not more than what I was currently making. So I think overall the sentiment is, I'm going to stay where I am because if I leave, I don't know what's available for me out there.
We used to talk about the housing market and the mobility, or frankly lack of mobility, that some people felt that they had, insofar as mortgages were either underwater or they didn't think they could sell their house for a profit, therefore they couldn't move. Do you think any of that's changing?
I think so. I think ultimately, and again, I think it's really, it's the psyche of people these days. The psyche of people is that America, just in terms of the overall shift, is sort of doom and gloom. And I think that people, I have a friend of mine who just moved to California. He said that the thing that he was not prepared for is the fact that even in making that move, he got laid off 3 months later. It was for a new job. So I think what ultimately people are saying is, I would love to move across country. I would love to move other places for new opportunities. I'm just scared to death that those opportunities are going to dry up. And then I'm going to be stuck with a mortgage.
Jason, we're going to leave the conversation there. We appreciate it. Happy holidays.
Hey, great seeing you. Thank you.
You bet. Thanks. When we come back, we're going to talk retail trends and the potential impact of tariffs with the CEO of clothing company Ministry of Supply. And guys, let me just say, I wear some of this stuff.
I was going to
Ministry of
ask you.
Supply. This is actually a very, very cool company. And so I think he's been on before.
Is it casual clothes or
No,
business
they
clothes?
actually do business clothes that happen to be comfortable, shockingly. But they've had to move some of the places where they actually manufacture it because of the tariffs that are coming. And we're going to get into all of that. Meantime, a reminder, you can get the best of Squawk Box in our daily podcast. Follow Squawk Pod on your favorite podcast app and listen anytime. We're coming right back. Welcome back to Squawk. I want to turn to the state of the consumer this holiday season and how retailers expect President-elect Trump's proposed tariffs to impact business. Joining us right now is Aman Advani. He's the co-founder and CEO of Ministry of Supply. It's a largely direct-to-consumer clothing company. It's got a store, though, a big one in Boston. It specializes in work leisure for men and women, some of the most comfortable, not work from home, work from office clothes, right, Aman?
That's right. If Greer Consulting is right, we'll need a lot more comfortable dress clothes if people are heading back to offices. So.
Are you wearing? Just so we know, I hope are you sporting some of this stuff right now?
Oh, always. You can't catch me outside of if I'm awake. It's the Ministry of Supply.
I made a crucial error this morning. I do own some Ministry of Supply shirts and other things, and I thought I could wear them today. They're stretchy. What's great about it is it's almost like wearing athletic wear, but it looks like business wear. They're actually showing pictures of it.
Oh, that looks nice.
But I should have worn it. The collar for me.
It's not stiff.
Mom, we should discuss this. It's not totally TV friendly. The collar with a tie. But maybe that's a different discussion.
With a tie, yeah. Fair enough.
Let's talk though about the tariff piece, because I feel like you guys have been thinking about this for a long time and have actually addressed some of it already.
That's right. We had a bit of a dry run, right? A lot of this started happening in 2018, 2019. We saw some of this coming. So, I mean, again, if you think about it, you just gave such a generous introduction to our company, aside from the feedback, of course. But we make performance dress clothes for business class, right? We everything we make is backed by patents and partnerships with NASA and MIT and electronically heated jackets, right? So we can't just pick up and move overnight. The equipment, the know-how to make the clothes we make has taken us a decade of R&D that's happened right here in Massachusetts in our labs. And so we have seen this come before, and we are preparing for it to come again, but it's not so easy as pick up and move, right? It does take years of planning and adjustments to all of that R&D.
So where are most of your garments manufactured right now?
Yeah, so we do a lot in Asia, China, Vietnam, Indonesia. We do some here in the U.S. We do Honduras. We're open to new factories at any given moment. Hong Kong. We've got a lot of wonderful partners that have multiple locations across multiple countries, which makes moving a little bit easier, but certainly a very global footprint.
And what's the switching cost and the switching time?
So the switching cost in many cases, and I guess it answers both questions, in some cases is impossible, right? The IP we've built is often in conjunction with these factories, right? These are people who are specializing in fabric technology. You want a dress shirt that's machine washable, right? This was balled up in the seat back pocket in front of me last night. Shake it out and wear it on TV, right? If you want to do that, you can't just pick up and move. So in some cases, it means starting from scratch, right? In some cases, it does mean completely. In that case, you're talking about a 2-year timeline from absolute customer conversation concept to doorstep at a minimum 2 years.
What would it take for you to move back to the U.S., Aman? I'm just curious because there's just all this talk about reshoring, et cetera. How much more would your garments cost if you moved back here?
Interestingly, so I think that question can kind of be posed to two types of companies, right? You've got companies who are making commodities where the infrastructure exists and it's largely a pricing question, right? So in that case, it's probably just a purely financial question. In the case of a lot of direct-consumer brands, and I'd say including ours, where the infrastructure simply doesn't exist today, the first step would be to build this layer of technology, this infrastructure behind all the clothing we make. So it isn't just a question of kind of would we need to raise prices X% to move back to the US. There's a much bigger existential question of how can we do that, right? These factories we've been working with for years now, we've vetted, we visit them, we have dinner with them every quarter, every year. And so it's a long, deep partnership we have with our factories to make sure that the wild innovations we're putting forth can actually come to life in a high quality way. So it unfortunately isn't so simple as saying it's a 5 or 10% lift. Again, for a commoditized good, for something for the incumbents, maybe so.
If I told you, I'm just curious. I'm sort of playing out the potentially America First President-elect Trump's sort of administration promise. If he said that he was going to either lower taxes because you were going to manufacture in the U.S. by 10%, I don't know, I'm making up the number, or he was going to implement taxes or tariffs rather on some of these other things, and then you start to put in the shipping costs and maybe some of the back and forth. You said you're having dinner with these folks. It means you're getting on a plane to go have that dinner. Hopefully that's not taking up too much of your company's revenues. But at what point does it make sense to actually manufacture in the U.S., or is it almost impossible?
No, it actually, in some cases, the U.S., when we've done production in the U.S., it's actually been, in some cases, cheaper. I keep coming back to, it's not purely, I think there's this assumption that U.S. manufacturing is purely a cost question. Our number one product a couple of years ago was 3D printed right in Los Angeles. So we were making clothes that were actually completely from yarn directly to garment, no waste, incredible technology. And it was our number one selling product that year. And so we do have U.S. production. We love U.S. production. We're a Massachusetts-based company. But in many cases, it's not just a question of dollars, right? It's a question of how do we bring that here, and then in a lot of cases, kind of continuing to support stuff like 3D printing and skilled labor and skilled manufacturing that we want to bring back on shore.
So that's a fair question. Do you think we have the skilled labor to do this?
We do, absolutely. I mean, it's all around us, right? We're in one of the greatest technology eras we'll ever see here in the U.S., and we have a ton of wonderful talent that can do this. Now, I think there's a question of, is it our top priority? Is it where we want to invest our next dollar? And that's a question that's beyond my paycheck.
Aman, I don't think anything's beyond your paycheck. We appreciate it. Happy holidays.
Hey, thanks so much for having me on, and thanks for always being so supportive of our brand. It means a ton to us.
Love the stuff, because I wish I was wearing it so you could see what I'm talking about. Because it looks like, it really does look like business clothing. And if you travel, it really, like it's what he said, you could put it up into a ball.
Well, he looked very wrinkle-free.
He's very wrinkle-free.
Right,
It's an amazing
considering,
thing.
yeah.
No, it's like wearing, you won't like it, it's like wearing like Lululemon clothes, but comfortable, like yoga clothes.
Wear it tomorrow.
Maybe tomorrow, I'll show
We
you.
look forward to. Coming up, which maker of gadgets and gizmos won Christmas this year? We'll run down the list next. And as we head to break, a snapshot from CNBC's Delivering Out the Stock survey. 71% of market participants surveyed say they favor software stocks as the better part of the tech sector in 2025. Squawk Box is coming right back.
Washboardjim.com.
Welcome back to Squawk Box. What tech gadgets were folks opening up on Christmas Day? I can tell you what was going on in the Sorkin family. Steve Kovac taking a closer look at the most downloaded apps. He joins us now with the results, so we might have a better sense of whether Sorkins were in tune with the rest of the world.
Yeah, I'm curious what your trees looked like yesterday. But look, this is what I do every year. It tells us which companies scored the best on Christmas. You check the Apple Store app rankings for the top free apps, and it usually tells us two things every year. First of all, a good indication of what people are downloading when they get a new iPhone and have to download all their, standard apps again, Facebook, TikTok, what have you. And then second of all, it tells us what gadgets and accessories people got that need a companion app. Now, it's not a perfect system. This is just a snapshot in time, but it does show what tech gifts are given on Christmas, and the rankings tend to look a lot differently. So the winner here, Meta, we're showing you it right now, the Meta Horizon app for those Quest virtual reality headsets. They've actually been the winner for the last few years. I've been tracking this. Meta also had the Meta View app for those Ray-Ban smart glasses that you like so much, Andrew. Those were in the top 40. Some other notable trends here. Lemonade, that is actually, you might not have heard of this one. It's another social video app from TikTok, which was as high as number 2 yesterday, showing a lot of people got new iPhones and downloaded this alternative to TikTok from TikTok ahead of that January 19th deadline
Tell us
for
about
the
that,
ban.
though. Before you go to the rest, tell us about that one.
It's TikTok makes it. It's called Lemon 8, Lemon, and then the number 8, and it's kind of, I can't really describe it. It's like a mix of YouTube and TikTok.
And where are the servers based?
That I assume it's the same as TikTok. I don't know
So we think
exactly
that'll be
servers are
blocked
based.
too?
But
January 19th, that's also on the list?
I feel like it has
Well,
to
the
be on
US
the list as
TikTok
well.
servers are in the US.
Oh, I know.
So
Right.
that
That's what they
that
keep
didn't
saying.
make-
Okay.
that
But it
didn't
is
make
owned by TikTok, which is owned by ByteDance, so presumably, but the way I read it was maybe kids are looking for alternatives. Meanwhile,
Get in while you can. Basically,
you might as well download it now.
25
It's gonna be
days.
gone. Meanwhile, we have Amazon. Amazon, another big winner this year. Alexa, the app for controlling all your smart home stuff, that was number 2 by the late evening yesterday, meaning we saw a lot of Echoes and other smart home appliances under the Christmas trees yesterday. Another sign Amazon devices were selling pretty well. The Parent Dashboard app from Amazon, that's what you use to control your kids' devices. I read this as it's likely there's Kindle Fire tablets that sell for pretty cheap. Good for kids when you don't want to spend all that money on an iPad. And then in the fitness category, you're like this one, Andrew, Aura, for the Aura ring that you like to wear so much. That was at number 36.
Wow.
But
Good for them.
Garmin was ahead of them at number 33. They make those GPS smartwatches. Don't know how many Apple Watches were sold because that app is already built on the iPhone, so there's no indication there. You might be asking, why am I focusing so much on the Apple App Store? What about Android? Well, Android store looked a little weird when we looked yesterday. A PDF app was at the very top of the list. Other than that, it was services like WhatsApp and PayPal that were trending. One notable thing we noticed in the Android App Store, though, move to iOS. That's Apple's app for moving data from your iPhone, from your Android phone to your iPhone when you get a new iPhone. That was in the top 40. So that I read as a sort of indication that maybe people were switching over the holiday as well. One other thing that stuck out to me, and I know you guys have children, I don't, so this was a totally new one for me. Tony's.
Tony's, yes.
Do you know that
Yes,
one?
I
Okay,
do. That
so
was
you have young
almost-
kids.
yeah.
I've never heard of this. It's this
It's like a little box.
speaker, a box.
Yeah.
Apparently it's big on TikTok. You take a little character, you put it on top. Remember Teddy Ruxpin?
Yeah.
Back in the 80s and 90s?
you have one in
It's
your
sort of like
household?
that.
I think we have one, but I know about
Wait,
it.
like you have like a Paw Patrol
Yeah.
Tony,
Right, and
put it in,
it tells
and then
a
there's
story.
like a story or songs. and
Do your
things
kids
like
like this?
We did not get it this Christmas,
Okay.
but we almost did. It's really interesting because you don't have to be hooked up to the internet. The kids can operate it themselves. And I think that for a lot of technological devices, it's always, Mom, how do you do this? You know, how do you fix this?
There it is.
And
We're
it's
showing it
very,
right now.
You know, sort of.
And you buy these little characters, and that's how they get you, right? That
Right.
You buy these little
like
characters.
the razor blade.
Exactly, and then they tell a little story, and you can take it off, and it looks really cute. Literally never heard of this till yesterday. I actually had to research this one, but another hot
See, I'm
seller.
just curious because we're a Roblox family.
Yeah.
Were there a lot of was Roblox
There are a lot of
high on the
games.
list?
I forget
There's
exactly
a lot
where
of
Roblox
people-
is.
A lot of children
ranking.
asking for Robux.
Yes,
Here.
that is another big one.
Which is just basically asking for money.
But in
Basically
gaming,
asking for money. So
gaming,
they can
you
buy
have the
clothes,
PlayStation app.
digital clothes, and digital things.
Exactly, but you also have the
Sounds like a great
PlayStation app, Xbox app, and the Nintendo Switch parental control app. We're
Ooh,
ranking
parental.
up there too as well. So
By the way,
it's
the
a lot of
parental
gaming.
controls on Roblox I've now implemented.
Good.
Pretty good. I think. I don't know. I'm hoping.
They got a lot of work to do.
They were working on it. Yeah, I think this new setup seems to be better.
Yeah, way better.
Steve, thank you.
Thanks, guys.
Appreciate it.
Coming up, we'll talk about the outlook for companies that make blockbuster weight loss drugs. Eli Lilly up 35% this year. Novo Nordisk, meantime, down 15%. Squawk Box, will be right back.
It's 7 a.m. on the East Coast. You're watching Squawk Box right here on CNBC. I'm Andrew Ross Sorkin, along with Melissa Lee. A day after Christmas and Hanukkah, Joe and Becky are off today. We got a whole bunch of big stories to tell you about. Among them, Netflix kicking off its NFL coverage, mostly glitch-free. Aside from a microphone issue at the beginning of the pregame show, yesterday's pair of games were streamed without a hitch. Beyonce as well. We haven't really discussed the Mariah Carey at all. We'll discuss that in a little bit. Also, an update on the American Airlines outage on Christmas Eve. The company saying that a network hardware issue was what was affecting systems operated by DXC Technology. That was a vendor that maintains American's flight operating system. The airline resumed flights about an hour after that hour-long ground stop, but about 1,000 flights were delayed on Tuesday as a result of all this. And finding an affordable car could be harder if President-elect Trump moves ahead with his threat to impose tariffs on Canada and Mexico. It's a fascinating story. It's worth reading in the Wall Street Journal this morning, saying that nearly a third of all vehicles priced below $30,000 are built in Mexico, including the Nissan Sentra, Ford Maverick, and other popular models. Analysts say that any new tariff-related costs are likely to be passed on to consumers.
They're saying $3,000
Yep.
is the estimate per car. Let's check on futures here. Santa Claus rally not happening, at least not this morning, although it's a little too early to say. The S&P looking to open lower by 25 points. Dow looking to lose 219. The Nasdaq looking down about 88 at the open. Let's get to Seema Modi with a look at this morning's pre-market movers. Morning, Seema.
Good morning, Melissa and Andrew. Let's take a look at shares of Apple moving lower in pre-market trade, down just fractionally as the mega cap attempts to close in on a $4 trillion market cap. Apple continuing to hold its own against Nvidia and Microsoft as the world's most valuable company on hopes that this AI momentum will rejuvenate sluggish iPhone sales. Wedbush security analyst writing that AI rollout will push sales further moving into the holiday season. That's their call. The stock is currently trading right around $257 a share. Let's talk about new data on Nvidia, which shows retail traders are putting nearly $30 billion into the chipmaker this year, surging on the AI wave that's captivated Wall Street. That's according to new data from Vanda Research. Net inflows also jumping over 9 times since 2021. Yet another benchmark, Nvidia surpassing this year. It's been volatile in recent weeks, but the stock is still up about 180% in 2024. Finally, we'll end with shares of Alibaba moving in pre-market right now. The Chinese tech giant is closing in on a deal with South Korea's E-Mart to combine their online shopping assets. Bloomberg is reporting that the transaction would value the new businesses at around $4 billion. And it's worth noting, Alibaba last week announced it would sell its Chinese department store unit as it refocuses on its core e-commerce operations. Shares of E-Mart jumping about 5% on this news. Melissa.
Seema, thank you. Seema Modi. Well, now for the latest in weight loss drug news and the outlook for GLP-1 drugs in 2025, let's bring in Emily Field, Barclays Head of European Pharmaceutical Research. Emily, thanks so much for joining us. We appreciate it.
Thanks for having me.
All year long, it's been sort of an interesting divergence between the valuation of Eli Lilly as well as Novo Nordisk. And then in recent days, that was really driven home by the disappointing CagriSema news from Novo Nordisk. And I'm wondering where, do you think that this divergence is warranted, or do you think investors have discounted Novo enough on the CagriSema news?
Yeah, so certainly the CagriSema news was very disappointing, but that was really relative to a bar that the company had set with investors, in that they had set a weight loss goal for the drug of at least 25% of body weight. It came in at 22.7. So missing that that bar that they'd set was a large reason why the stock declined so much. However, there's still a lot we still don't know about the data, and actually, as a headline weight loss result, it still is the best number we have seen. So we think it will still be a very, very big drug, but it's going to take some time to sort of win investors back to the story, I think.
Do the side effects, the number 57% not proceeding to the highest dosage, does that alarm you in any way?
Yeah, so that's actually why what investors really want to see the most, because normally in these trials, you're forced to get up to the max dose so that when we get the weight loss number, it's people on the highest dose. With this, they actually had a different trial protocol where not everyone got to that highest dose. So we just don't know what weight loss was in that highest dose cohort. We'll probably find that out in the coming months. And we actually today we have very limited information on side effects, but they did say the discontinuations from the trial were very low.
Let's just say that CagriSema is where it is in terms of the weight loss numbers. How does that sort of change the valuation of? Do you think that Novo is discounted enough? Is it a value to investors now to buy it based on the hope that CagriSema can actually show results, that perhaps their trials in Alzheimer's will show positive results for semaglutide in general?
Yeah, so for Novo Nordisk, CagriSema still can help them get through the patent cliff for Ozempic. So CagriSema still keeps the Novo story intact, and trading at a low 20s PE valuation on next year's numbers with double-digit earnings growth, we certainly think that valuation looks extremely attractive. But this sort of Novo versus Lilly debate feels like it's only going to get more intense next year rather than less so.
Well, especially as we get some readouts on retatrutide, which is Lilly's next sort of generation weight loss drug, which is supposed to have great weight loss as well. How do you sort of stack up that competition? Because it does seem like the bar is getting higher and higher in terms of developing that drug. A lot of people out there are taking, semaglutide and tirzepatide, and they are happy with their results. Is there really that need for 25% weight loss as opposed to 22.7?
Exactly, and and what clinicians say is that in the real world, people don't go up to that max dose. Exactly to your point, because they're happy with the weight loss they have. The next big data point that people in this space are going to be watching for is actually, can we convert this market over to pills? That's a huge open question, and Eli Lilly has their next generation pill called orforglipron having pivotal results next April.
Right, and that's sort of key also in the race between Novo and Eli Lilly in terms of the development of oral, because Lilly is a small molecule and that's much easier to make. And so I'm wondering, how do you sort of discount that battle as well? Does it seem like
Yeah.
Lilly is sort of racking up the wins?
Yeah, no, and absolutely. I think the stock prices of the two companies tell you all you need to know about where investors think the winner is, at least for this year. We'll see how the pill does, and yeah, that's a big component of the valuation gap. Novo doesn't have one of these next generation pills. However, at least specialists we talk to think that for the most part, the market will remain injectable for a very long time to come, because those are just the better drugs for now.
All right, Emily, got to leave it there. Thank you so much.
Thank you.
Emily Field.
Coming up on the other side of this, a new era ahead for cryptocurrencies. We're going to talk about how President-elect Trump's pick for SEC chair will impact digital assets and the crypto industry. And the Netflix. Well, Netflix delivering the NFL for Christmas, taking on the NBA, what this could mean for the future of streaming and major sporting events, all that and more. Squawk Box rolls on the day after Christmas and Hanukkah. Welcome back to Squawk Box. Take a look at the price of Bitcoin. We're sitting just about 95,500 bucks. It's well off of its all-time high, now trading around that level, but still up, we should say, 120% this year alone. There was a question about Bitcoin's future, and CNBC's delivering Alpha survey, which is most likely to happen first. What is most likely to happen first for Bitcoin? 57% say it will fall to 50,000, and 43% say it will rise to 200,000. This goes to the conversation happening
Right.
around our Christmas Hanukkah
It's also
table.
a matter of time frame
Yes,
on that question, which we don't know.
we don't know. Where do you land on that?
I
It's a
think
bad
that
business to
I
answer that
think
question.
that it can go. I think it can go to 50, and I think it can go to 200.
So long-term 200, short-term 50.
Yeah, I think that's fair. That's fair. President-elect Trump has picked crypto supporter Paul Atkins to chair the Securities and Exchange Commission. This comes after 4 years of Gary Gensler's tough take on digital assets. Joining us now to discuss Trump's pro-crypto picks and how they will reshape the industry, Blockchain Association CEO Kristen Smith. Kristen, great to have you with us.
Thanks for having me.
And I'm wondering, because I've had this question that I've asked myself, I've asked others since Trump was elected, and we've seen this sort of astronomical rise in Bitcoin. What specifically are the regulations in place that have handcuffed Bitcoin's growth in your view that will now be lifted under this new administration?
Yeah, well, that's interesting. When we talk about the SEC, we're really talking about things other than Bitcoin. Bitcoin has been perceived to be a commodity and it's been something outside of it. But the fact that there isn't a basic regulatory framework for the exchanges and the trading of these assets, I think is something that has kept people out of Bitcoin. When you look at all of the institutions, the wirehouses and others, they see like, oh, they think this is unregulated. And if there were regulated markets like people are used to having with financial assets, I think people would be more open to coming into Bitcoin. But, you know, I'm in the camp of going back to that survey. I think it goes to 200 before it goes to 50. I think that, you know, you have a lot of people that are learning about Bitcoin for the first time. And I think, you know, as more and more sort of retail financial advisors are advising their clients to do this, I think that we're going to see more people come into Bitcoin. Also, we see a lot of countries around the world or even states around the United States that are building Bitcoin reserves. I'm not sure that's something that the US is going to do right out of the gate, but people are looking to hold more Bitcoin, not less. And so I think just having that change of attitude from the top, having a president who says, hey, we want the U.S. to be the capital of this industry. We want to fight for you. We're behind you. We're going to get the rules right. We're going to get it done here. Just having that change of attitude at the top makes a tremendous amount of difference.
Kristen, I have a question, and I don't know what the chances are that this happens, but I have been wondering whether there's going to be a backlash. So one of the things that we were talking about this earlier this morning, there's this article in the Journal just about how Russia is now using Bitcoin in part to get around some of their own issues and to get around some of the financial system and the like. And while clearly this President-elect Trump has been very bullish about Bitcoin and wants to figure out crypto, I wonder whether there's going to be an argument made at some point that potentially this could be a negative for the sovereignty of the US dollar long term. And that if it actually has great success, it could actually create real problems, and whether that will actually be anti-American. I'm not suggesting that is the case.
Yeah,
I just wonder whether that at the farther we get along in this dialogue and discussion, you could see some people say actually to be quote unquote America first, actually Bitcoin would be at odds with that, oddly enough. And so I just wonder sort of how you think this whole thing shakes out.
Yeah, no, I think that's an interesting question. I think, you know, if you look outside of Bitcoin and go over to stable coins, dollar-backed stable coins are really the true source of power for the American dollar. Because when you have something like Bitcoin, that price fluctuates. As we see, it's down a little bit today. You know, people around the globe want to have a stable place to hold their money. And when, you know, most of these stable coins are backed by U.S. treasuries, it's tremendously important for the dollar. It gives anyone around the world easy access to the dollar that they can move around quickly. And so, you know, I think when we're looking at U.S. strength for the dollar, I think we need to be looking more at stable coins than at Bitcoin. But, you know, listen, I think there is a magic moment here. I am not I've been working in Washington for almost 25 years. These are incredibly rare moments. You don't have an industry that has such a pro crypto Congress, both on the bipartisan level, right, as well as a pro crypto president. And these are really unique situations that we find ourselves in within the crypto industry. And so my message working with the industry has been, we got to strike while the iron's hot here. We need to work on getting the appropriate legislation done. We also have this rulemaking pathway that wasn't available in the last administration, so we could have the SEC or the CFTC use the authority that they clearly have to help move the ball forward to find that regulatory framework that works for the industry. And so, I think that this is a real opportunity, but we need to act now as an industry. We need to do it in a unified way, or we're going to miss this moment, and there could end up being some sort of backlash or something that sets us back again, and then we have to continue to build up that political capital.
So in terms of that regulatory framework that you referred to regarding the exchanges specifically, what are some of the tent poles of that you're seeking? I mean, what are some of the hallmarks, and how will they affect the likes of a Coinbase or a Robinhood?
Yeah, I think if you talk to any of the exchanges or the brokers that are out there today, is they want a place to be able to go and register. Like, they want to have government with some oversight to ensure that there aren't conflicts of interest, that things are running smoothly, that there isn't any funny business going on at that level. When you have a centralized entity that's performing those types of services, this doesn't apply to DeFi. This is just for the centralized platforms. And we also need to figure out some way to solve this issue of what are these tokens. This issue of token classification has been a problem for a long time. And then some, basic rules around custody. These are all things that would be very easy to do, but some of them there are not clear authorities today, so we need Congress to actually pass a law to do that. But I think having a place for these exchanges to register would be very helpful in moving the market into the next generation here.
And just quickly, you said 200 before 50, but does it ever go back to 50, or is that history?
I think it's history. I mean, listen, I'm the policy person, right? I work in Washington. I am not Bitcoin rich myself. So, listen, I think that more people are opening up to this. I think it's gone so mainstream in the short time that I've been doing this work, and I think that when people realize that, boy, I want to have 1%, 2% of my retirement portfolio in Bitcoin, that is kind of a one-way street. And I think as we're talking with different institutions, there's been this shift of they can't afford to not have an informed position on this. And I think that, ultimately is going to lead more and more people to buy Bitcoin over time.
Kristen, thanks. Kristen Smith.
Coming up after the buffering bruises from the Jake Paul-Mike Tyson fight, Netflix got on the field with the NFL with two big games and a Super Bowl caliber halftime show with Beyonce. So the question this morning, did the streaming giant score for investors? We'll discuss that when Squawk Box returns after this.
Time now for today's Aflac trivia question. What are the top producing Christmas tree states? The answer when Squawk Box returns. the answer to today's Aflac trivia question. What are the top producing Christmas tree states? The answer, Oregon, North Carolina, and Michigan.
Welcome back to Squawk Box. Netflix making streaming history yesterday, airing 2 NFL Christmas Day games for the first time. A $150 million move to expand into live sports. Joining us right now is Tom Rogers, Orbit Gaming Executive Chairman and former NBC Cable President, and of course the CNBC contributor. It's great to see you, Tom. The question at $150 million is how many new customers did they get, do you think, or how many customers did they not lose as a function of this?
Well, I think that's one of the data questions that we don't have hard data on yet, and we'll begin to get it, both viewership and sign-ups. My gut is that while Netflix presumably entered into this deal to help its nascent advertising business, and it looks like they did a hell of a job selling advertising here. It was chock full of ads. Less emphasized was would this be a big sign-up day for new Netflix subscribers, as the Paul Tyson fight ended up being. I think it will be a banner day for sign-ups there. I think viewership is a question. I don't think it will do as well as the supposed 65 million concurrent streams that the Tyson-Paul fight did. But I think it will do better than predictions of 35 million viewers. This was global in terms of its reach, and I think there'll be a much bigger viewer number than that, probably peaking at the Beyonce performance, which, as you said, was Super Bowl quality. The other thing I'll be interested in seeing is how it did relative to last year's Christmas Day. Last year's Christmas Day, the NFL games on the broadcast networks averaged about 30 million viewers. The NBA Christmas games averaged about 3 million viewers. But the Netflix games were terrible. Good, you know, they restored their live streaming chops, but the games themselves were not good at all. The NBA games were great. I was at the Knicks game, phenomenal game against the Spurs. The Lakers Warriors game was great. I think NBA is going to be a beneficiary of how good those matchups were, and ultimately I think we may see some shift in the ratio there between NFL and NBA ratings relative to last year.
We were discussing, how much do you think they paid for Beyonce? Do you think they paid more for each game, or do you think they paid more for Beyonce?
I think they probably paid more for each game, but it's probably close.
Well, each game is worth $25 million to them, right? There's there's three
3 years.
3 years, 2 games a pop.
Right, but there's also
No,
advertising.
it's only guaranteed one game for
Only
26.
one game. Okay.
27.
So that means the games are even worth more than $25 million each.
Right. I think she probably got close. Look, she gets an enormous number no matter what she does to do it on Christmas Day. I'm sure there was a much bigger pop riding in on a horse. She probably got even more for. So my guess is it was pretty close, but the games were probably somewhat more valuable.
Andrew just wants to know so he can save up for his 50th birthday bash, which is going to be huge. And you will be invited, I'm sure.
I'll contribute, Andrew.
But Tom, I'm wondering, this whole conversation brings, this interesting sort of exercise in terms of what is it worth to Netflix if we're not going to necessarily know the subscriber signups that they get. They sell advertising. This keeps people in the flywheel. I mean, how do you sort of assess what they pay for these games and what it means to Netflix?
Well, I think you got to put that in some perspective. Relative to a couple years ago where there were still big questions about Netflix's future. Today, the market cap of Netflix is about the same as Disney, Comcast, Paramount, Warner Brothers, Discovery, and Fox combined. So they have become the broadest reach global media network, by far the most valuable media company in the world. They are still able, I think, to have catalysts like this. If the subscriber sign-up number is as good as I think it will be, that will probably pop the stock somewhat more. I would expect it will take a bit of a rest after that. But the big question is sports as a catalyst generally for the media industry. How deep is Netflix going to get in? They just announced that they've acquired the FIFA Women's Cup, World Cup rights for 2027 and 2031. The next big package to come up in the sports world is UFC. Are they going to try to take all of it, part of it, none of it? Or, like they've been doing so far, find some kind of special event around which they can get phenomenal promotion. They're just fantastic at promotion. I'm still waiting for this New Jersey drone issue to end up being a giant promotion for the next season of Stranger Things. These guys are phenomenal at promoting events.
Tom, what can you think, just on the advertising alone, though? Not on the internal promotions, which are just helpful as a brand building exercise, but I'm talking about just advertising on those games themselves.
Well, I think advertising alone rarely covers the sports rights fee. I think they, as a first out effort to filling up inventory with premier advertisers that I'm sure sold at premier rates, I'm sure they did extremely well. And my guess is that they looked at this as a promotional event and an anti-churn event for Netflix, but I think it's going to more than pay for itself if the kind of sign-ups they get ends up being the kind of number I would expect, and I think even potentially bigger than the sign-ups they got from Tyson Paul, which was a very big banner sign-up day.
Tom, can you look into your 2025 crystal ball for us, just on a separate note? There's so many questions about, now we have the Trump administration coming into play here, about what kind of deals may or may not happen. I don't know if you think there's big deals in the offing that we should be discussing.
Well, I do think this will be the year that two of the traditional legacy media companies have some kind of merger or joint venture of streaming services, as difficult as that will be to put together. I do think that there is a need for driving scale in the streaming space, and I'm not predicting which services will be the players there, but I do predict two of them will get together in some way. I think the deal that will be culminated in 2025, the spin-off of CNBC and the other NBC cable networks, I predict it will be a great catalyst for the expansion of CNBC into the future, so I think that will be a big one to watch as well.
God bless you. What do you, and then what do you think of this new FCC chair taking it to Bob Iger over ABC News?
Well, I think that Disney will probably try to avoid major political scuffles in 2025. I think this is an indication of what the next administration relationship with media may be like, which could be pretty harsh in terms of coming at media properties when they don't agree with positions they've taken. I think it's one thing for it to be words from officials. It's another thing if it turns into some kind of actions on licenses or other things, which would be really a bad development to see that kind of government treatment of media.
Okay. Tom, it's great to see you. Merry Christmas, Happy Hanukkah. We'll see more of you in 25. Thanks.
Thanks for having me.
Coming up, more media moves. Disney had a big year at the box office, but can it lead the industry back to pre-pandemic levels next year? I'll check out the slate of movies coming up from the Magic Kingdom. And as we head to break, check out some of the studio stocks this morning. Squawk Box, be right back. Japan's Nippon Steel is delaying the closing date for its planned $14 billion takeover of U.S. Steel until March due to the ongoing review of the deal in Washington. The move coming after a panel that looks at acquisitions for national security issues was deadlocked over whether to approve the sale, leaving the final decision to President Biden. Both he and President-elect Trump are opposed to the deal. Nippon Steel's president telling reporters yesterday the company has support in areas where U.S. steel mills are located, posting a letter signed by several mayors on social media.
Meantime, what does the future hold for the Trump tax cuts? The president-elect wants them extended, but what happens to taxpayers, I should say, if they expire? We're going to get into all that next. Squawk Box returning after this.
The NBC.
Welcome back to Squawk Box. Take a check on the post-Christmas futures picture right now, looking negative right across the board here. S&P looking to be lower by 26 points. Dow looking to lose 231 at the open, and the Nasdaq looking to be down by about 106. We do have some results, more results from CNBC's Delivering Alpha survey. One of the questions, based on what you know so far, where do you stand on President-elect Trump's economic policies? 71% say he'll be great for the economy and the markets. 29% say his policies will not be good for the economy and the markets. You can see more, by the way, of the results of the survey on CNBC.com.
Meantime, let's talk about taxes, because potential tariffs and an expiring tax law coming up this year. President-elect Trump and his administration will be facing several challenges as we head into 25. Join us right now with the implications of extending the Tax Cuts and Jobs Act. Manhattan Institute's Allison Traeger and Yale Law School and Yale School of Management professor Natasha Sarin. Good morning to both of you. What do you think the chances are we don't get a tax extension in this calendar year, Allison?
I'd say low. I think it's looking good that they're going to extend them all. I mean, I think even if Harris, they would have extended them for most people. I don't see either party wanting to put taxes higher, particularly on middle class people. So I think the thing we know about Trump is I think we can expect higher, sort of, it to become permanent for pretty much all earners.
So you think that becomes permanent? Natasha, you think it becomes permanent? And by the way, what's the chances it actually goes lower?
So I think there's like the thing I can tell you with full certainty maybe is that the tax code is definitely going to change next year, right? You have $5 trillion of expiring tax cuts that are sort of have to be extended. If they're not extended, they're going to disappear. And as Allison mentioned, that means tax increases across the board, though those benefits of those tax cuts are way concentrated towards the top of the distribution. The question that I have, and the question you're kind of starting to get to, Andrew, is like, what is going to happen on the pay for side? So let's say you want to across the board extend the Trump tax cuts, that's about $5 trillion. If you want to make good on all these other Trump campaign promises, no taxes on tips, no taxes on overtime, no taxes on Social Security benefits, that's another $5 trillion of tax cuts. So $10 trillion of deficit finance tax cuts is going to be hugely problematic for the American economy and result in higher borrowing rates. It's going to increase mortgage rates, increase credit card borrowing rates in ways that I think are going to be disruptive. So I suspect they're going to have to find ways to pay for this.
Well, that's my question. So Allison, sort of game theory this out with us. How do you ultimately do it and make it, at least from an optics perspective, look like it's neutral somehow?
Well, I mean, it's hard to know. I think, based on his economic picks, one thing they might do is bring in the border tax adjustment. That would be more on the corporate side, which when they moved to destination-based taxes was what they were supposed to do to make it somewhat deficit neutral. So we can expect that. I think they're also hoping, this might be wishful thinking, that DOGE will find ways to promote growth or maybe cut spending. I think when you hear them talk, they're talking not necessarily about finding other ways to get tax revenue, but to maybe cut spending. I don't see anything they're doing that looks like that's going to do that directly, but I guess they're hoping they're going to find ways to be more efficient.
Natasha, can you sort of theorize out how you can make this work?
The reality is there's just like not enough money there with respect to the sort of DOGE spending cuts that they imagine, especially when you're in a world in which there's no changes to Social Security and health benefits that are on the table. And by the way, the Social Security and Medicare trust funds are set to extinguish in the next decade. So you kind of have to look on the tax side. And the thing that I find really troubling is I don't necessarily see how you can get the numbers to work. Because rather than talking about things like, let's increase the corporate rate slightly to what business had asked for when the TCJA was passed, around 25%, what they're saying is we're going to cut corporate rates further. They're saying that Trump has said previously that his solution for all of this is that we're going to eliminate the income tax and replace it with tariffs. Besides being mathematically impossible, again, there's just not enough revenue there. It would also be hugely inflationary and result in, thousands of dollars of increased costs for the American people each year and move us closer to autarky. I don't think that's good economic policy. I doubt Allison thinks that it is either. And I doubt you can frankly find any economist, including those who are going to be working in the Trump administration, who would agree with that sort of approach as well.
Allison, do you have any thought about what the corporate tax rate ultimately looks like, and does it matter?
Well, of course it matters.
I shouldn't say it doesn't matter, but what's a rate that actually could work?
Well,
he's talking about 15%.
Yeah, he's saying 15%, which is honestly similar to a lot of other countries. Although I think, as Natasha points out, it's not going to bring in enough revenue or produce enough growth to pay for that cut. So again, they could have said bring in border tax adjustment. People who he's having on his team certainly seem to be in favor of that. But I think, as Natasha keeps pointing out, and she's right, that we might spur some growth for some of these policies, but not enough to pay for. I think we're looking at higher debt, no matter which way we go on this. The question is how much damage is the higher debt going to bring to the economy during the Trump administration? Because we might not feel the cost of that for another couple of years.
Allison and Natasha, we will watch and wait, and I'm sure we will debate a lot more of this with both of you in 2025. Thanks.
Thanks for having us.
Coming up, how will companies use AI in 2025? Goldman Sachs has some predictions, and we'll bring them to you next. And as we head to break, check out some of the mega cap stocks not named Apple. There are some. Squawk Box will be right back.
Welcome back to Squawk Box. After a banner year for the AI industry, Goldman Sachs out with some predictions for where this technology is headed in 2025. Kate Rooney is here post-Christmas on Boxing Day, no less.
Yes.
Unbox it for us.
We will unbox the predictions. Great to see you guys. So Goldman's top tech executive did share his outlook on AI for next year. I spoke to the bank's chief information officer, Marco Argenti, exclusively on this topic. He spent the bulk of his career over at AWS, Amazon Web Services, and Nokia back in the day, now handles Goldman's internal AI efforts. We first talked about what went on this year. He said right now AI feels like the emergence of cloud. He was at AWS for that, but a lot faster. Says he's never really seen anything like this in terms of the pace right now of deployment. Biggest surprise, he says, was this technology moving beyond just chatbots into multimodal, which is essentially AI that generates video and images. Says that next year, Fortune 500 companies are going to start to deploy this in a much more impactful way.
All those capabilities will be deployed into corporations, enterprises, and we're going to be put at use in a very effective way beyond the use case that we hear about a lot, like the developer use case or the call center or customer contact center use case, etc. So I see 2025 as 1 year where a lot of that sort of a potential energy that we've seen is going to be made into, like, translated into actual returns and actual applications within the corporation.
He does think this is going to evolve into what he calls a new hybrid workforce, so AI agents working alongside people, even HR managers. for AI, says there's going to be an emergence rather of experts as well that have very specific industry knowledge in terms of what those agents look like. He isn't anticipating major AI robotics breakthroughs. AI safety says is going to become a bigger priority on company boards, not just for regulators and then those large language models. Does expect consolidation, says we will see many cars with fewer engines being those underlying models. He is among those, thinks those models from OpenAI, Google, and others will start to get commoditized. And as that happens, the data these companies train off, according to Argenti at least, will start to emerge as a possible edge, guys.
So when he says there's going to be consolidation among large language models, how does he see that happening?
I don't think M&A, but I do think smaller, some of these models just looking a little bit more similar. So consolidation, not in terms of the merging, but I guess more of commoditization. So they sort of start to look the same. They consolidate certain features in a way that they kind of start looking like the engine of your car, where you don't really think about it or know about it, but you know what kind of car you have. You know the model of the car. So that's maybe where the applications come in.
Who is developing the industry specific, deep dive sort of AI engines? Because there's, in order to train these models, you need the data, as you mentioned. And so there has to be some level of cooperation, I would imagine, amongst companies.
Yeah, and so they have these sort of off-the-shelf models. So that's something Goldman does, a lot of the banks do, where they'll take a model from OpenAI, for example. Anthropic is also becoming one of the leaders and making a ton of progress, is seen as one of the leaders for enterprise at least. They'll take something off the shelf, they'll customize it for banking, for example, and sort of do some of the legwork, but use the underlying technology. And that's one of the models you're seeing really play out, where the banks and others are sort of fine-tuning them to make them better, and not necessarily making their own, because it's quite expensive, you need the talent. That's another thing to watch, I would say, in 2025, is the talent pool. Like, I was asking him, how are you competing with Google and Amazon to hire some of these people? It is the data, because some of these people want to be, and you hear the same thing from folks like MasterCard, where they've got the actual data to work with, and that's appealing. So we'll see if they're able to get some top talent.
What do you use right now?
What do I use?
Yeah, what do you like?
Gosh, I actually use Perplexity a lot.
Really?
Yeah. I use them all, but I use ChatGPT. I'm stuck in Santa mode on ChatGPT. Did you guys see this the other week? They launched a Santa mode. So every time I use the, when I'm driving, if I have a question that I want to ask Siri, but Siri can't come up with it, I'll ask ChatGPT. But it's stuck in Santa mode, so it's telling me everything I want to know, but in Santa's voice. So.
Are there ho-ho-hos in between?
Yeah, yes, and it's over the top, so I can't get out of Santa mode. But I've moved away from ChatGPT because of that. What do you use?
I'm a big ChatGPTer.
Yeah.
Anthropic, you could talk to Claude. I think that the sort of back and forth with Claude is kind of fun. Gemini, I play around with Gemini on the images and video stuff.
That's fun.
Which I do think may be better than some of the others.
Yeah. I think Grok is going to be one. So XAI is going to be one to watch, is sort of seen as a dark horse.
The next one.
Yeah, in 2025. That's one that you hear a lot more about, so probably a name to watch. Musk's influence can't be ignored.
And I think you can make videos and other things with Grok with like real people in them.
Yeah.
That you can't.
That's right.
Right, like OpenAI stops you from doing things that
Sounds
might
like
be
trouble.
bad. Right.
Sounds like trouble.
Something to watch.
Okay, thank you.
Good to see you guys.
Coming up, the wrap on the holiday shopping season. Will there be some names from the discount rack going into 2025? We'll have some winners and losers next. Plus, some new data on retail sales just out from MasterCard. Squawk Box is coming right back. MasterCard just out with new spending pulse data. It says retail sales for the holiday season rose 3.8% from last year. Joining us to talk about some of the retail winners and losers, Michael Zakorf, the founder of 5 New Digital. Michael, great to have you with us here on set. Top selling brands, let's get straight to it.
Lego was a big winner. Nike was a big winner. Burberry did very well. And I think you really saw was encouraging. It was a cross-section of apparel, toys, and electronics that did very well. I guess gift cards were also the big winner. It's been a trend for a few years now. And so we've seen some of these brands and the retailers that sell them, like Walmart and Amazon, all had banner years.
How does this compare to, let's say, last season? I mean, have the winners changed?
I think they've been pretty consistent. You know, Amazon and Walmart were the dominant winners. Target had a better season than a lot of people expected. You know, I think Target fell behind a little bit in the online-offline integration race to Walmart over the last few years. And I think Target's gonna have a real big comeback year. The department stores, you know, Macy's didn't have a good season. And I think what we really learned this season is there are just simply some models and formats that don't work anymore, and that people are spending, but they're really particular about where they want to spend.
Right. The MasterCard survey that was just released, you know, let's say 20 minutes ago or so, said online was the #1 choice. So is that, even when there is a bricks and mortar option, do consumers still choose the online mode?
The answer is yes and no. Roughly 25% of all holiday sales happened online. But it's been a huge increase year to year. So Black Friday was up 10% online year over year. Cyber Monday was up 13.1% year on year. And so online has grown its share of the pie.
We always ask the same question, so I apologize if it's just a boring question, which is how much of those days do you think ultimately are a pull forward day or actually incremental?
I think they're more incremental. And you know, we do a lot of study on ROAS. You know, some people are just looking at their return on ad spend on these platforms, and they're saying we're getting a 3-to-1 or a 4-to-1. But when you apply, you know, some data analytics to incremental, you can break up how much would have been sold without those campaigns on those platforms versus how much actually was. But the other big trend we saw is mobile is dominating now. So about 40% of all sales in e-commerce happen on mobile. We're predicting 70% of all e-commerce sales are going to be mobile next year. Right, so if you're a brand or a retailer and you're not thinking about how to optimize for mobile, you're gonna have a hard time getting through to consumers next year.
Are you focused at all on returns?
Yeah, returns is a big issue. Returns is really hurting the retail
Super
industry.
expensive.
Super expensive, and this is a shocking number. This year, returns equaled $930 billion in lost revenue to retailers.
What percentage of sales are returned online?
Well, the blended return rate online offline is 17%. Online it tends to be closer to 30 to 40%.
Wow.
And a lot of that comes from what we call bracketing, and you know, ordering, you know, lots of different styles and colors. But it's a big problem. So when you think about retailers, you know, having a tough time with margin, that combination of, you know, organized retail theft and returns, it's hard to deal with.
We've heard that shrink has come down at some of the major players that have blamed shrink in the past, like a Target, for instance. But in terms of the returns, are we coming closer to a day when free returns are going to be more limited?
Yeah, I think that's happening. The issue that brands and retailers keep running up against, though, is every time they take away free returns, they lose 35% or 40% of their customers go to somebody who does offer it, right? And so I think there's another solution, and this is really key for all brands and retailers. There are channels and technologies and formats to sell through now that are demonstrably proven to lower return rates. So, for instance, live streaming commerce, right, has 25% conversion as opposed to 2% on a website, and has a 5 to 10% return rate as opposed to 30 to 40%.
So shoppable video, the more immersive and experiential your physical store and your digital store is, immediately you see the uptick in traffic conversions, average order volumes, long-term customer value, and a lowering of returns.
Interesting. Michael, thank you. Good to see you.
It is just past 8 a.m., 8:01 exactly right here on the East Coast. You're watching Squawk Box on CNBC, a day after the first day of Hanukkah and Christmas, of course. I'm Andrew Ross Sorkin, along with Melissa Lee. Joe and Becky are off today. We got some big breaking economic news. We will bring you that at 8:30 a.m. Eastern Time. Closely watch weekly jobless claims ahead of that data. Take a look, though, at U.S. equity futures. I hate to say it, some red on the screen the day after Christmas. The Santa Claus rally maybe being delayed by the Grinch. Dow off about 201 points. NASDAQ off about 103 points. You're looking at the S&P 500 off about 25 points. We're not seeing any outsized moves among any of the Dow stocks, but at this point, all 30 are indicating marginally lower or flat. So there's not one there that's breaking out either way. Meantime, take a look at Treasuries. The 10-year note, you're looking at the 10-year sitting just about 4.631, the 2-year at 4.359. Bitcoin, we're saying a conversation starter during the holiday season, always sitting just at about $95,000. And we're watching shares of Apple as its market cap nears $4 trillion. We say it's $4 trillion with a T. Apple stock would need to rise to about $464.62 in order to hit that milestone. We're 257 right now.
2.5%.
Not so, yes, we'll see.
Yeah. Let's get to Seema Modi with a look at this morning's pre-market movers. Hey, Seema.
Well, it's about an hour and a half till the market opens. Take a look at shares of GameStop, up about 3% right now in pre-market as the meme stock champion Roaring Kitty posted on X, formerly known as Twitter, a picture of a wrapped gift on Christmas morning. That's really resurrected this active discussion in chat rooms as Keith Gill makes his return to social media, what it could mean. What does this mean for GameStop shares, which have been volatile this year? The stock has certainly benefited from what many are calling a meme stock rally following President-elect Trump's win. The stock is up about 84% so far this year. Turning our attention to the shares of Uber, slightly higher as Taiwan's antitrust regulator blocks the rideshare giant's plan to buy Delivery Hero's Foodpanda for $950 million, citing anti-competition concerns. We're looking at shares of Uber trading flat for the year as the ride-sharing giant has really struggled with growth concerns amid increased competition from autonomous vehicle companies like Waymo. And shares of Tesla in focus, up about 1% and 11% since Monday as the EV maker is set to report Q4 deliveries next week. Tesla expecting slight growth for deliveries this year, but investors are looking to see if the automaker can surpass expectations, especially as the stock reaches record highs following Trump's victory in November. And of course, this discussion about what policies Elon Musk could try to fast track. Melissa, stock up about 0.9% right now.
Thank you, Seema.
Yep.
Now the results from CNBC's quarterly Delivering Alpha stock survey. 64% of the market participants surveyed said they would prefer to buy cybersecurity-related stocks over AI, weight loss drugs, or crypto mining stocks. Joining us right now on his expectations for the markets in 25, Kevin Gordon. He's a Charles Schwab Senior Investment Strategist. Good morning to you.
Good morning. Happy holidays.
You like AI? Would you go AI over weight loss drugs, or how would you spin this?
I think from an AI perspective, and actually I think back to an outlook we wrote a year ago, my boss Lizanne and I, for this upcoming year. A lot of the focus actually from an AI standpoint was more so on the adopters versus the creators. Not that at the expense of one another, but one theme that we've been seeing, especially for a lot of industries that have been undergoing a lot of margin compression in particular over the past year, has been ways to alleviate the margin pressure. And a lot of that has been by, adopting some sort of AI to be able to plug into your model, whether it's for airlines that have traditionally struggled with margins, or even grocery retailers, which has been a really big theme, I think, and probably something that continues. Again, not at the expense of the creators. It's not that the tech world and all the chip stocks just take it on the chin because of that, but that's been a really big theme that we've been exploring over multiple years, not just in the near term.
Are you of the view that the Mag 7 continues, maybe the Mag 8 with Broadcom in it, or are you of the view that 2025 is not going to be friendly?
Well, I think from a weighting standpoint, yes, because it's really hard if you just take the size of those companies and to assume that they don't continue, even if they just grow at a modest rate. I mean, they're still going to have an outsized impact on the indexes. But there's often this conflating between performance and weight for the Mag 7, I find it really interesting that even if you just look year to date, and this is just looking at performance, I'm not an individual company analyst, but the second best performing stock in the S&P 500 is NVIDIA. If you look down the spectrum into the 200 ranking, the 207th best performing stock is Microsoft. So there are hundreds of companies that are outperforming one of the biggest tech companies, one of the biggest companies that we have in the S&P. So there's often, I think, this conflating where just because they're the largest, they're the best performers. Clearly that's been the case for the group as a whole over the past month and a half since the election, but it's not always the case that they're going to be the best.
What's Fast Money have to say about this?
Well, I was curious about the AI beneficiaries because that, in theory, should be the next leg of it, but we haven't seen that as an investable thesis yet.
Yeah.
So in 2025, you mentioned grocery store chains. I mean, all these places that could really benefit, their margins could benefit. Will that benefit the stock? Can you say, I'm going to invest in the users of AI?
Yeah. I think if you look at groceries in particular, it's part of the Staples Group, which has been sort of this material underperformer, in the past year and a half. And I think it's interesting because the concept of defense and what's considered defensive in the market has changed a little bit for investors. I think especially in this post-pandemic era, there are these times, especially this year in the first half of the year, where it was sort of the bias to move into the Mag 7 or Mag 7 type parts of the market for defense, not necessarily staples or healthcare or even utilities. Utilities is a little bit of a different story this year because there probably is more of an AI energy play there. But that I think is going to be a really important differentiator moving forward, especially for an area like staples. I don't think it's, don't approach it from an AI perspective from the standpoint of they're going to outperform materially. I think it's just being able to sort of maintain some sort of, mediocre level of performance, especially when you do go through downturns and you want to look at staples or utilities or healthcare as a potential hedge.
That's not a big selling point. You want to look for mediocre returns there.
It's
but
tough,
you think that the defensive nature of a Staples, for instance, that will be maintained? How about healthcare, which has done miserably, and the sentiment around that sector is horrible.
I know,
it's
one of those, you never want to be contrarian just for the sake of being a contrarian, but I mean, you look at some of the charts, especially relative to the S&P, you're looking at levels that are close to 07, 08, in terms of relative performance. I think healthcare is a tough one because it's such a wide range of industries that you've got there. One that I focus on a lot from a volatility perspective is biotech. I mean, you get these massive swings, especially in a higher interest rate environment where those companies tend to suffer more, not just from the level of rates, but just the volatility as well. It's a little bit tough. So I think that if you're looking at healthcare overall, you probably don't get as much meaningful upside because sometimes those names hold you back in times when there are drawdowns. But I do think that if you're looking maybe industry by industry, there are definitely opportunities there, but it's not going to be as beneficial from the sector as a whole.
Kevin, I want to thank you for coming in this morning. Happy holidays.
Thanks for having me.
Coming up, crude prices have been inching higher in the month of December, up about 3.5%. Up next, we'll talk about where oil could be headed next. Then we'll talk about the lackluster debut for Disney's Lion King prequel and whether the company can pick up steam at the box office. Squawk Box will be right back. let's get a look at the state of the energy markets and the outlook for 2025. Let's welcome Don Stroyven, Goldman Sachs co-head of Global Commodities Research. Don, great to have you with us.
Thanks for having me.
Oil is headed for a modest drop for the year, and I'm wondering, in terms of the geopolitical and the economic factors, what is the biggest driver here? Is it China demand not coming back? Because the U.S., obviously, we're sort of keeping up our end of it in terms of a decently, strong economy here.
Yeah, so we were looking for a modest deficit in 2024, and that's basically what we got. I think what has changed is that the risk premium has sort of turned from pretty positive, with markets focused on downside risk to supply in Russia and the Middle East, to a market becoming more focused about a potential oversupply in 2025, and the risk premium actually dropping and turning negative. So in other words, the fundamentals have been broadly in line, with inventories levels edging down slightly, but I think market sentiment has really shifted and turned more pessimistic from a price perspective.
What are you looking for in 2025 in terms of the price of oil, and what sort of the hot spots that the decisive factors will be for the oil picture?
So in our base case, Brent oil prices stay close to current levels in the mid 70s, with sort of OPEC protecting 70 as a floor and high spare capacity limiting the upside. But I do think that the risks of breaking out of this range are growing somewhat, in large part because of potential implications from the new US administration. In the short term, we see the risks as skewed to the upside. If Iran supply were to fall more than our base case, where we look for a modest decline because of tightening sanctions, that could cause a spike to sort of the mid 80s from a Brent perspective. Over the medium term, though, we do see the risks to oil prices as skewed to the downside, both because across the board tariffs, not our base case, could weigh on oil demand, and also because high spare capacity may imply a faster and more significant return of barrels to the market.
So when you talk about the policy implications from a new administration, it's mainly the tariff situation. It's not necessarily the regulatory forces here at home for drilling, because what we've seen is that oil prices actually come down when there's more, right, when you have a looser drilling policy.
So the two areas of US policy that we think are the most significant potentially for oil prices are on the supply side, sanctions and the possibility of significantly lower Iran supply. In 2018, 2019, under the first Trump administration, Iran exports dropped by more than 2 million barrels per day. And on the demand side, we do think that the most significant policies are potential tariffs, which could weigh on global GDP and therefore global oil demand. The impact on US production, we think, is going to be fairly modest, especially in the short term.
In terms of gold, what is your outlook for gold? I know we called you here for oil, but gold is a hot investor topic. People want to buy it at Costco, so obviously there's great demand retailing.
Yeah, gold continues to be our favorite long commodity. We see gold prices rising through $3,000 per troy ounce by the end of next year. That's an additional 14-15% of upside. The main structural driver of this bullish forecast is that central bank purchases have increased by a factor of 5 relative to the pre-2022 average, because central banks basically woke up when Russian central banks' reserves were frozen by wondering, hey, are my assets really safe? Should I diversify into gold? And then on the cyclical side, we also look for some additional price support from the gradual boost to demand for gold from ETF holdings because of lower federal funds rate.
But all of this will offset even the strength in the dollar, which is called for even increasingly in 2025, that, as the central bank differentials continue to increase?
So in our view, a stronger dollar for longer is not going to prevent gold prices to rise to $3,000 per troy ounce by the end of next year in our base case, because we actually find that ETF demand depends on the level of US rates as opposed to the dollar. And second, if you look at central banks, the biggest driver of additional demand, and if you, for instance, look at China, periods of currency depreciation in China, so dollar strength, have actually been associated with stronger gold demand from the central bank, as the central bank tries to provide confidence to the currency markets by supporting the currency with gold purchases.
Interesting. Don, thank you so much for coming by.
Thanks a lot.
Coming up, Disney topping the box office in 24 with some big hits like Deadpool and Wolverine, Inside Out 2 and Moana 2. Question is, does the studio have the magic to bring the movie biz back to pre-pandemic levels? We've got a Hollywood preview next, right here on Squawk. Welcome back to Squawk Box. Disney's Mufasa may have opened last weekend short of expectations on disappointing reviews, but Julia Borsten says Disney won the box office this year and it's facing high stakes to try to keep it up. Good morning to you.
Good morning, Andrew. Well, even with the disappointment of Mufasa's slow opening last weekend, Disney returned to its spot atop the box office market share this year after falling behind Universal last year, setting up a potentially massive 2025 for Disney Studios. Now, Disney Studios have an estimated 25% market share this year, according to ComScore. It was the first studio to cross $2 billion in annual domestic box office, with 3 of the top 5 films of the year: Moana 2, Inside Out 2, and Deadpool and Wolverine. Now, while Mufasa's opening last weekend did fall short of expectations and did raise some concerns about his upcoming Snow White, the studio got a big boost from its Bob Dylan biopic, A Complete Unknown, that opened yesterday to positive reviews and awards buzz. Now, next year will be the ultimate test of CEO Bob Iger's focus on turning around the studios. It expands from the 8 wide releases it had this year to 12 wide releases next year, including sequels to Captain America, Zootopia, and Avatar, what ComScore says is Disney's best slate since before the pandemic, as the studio is under pressure to continue to turn old franchises into new blockbusters, as it did with Moana and Inside Out. Now, Disney shares have lagged the S&P 500 since Iger restructured the companies 2 years ago to prioritize the quality of films, among other things. And the films are key not just for the studio performance, but also to drive content across all of Disney's divisions, including Disney Plus and the parks. Andrew?
What is your take on this Moana situation for real? Is this a problem? Is it a huge problem? It seems to be doing
The Moana situation or Mufasa situation?
Mufasa situation, I'm sorry.
The Mufasa situation. Well,
Yes.
what's interesting is we haven't actually gotten the box office numbers for Christmas Day yet. So they're a little bit delayed because of the holiday. And the international opening of Moana has been quite huge. So atop the box office in the UK and other European territories. So I think Mufasa is going to hold up well over the course of the holiday season. So I think it's not problematic. I mean, I personally saw the film and enjoyed it with my kids. But I think really what we're going to see here is that families are looking for films to see over the holidays. We did see the Sonic sequel top the box office last weekend, but I think that this just shows that it's really hard to nail this digital animation, and some people have a hard time with it. You know, they're either wanting to see something that looks more like traditional animation, and obviously The Lion King was such an iconic film, but I think this is a film that will probably have longer legs because it appeals to that family audience.
I've got a.
I don't like the real animals talking.
You don't?
I want cartoon. I want it to be cute and fuzzy. I can't accept it in my head. I'm old fashioned that way.
I mean, that's the
Right.
question, and I think it'll be interesting because there are also a lot of digitally animated animals in Snow White, right? That's the next comparison coming up. And so the question is whether that realism of those digitally animated creatures is confusing to people. But also whether we see that this is a film that ends up doing fine over the long run because it's such an iconic brand, and also it's such a global brand. I mean, it's not just about the domestic box office for a film like Mufasa.
Hey, Julia, maybe a curveball. We were talking to Tom Rogers earlier about Netflix, but we also were talking about Disney in the context of that letter that the next head of the FCC sent to Bob Iger regarding ABC News and therefore the ABC affiliates. Any kind of scuttlebutt on what the thinking is internally at Disney is after getting a letter like that?
Well, from what I understand, this is a time when everyone is trying to play it safe. I've also heard that because of this extra scrutiny on the media industry, which that FCC letter certainly seems to indicate there will be a lot of extra scrutiny on the media industry, then maybe it's not going to be so easy to do media deals. Maybe this is a sign that actually the media industry is going to have a really hard time doing M&A because they're under this microscope because of these more cultural issues. So the conversations I've been hearing from my sources is that this is more of an indicator of how much these companies are going to be under the microscope and aren't going to be able to get deals done in the next couple of years.
Julia Borsten, happy Hanukkah, Merry Christmas. Thank you. It's nice to see you.
British Airways owner IAG is in talks with Elon Musk's Starlink to outfit its planes with Wi-Fi service. That's according to a Bloomberg report. IAG said it is also considering other providers, including Amazon's Project Kuiper. Kuiper? You know what that is? Kuiper. Thank you.
Kuiper.
Kuiper.
Oh, yes.
Yes, Kuiper.
Kuiper satellites.
Yes, exactly.
Yeah,
For
Amazon
Wi-Fi.
satellites.
Yeah. The airline faces some hurdles for the plan. U.S. airlines can easily switch on satellite internet services from Starlink because it has already been certified by the FAA, but European carriers have to go through a certification process. Back in September, United Airlines announced that it had reached a deal with Starlink for onboard internet.
Okay. Meantime, defense lawyers saying former Abercrombie & Fitch CEO Michael Jeffries might have dementia and may not be able to assist in his own defense. Jeffries, who is now 80 years old, is free on bond. This after pleading not guilty in October to federal sex trafficking and interstate prostitution charges. Prosecutors say that he and his romantic partner and a third man lured men into drug-fueled sex parties in the Hamptons by dangling the promise of modeling for the retailer's ads. Prosecutors and defense lawyers now suggesting a competency hearing in June to determine whether Jeffries can stand trial.
Next, we're back from the Christmas holiday with breaking economic news. We've got weekly jobless claims when Squawk Box returns.
Your name again?
Breaking economic data, initial jobless claims. Steve Leisman's got the numbers. Hey, Steve.
Hey, Melissa, good morning. 219,000. That's against a consensus of 224,000. Looking at last week, it was not revised, so down 1,000 from 220,000 down to 219. The 4-week average, 226,000, up from 225, so not really a big deal. Let's see, continuing claims is the number we're looking for. That was a pretty good jump right there. 1.91 million, back above that 1.9 million mark again. And the consensus was 1.8, and it's up from 1.864. The insured unemployment rate rising a tenth to 1.3%. So again, a little softness in the job market that we've been watching, not at critical levels yet where you might start to get concerned. 250,000 is that range, maybe to 300 is when it would really feel like there's a concerning weakness in the job market. That 1.9 million, which is the one that Rick watches, and correctly so, because we had been below that number for a while. But if you go back before the pandemic, 1.9 was a great number before that. There does seem to be a little bit more trouble, guys, in people who are losing jobs, finding jobs. And you can take a look at that. Here's the unemployment rate versus continuing claims. You can see they're both sort of ticking up, one against the other, as you get a little bit more softness in the job market. Probably what leads Fed Chair Jay Powell to say, you know what, I don't see inflation or the job market as a source of inflation. So you look at those two things rolling together as you get to a little bit 4.2% on the unemployment rate. There's those two kind of ticking up together from those bottoms that you had, say, back a year or so ago. One other thing I want to show you guys, which is the median duration of unemployment. Again, something that's been ticking up, not terribly worrisome, but something worth watching. You're up around, 9.5 or 10 weeks of median duration of unemployment. And Melissa, I think you know this story. What we've seen is that we've seen less hiring, but not a whole lot of firing. And that's the dynamic we want to watch as we figure out how much softness there is in the labor market for 2025. Checking the probabilities, let me just see. We're still, or have been for quite a while, in this zone where the market has priced that first cut in for next year. Those are the first three bars you see there, up above 50%, and you don't get it till May. But the second cut, the market's not on board. Even though the Fed has it penciled in their forecast, they're still not embracing the idea there'll be a second cut next year, Melissa. I'll leave it there.
All right, Steve, thank you. Steve Leisman with Jobless Claims.
Okay. Coming up, the outlook for IPOs in the new year. We're going to get some insight from Fundraise right after the break. Welcome back to Squawk, the debut of the NFL on Netflix, mostly glitch-free, aside from a microphone issue that happened at the beginning of yesterday's game, yesterday's pair of games, I should say, broadcasted on the streaming service without a hitch. So for those of you who saw the fight, and the fight didn't work out exactly the way you wanted, this was different. Both these games, by the way, blowouts. The Chiefs easily defeating the Steelers 29-10. The Ravens beat the Texans 31-2. And then there was Beyonce's halftime show, providing a lot of excitement. Sometimes even maybe more than the games, depending on what you thought. She rode into the field on a white horse, brought out special guest Shabuzi, also Post Malone during her 13-minute performance. And then there was this one. I don't know what you thought of this. Mariah Carey kicking off the show with a taped performance of her hit song, All I Want for Christmas Is You. It generated, I don't want to say some backlash, like a lot of backlash from fans who were hoping for a live performance. It's one of the great songs of Christmas. Sure. I kind of wanted her to be live. Not I kind of.
Maybe she feels she can't deliver that same quality of performance in that sort of.
Well, part of it was the lip syncing situation. That was the other thing that I think frustrated folks.
Oh, it wasn't a good.
Well, and then there's the question, by the way, which we've been discussing all morning. How much did Beyonce get? How much did Post Malone get? Shabuzi?
You're really totally obsessed with that.
Well, I'm only obsessed with it because each game probably costs somewhere between, call it $25 to $40 million. So how much did they charge? Given how much they charge for weddings and bar mitzvahs.
Does this trouble you, or you interested in it because you're trying to figure out how much it's worth to Netflix?
Yes,
how much this whole thing is.
How much this whole thing is worth to Netflix? How much money can they actually make off the advertising itself? How many new subscribers can they bring? How many subscribers can they prevent from churning off?
Right.
Like, what is the actual math of doing this?
We try to get that from Tom Rogers.
And nobody knows.
No one really knows. No one really knows.
They may not know either.
But if the stock keeps going higher and there's not as much churn and people sign up, then
that's the goal. Meantime, software company ServiceTitan going public with a bang earlier this month. They were on our show in the morning. The company popped 42% the first day of trading. Renewed anticipation for other IPOs is now emerging for the first half of 2025. Join us right now with more on what looks like an IPO window. CEO and co-founder of Fundrise, Ben Miller. Fundrise's innovation fund helps retail investors get a piece of companies like ServiceTitan before they go public. What are you expecting, sir?
Yeah, I mean, it finally happened. We've been waiting a couple of years. The Fundrise created the innovation fund to democratize investing into private tech companies with the idea that this suite of private companies were going to go public, and what we're seeing so far totally validates the model. We saw ServiceTitan pop 44% in a single day. I think that's a green light for the entire IPO market.
What I worry about asking you this question is a little bit like asking a barber whether you need a haircut, like whether this is really, because this is your business. There's been a big question about whether these companies would go public, whether there's going to be an exit for a lot of things. The private equity industry, venture capital, they desperately need this to happen. The question is, do you think that the valuations that a lot of these companies have are still too high? Is that what's been preventing this from happening?
The venture market has transformed so much over the last 10, 15 years. I mean, I run a tech company, and being public is no longer something you really look forward to. You can now get as much or more liquidity in the private markets. So there's really no reason to go public anymore. You saw Stripe, you saw Databricks, you've seen OpenAI do these multi-billion-dollar rounds without going public. So the real question is why would anybody want to go public? And it only makes sense if the public market's going to reward you. And we finally saw that the public markets they rewarded ServiceTitan. We invested in ServiceTitan more than a year ago and saw a 50% pop. I think that's the kind of sign that the private companies have been waiting for. Because otherwise, being public is just, there's so many regulatory issues. There's everybody's trading your stock, and it's just there's not that much benefit to it unless you're going to get rewarded.
So I have a question about how Fundrise actually works, Ben, and you offer liquidity, which is one of the key advantages of investing in this way, quarterly liquidity. And I'm wondering how you mark the value of the investments on a quarterly basis when these are private long-term investments.
Yeah, so we created the first venture fund that anyone could invest in. We had to go to the SEC, work with them. It's a new model. The challenge is that private markets previously have been gated. Only institutional investors and high net worth investors could invest in it. The model is a kind of a hybrid of public and private. The fund holds some liquid public stock and also private companies. Typically, we mark the company where their last fundraise has been. So if they raise money at $1 billion valuation, that's where we'd mark it. Otherwise, it's really difficult to actually know how to price something. And so the marks happen more irregularly than the public markets. But the point here is that these companies that are waiting to go public or are mature are so high quality, they're so mature. I think that doesn't make any sense for ordinary individuals not to be able to invest in them. And what we're seeing and what we've done is we've validated the model.
In terms of industries that you think have a great opportunity in this environment, is it just all tech stuff, or do you think it's actually there's other places that are sort of less exciting that will actually come public?
I think that's outside my expertise. I know a decent amount about tech. The AI revolution is transforming every industry. We've invested in AI and sort of the picks and shovels data infrastructure that supports AI. But I'm sure there'll be lots of change, good and bad for the market.
How concerned are you on the AI front, by the way, that some of these companies ultimately get disrupted themselves by AI? We keep talking about sort of the moat around these businesses and whether there is one.
The companies we're invested in are so successful. I think that you've heard Satya from Microsoft say this, that the first 2 or 3 years is a land grab. And once you sort of have that market share, at that point, it's difficult when you're in the middle of a paradigm shift. So we've seen a handful of companies really break out, like OpenAI, Anthropic, Databricks, and I use their technology. We're a customer. We're a technology company that uses their products, so I have a good sense of it. I don't think that's the risk here. I think the risk is more, how does AI affect individuals, their jobs, the country? It's going to have a huge impact, and I really think we're having a hard time imagining it.
Ben, I want to thank you. I want to wish you happy holidays. Appreciate it.
Yeah, thanks for having me.
Apple's market cap is approaching the $4 trillion mark. Let's bring in Steve Kovac with more. It's like a 2.5% increase we're looking for, Steve. It's hardly anything to get to 4.
Yeah, just one good headline might actually do it. 264.63, that is the magic number to look for here. That's what it would need to hit in order to cross that 4 trillion mark. By the way, Apple was the first company to 1 trillion, 2 trillion, 3 trillion, now 4 trillion. And I think, Melissa, you said at the top of the show back in the 6 a.m. hour that was really interesting here. It's this melt up is happening on basically no news. I feel like at least 10 or 11 days this month I've been on air talking about new all-time highs for Apple. But if you look at what's happening with Apple, there's not much different about the company than there was a month or two ago. This is really just a lot of optimism going into 2025. I'll note that a lot of analyst firms have picked it as its top pick or one of their top picks for 2025. And it's also worth looking at how Apple really changed the narrative around itself from where it started the year. It was severely lagging behind its peers that were telling great AI stories. We know NVIDIA, of course, but then you had Microsoft with this Copilot product and strength in Azure powering all this artificial intelligence. You had Amazon, you had Meta with its heavy investments in AI, and Apple really was silent on artificial intelligence until June of this year, and that's when you saw shares really start to take off. And once they had that Apple Intelligence story to tell, then things really started to turn the other way. I will also say, though, that story about Apple Intelligence still hasn't played out yet. Our friend Dan Ives over at Wedbush raised his price target at Apple this morning again on that AI optimism, but we just don't know yet if that's really going to play out. Right now, all the estimates for iPhone sales going into or for the December quarter, which is where they book their most revenue, pretty lackluster, to be honest. Just a couple percentage points growth after some really tough years for the iPhone business. So going into 2025 to really justify that valuation, we're going to have to see that AI story play out, Melissa.
notes recently, Steve, saying, you know, the iPhone 16 doesn't seem to be as great as the iPhone 15 sales, and Apple Intelligence and the lack of sort of a robustness to this offering is behind it. When are we going to start to see more features that will actually be a reason for people to buy the 16?
Yeah, Apple's really holding off on the biggest and best stuff until next year. So we only know what they've announced so far. ChatGPT integration launched a couple weeks ago. Next year, though, early next year, we're expecting the big Siri update. That's the one where Siri can talk more naturally to you. It's the one where it can go into the data already stored on your phone for your calendar and even third-party apps and kind of analyze that and answer questions about that kind of stuff. But then again, developers who are going to be building into this Apple Intelligence system, they don't even have access to it yet to tool their apps in order to work well with Apple Intelligence. That's going to be a longer tail for them to launch. So that is the biggest final update we're waiting for to see if that moves the needle. And then in about, I don't know, 6 or 7 weeks from now, we'll get Apple earnings that will tell us exactly how good or bad this December quarter was for the iPhone. That's what everyone's going to be hanging on. And if it is a good quarter, how much of that can they attribute to AI, or just the fact that we're on this kind of 4 or 5 year cycle of upgrades? The last super cycle for iPhone was back in 2020 with the introduction of 5G.
What is the consensus on Wall Street for the handset sales for that calendar year first quarter that we're going to be getting in a few weeks or so? And is it driven, are those numbers driven by AI, or is it primarily driven by super cycle? Just trying to figure out what is the downside if that AI cycle part of it doesn't play out.
Yeah, it's a little bit of column A and column B that people are talking about, and that's the real question is there really any evidence that any kind of growth in sales that we've seen on the iPhone, that we might see on the iPhone, how much of it can be attributed? It's hard to say. I asked Tim Cook, the CEO of Apple, about that on the last earnings call. Is there any way you can attribute AI as a reason for people to upgrade, or that's causing people to actually upgrade? And basically he told me it's kind of too early to know, but he thinks it is a compelling reason to upgrade. He talks a lot about how he uses it himself and things like that. But again, I was talking to him at a time where these features had barely launched yet. So it's really too soon to tell what kind of demand this is driving.
All right, Steve, thank you. Steve Kovac. Coming up, tapping into AI for investment decisions. We'll talk about some potential areas to target for your portfolio in 2025 from the CEO of Reflexivity. That is next. Squawk Box is coming right back.
squawkbox.com.
Welcome back to Squawk Box. Take a look at the price of Bitcoin a day after Christmas and the first day of Hanukkah. You're looking at Bitcoin $95,000, $95,500, we'll call it. Take a look at other crypto-related stocks as well. I don't know, then you got Coinbase, MicroStrategy, which has been either holding up the fort or not, depending on what you think is going on here. Riot Platforms, Robinhood Markets. I thought maybe we'd show like Solana and some of the other sort of coins. Ether. I don't know where you are on Ripple. How do you feel about Ripple these days?
I'm agnostic.
You're agnostic.
I'm an observer of the markets.
Love that.
Solely. But there you go. Your Hanukkah wish come true.
Thanks. There it is.
You're
down
welcome.
6%, Ripple.
Yeah. All right, AI startup Reflexivity uses AI tools to help make investment decisions for client portfolios. Joining us now, the company's co-founder and CEO, Jan Szilagyi. Good morning, Jan.
Good morning.
Is it Jan or John?
Jan.
Jan. Great to see you. How does this work? And how deep is this model in terms of the data and how far it goes back?
So our goal is to be able to really leverage both the AI technology and cloud compute to give a complete health check to every security every day and kind of give you a sense of, is the market vulnerable to a correction? How is the macro environment relevant for this? We understand that every business obviously depends on its own fundamentals, but also the context in which it operates. So we try to give you a kind of a complete compilation and analysis every morning.
How good is this?
It's very good.
You back tested, I assume.
Yes, but the goal really is to give an analyst or a portfolio manager this kind of superpower, right? I think we always want to go to the data, but it's often tedious to do it, build a spreadsheet every time and so on. And so this makes it a lot easier.
So how much does this replace some of the functions on Wall Street? I mean, if you're talking about building models and spreadsheets, that sounds to me like a lot of the research that is done on Wall Street.
Yes. So the goal for us is to build an autonomous investment analyst. That is the ultimate goal. On the way there, I think that we have created a lot of technology that helps you with things that when you're logging into a Bloomberg terminal feel like they'll take you a long time to do. And so if you can just say, this is the question I'd like to answer, and rely on the engine to go and find the data and then run the analysis, you take something that would have taken 2 hours and do it in 2 minutes.
So can you give us an example?
Yeah, for example, let's say that right now, as you guys were having a discussion around, growth for a specific company and so on, let's say your question is next year, we're going to have an environment of possibly higher inflation, higher interest rates, pro-growth environment. What are the securities that in the past have done well within a certain sector and are not as sensitive or have market beta below 1?
Okay.
In about 30 seconds, the system can come back and say, like, here is, based on 12 or 15 past episodes, the selection of securities that will correspond to what you're looking for.
Okay, so you just outlined some of the parameters. Does it take into consideration the context? We're in a declining interest rate environment or a rising interest rate environment. We are, what the macro is as well.
Yeah, so exactly that is exactly what it does. It tries to find parallels from the past to give you a sense of what the price pattern going forward could look like.
Wow. So how do you envision this? Is this going to be an additional sort of service layered on top of another platform? Is this a standalone? Do you sell subscription? Like, how do you monetize this?
So our clients are primarily top hedge funds who are using this as a kind of an intelligent overlay on top of all of the different data sources they have access to. And so through a platform like ours, they can actually connect them and make sense of the whole as opposed to switching between different platforms all the time.
It's amazing what can be done these days.
And that's the question. The question just is how accurate it's going to be. That's the thing I can't figure out, and we don't really know.
So I think what you are able to see over time is that you can obviously look at how some of the recent predictions have worked out, right? If you look at the market as a whole. Right. So for example, it very correctly called the peak in July. It very correctly called the false rally that we had right after that, but then again correctly called the bottom. So because it creates this completely independent assessment of each security.
Okay, but what does it get wrong? You told us all the stuff it got right.
Yeah, no, of course. So for example, just really recently it turned bullish a little bit too early. We recently had when the Fed came and said, like, look, we're not going to do 4 cuts, we're going to do 2. That was something that was a catalyst that actually saw the market sell off first, probably big sell.
Do you understand why it got it wrong? now that you know how you put it together?
Because I think these are always probabilistic assessments. So it's not even that it's wrong. It's saying like, okay, with 70% confidence, this is what's going to happen. There's still the 30% where it doesn't happen.
How far are we from a day where you attach this to just automated trading? So based on what the model spits out, it executes a trade, and so therefore you've sort of supplanted the whole ecosystem.
Yes. Look, I think that's certainly coming, right? It's hard to say that there's something so special about human intelligence that we should be better at trading.
It's hard to say that there's something so special as human intelligence.
No, what I mean to say is that if you are able to give the system so much compute power,
right,
and the intelligence continues to improve, at some point it's not crazy to think that the systems will be better at trading than humans are.
So entire trading floors.
Just bots.
Gone.
I mean, this is not tomorrow, obviously, right? But I think
but predict out. What are we talking about here?
So everything that we have so far forecast had happened faster than we expected, right?
No,
So
I know, but I'm just saying, if you're a real estate guy in New York City and you own buildings that are
You're a trader in New York City.
So if you're a trader in New York City and you're living on one of these trading floors, watching us right now, how long are you going to do that for?
So I would say that the horizon that you're probably looking at is somewhere between 5 and 10 years, where I think you'll have a meaningful impact from systems like this, right? It doesn't mean that it's going to replace it entirely, but you're going to start to see the impact of this. So it'll be better in certain areas than in other areas, depending on the complexity of the instrument, depending on the amount of data that you have available for some things versus others. Private markets, for example, will be harder because it's just not as easy to get the data as they are for public markets.
Astonishing.
Wow. Well, good to know. Thank you for coming in.
Thank you for having me.
Appreciate it.
Great to have you.
I want to take a final check on the markets right now. Take a look at the futures. Got some red on the screen, unfortunately. Dow off about 226 points. NASDAQ looking to open down about 103 points. We're looking at the S&P 500. Like it will open off, I should say, by about 27 points. Flip it around, maybe show you treasuries and show you Bitcoin as well, because that's been sort of our risk on, risk off situation. I don't know if that's even a good way to think about it anymore. 10-year note at 4.639, the 2-year at 4.3. Let's show you Bitcoin sitting just at about $95,500, $600 now. And that does it for us. Melissa, thanks for hanging out all 3 hours.
So great, I'll be back
see you
tomorrow.
Happy Boxing Day, folks. Make sure you join us tomorrow. Squawk on the Street begins right now.
Morning. Welcome to Squawk on the Street. I'm Sarah Eisen with Brian Sullivan today at Post 9 of the New York Stock Exchange. Carl, Jim, and David have the morning off. Take a look at futures. We got a full day of trading here coming up, and we're headed for a lower start. Dow futures down 231, S&P futures down 28. Santa Claus rally looked so good before the holiday. We'll see if it can continue and things turn around. Remember, we're in the 5 final trading days of the year, plus the first 2 of the new year. That's the Santa Claus rally. NASDAQ futures, which have been a winner, down 108. Stocks are, as I mentioned, poised for a lower open after back-to-back gains for this holiday shortened trading week.
Yeah, we got a crypto watch as well. Bitcoin falling to near $95,000. Even as MicroStrategy, which is a software company, it's really a Bitcoin play, plans to issue more shares. And let's talk about Apple's melt up. Now, Apple is closing in on a $4 trillion market cap valuation. But, Sarah, Apple may do something that it has not done at any time since 2010. So first time in 14 years.
Which is?
Oh, you got to stay tuned to find out.
Oh, okay.
Call that a deep tease.
At first I thought you were going to say 4 trillion, but it's not. It didn't do that in 2010. It's never done that anywhere.
They call that a deep tease.
Before we get to the markets, Brian, we do have some news about you. There was a big announcement. You're joining Kelly Evans as the co-anchor of Power Lunch beginning a week from today. Very exciting.
Yes, it's very exciting for everybody but Kelly. January 2nd.
I don't believe that.
Yes. Kelly's awesome. The show team is great, and look forward to it.
I know there have been different iterations of Power Lunch, but this is a big triumphant return at a time where, look, any show that's on during the market hours these days is an exciting show.
I will both commute in the morning and at night during daylight, which is a win.
And you have a big commute. You live very far away.
I do sometimes live in the city, but so I look forward to it. Tune in. But by the way, we have today.
We have today.
We do, and we have tomorrow.
Brian.
And
So lucky me.
It is lucky.
And it looks like we are starting for a lower open today. It's been, and I mean, look, it's been a good ride overall for the year. I don't think anybody came into the year expecting the S&P 500 to be up 26.5%. And here's the other one stat for you: 57 times the S&P has closed at record highs this year.
50, is that an RBI? That sounds like an RBI, random but interesting. We could use that.
That's a Brian Sullivan trademark
That is, yeah,
segment?
we could use, it may or may not
It's not
show
so
up on
random.
Power Lunch.
It's pretty relevant.
57 times. All right, so we have Tom Lee coming up in a couple of minutes, and here's the question. With last year's gains and this year's gains, what does it mean for next year? What does it mean for 2025? Does it bode well for 2025? Or are the gains that we're taking now and the 57 record highs that Sarah just referenced, are they not stealing, what's the right term? Pulling gains from next year. I think that's, dare I say, the only question that we have to answer today.
Well, I mean, earnings expectations for the coming year have been stable. Growth expectations have also been revised higher or stable. We just got jobless claims. Again, nothing to worry about on the initial jobless claims. They went down to 219. We're still at sort of historically low levels, signaling Americans are keeping their jobs.
Can I channel my inner Sarah Eisen?
Please.
Because I want to talk about currencies.
Oh, okay.
And I want to talk about bond yields.
Yes.
Because the one thing I would say, and the market literally was not even open yet, and I'm already ruining Boxing Day / Hanukkah, is that we look at the 10-year yield. And the 10-year yield, bond market, stock market, they're both open today. The 10-year yield is moving back up. We were below 4% a couple of months ago.
I know.
We're at 4 look at that, 6.4 on the 10-year.
This is year to date.
Year to date, but look at that
this.
pop off the base in early September, and I just wonder.
What happened in September, by the way? Fed started cutting rates.
So the one thing I think you and I agree on greatly.
Yes.
Is that I both think we agree that that half a point cut in September was weird.
It was weird. Not only that, I think the 25 basis point cut that they did last week was weird as well, given all of the direction and the data is pointing to an economy that is resilient and inflation that is a little bit sticky on the path from 3 to 2%.
I'm not sure in the, when I started doing this job, they used to use typewriters, okay? So I'm not sure in that time, I've heard a Fed chair speak up the economy.
Right.
At the same time.
As cutting rates.
If cutting rates by 25, a quarter point, I get it, not the half point bazooka. So
No, that was a
talking
weird
about
one.
the economy
I totally agree
and
with you.
doing the half point cut in September, and the bond market, you know what the bond market has said? We don't necessarily, I think, believe you, Fed and Jay Powell, and we think inflation's gonna remain sticky.
No, market's fighting the Fed, and I think a lot of people are going to find it odd that as the Fed is finally cutting interest rates, their mortgage rates are going up, and their credit card rates are going up, because that's the market rate, and that is the effect of what you just showed, the 10-year yield rising since September. It's now higher on the year.
It's an important point you're making, and I think a lot of people, and I think, of course, everybody should watch CNBC all day long, every day.
Obviously.
But for those who don't, but by the way, I get it, you might be wondering.
I don't.
Why are we paying 9.5% on a used car loan? Why are we paying 26% on a credit card debt? Why is my mortgage still at 6.5% or maybe 7%, depending on my credit rating? And I think it goes to your point, which is that the Federal Reserve can say what it wants, but as the political pundit Bill Carville once said, he wants to come back as the bond market.
Yeah, powerful.
Take revenge, and I think the bond vigilantes are back.
Well, look, we're at the highest level, near the highest level on the 10 years since 2022, which is probably not what the Fed expected or wanted to see as it began lowering interest rates. Now, how would they respond to the move up in yields? Well, a lot of it can be explained by the fact that the economy has done better than expected. That's a continual theme from the entire year, that inflation has remained a little bit sticky, and the outlook for next year on rate cuts has been trimmed by a lot. The Fed itself went from expecting 3 months ago 4 cuts next year to now expecting 2 cuts
Amazing the
next year.
change that they could have in just
The
2
data-
to 3 months.
The data's changed when the facts change.
It's really amazing.
And so the Fed funds
It's like we
futures
had
are now
something that
pricing in
happened
too.
between then.
We had an election.
No, I was talking about Christmas, actually.
That too.
There was
But
that.
There was a lot. There was
Yesterday.
The outlook has improved a lot, and you're right. I mean, the election has been a game changer in terms of outlook for the economy, for deregulation, for lower
Debt
corporate
issuance,
taxes,
potentially.
debt issuance, but also government efficiency and cuts. We'll see if that really results in
Are you
something
talking
the
about
market can hang on
DOGE,
to.
the Department of Government Efficiency, that Musk and Ramaswamy are?
I am.
Well, let's see if they can, because I think Congress might have something to say. I know you're originally from Cincinnati, correct?
I am, yes.
So my parents live outside of Washington, D.C. Now, it used to be way outside of D.C. It used to be in the...
You're from everywhere. Every time I anchor with you, I learn a new place that you're from.
Well, I like to move around. I do like to move around. So I went to high school out west of D.C. Used to be in what they call the Shenandoah Valley, beautiful part of the country. Now, it's a D.C. suburb. D.C. is just grown. 6 of the 10 richest counties in America are all within the D.C. halo.
Interesting, because a lot of people are shorting DC real estate on DOGE and on this new mantra from the Trump administration.
I'd be careful. So what about the U.S. dollar? Interest rates on the move. That's your world. You wrote a book on currencies.
Yes, thank you for saying that.
You're welcome.
It's still on Amazon. The dollar, currencies after the crash, shameless plug. The dollar has been a story.
Sales just spiked.
Because the dollar is strong. Dollar's strong against, look what happened, and that's really an election story because it hadn't been doing much of anything all year and then just started taking off. This is on President-elect Trump's plans. It makes the U.S. the destination of capital. People are excited about the U.S. growth prospects. Tariffs are considered also dollar positive, hurts our trading partners like a Mexico or a Canada if he does go through with it. China's currency has been really weak. Japan's currency has been weak. We're the envy of the world right now in the growth arena. And then also, you know, America First policies tend to benefit the U.S. dollar. That's going to be a headwind, though, for corporate earnings, at least for you big U.S. multinationals that do a lot of business overseas.
So we talked about, let's bring it all back to the stock market.
Yep,
Huge
stocks been
year,
okay with
as
all
you
of
said.
this.
By the way, stocks overall have been good. Certain stocks, to your Palantir, AppLovin, okay, which reminds me of like a movie from the 90s. All these names, Oracle.
It wasn't the 90s. Super bad. It wasn't that long
Was
ago.
it super? What year was that? I'm just getting so old.
2000s.
Was it early 2002? I mean, you know, we're different generations.
It's an ad tech business.
But
you know what they do? I mean, they're.
I don't know, but the stock's up 600%.
It's unbelievable.
This year.
Yes. Well, it's part of the AI theme. They provide app developers with tools to basically host their apps and monetize their apps, and
So
they're
things we didn't
growing
need.
30% a year.
We didn't need it all 5 years ago. Now we can't live with it.
This is a company that just went public back in 2021, AppLovin. But look at some of the other winners. MicroStrategy, we know, the cult of Michael Saylor, who just continues to buy Bitcoin.
Issue debt,
issuing
buy
shares
Bitcoin.
of debt to buy Bitcoin. Palantir, that story has been AI, both enterprise and government. Robinhood, that's been a crypto story, right? Engagement, and NVIDIA. So there's obviously a common theme. It's AI, it's semiconductors, it's crypto.
All these things also that we just showed, throw that back up. We got Tom Lee, I know, and Tom can answer all these questions in just a second. A lot of those names that we just showed all have one thing in common, and it's extensive energy use. MicroStrategy, Bitcoin play. Bitcoin takes massive energy. NVIDIA, massive energy. And Palantir, Robinhood, and AppLovin benefit off the ecosystem that, for the most part, uses massive amounts of energy. It all comes back to gas, boring fossil fuels, I think, fueling the rally, but I am talking
We're going to ask you about energy too. I want a full
welcome.
deep dive on energy in the
can't
new
wait.
year. But let's stick with the broader markets for now. Santa Claus rally kicked off Tuesday, gaining more than 1% on Christmas Eve for the first time since 1974, and erasing December losses. We're actually positive now on the month. Let's see if it can continue. 86% of respondents to CNBC's Delivering Alpha survey forecast more gains ahead for big cap stocks in the new year. Tom Lee, Fundstrat Global Advisors co-founder and managing partner, joins us now to break it all down. So you've been right on the direction of the market for a long time now. Tom, do you think the gains continue?
Yes, I think that there's a lot more tailwinds building for markets in 2025 than have existed in 2024, mainly because, now we're not worrying about the Fed, worrying about inflation and bringing a halt to the economy. We have an election that's behind us, and now we have a lot of cash on the sidelines, and I think companies finally having more courage and what I think we call animal spirits and a willingness to start to do mergers and other things that, like capital markets, that actually help stocks next year.
But, and we were just talking about this, treasury yields at the highs of the year, dollar at the high of the year, those two things have acted as headwinds for stocks in the past.
Yes, I mean, that's been a foil for markets to an extent. To me, I think yields, even at around 5%, still aren't really that damaging to markets because that means you're paying 20 times for a 10-year bond. And in some ways, I think, it's not clear why yields have been rising. It could be inflation. It could be the robust economy. It could be markets concerned about, the incoming administration's policies around tariffs, et cetera. So it is something I'm watching, but I don't think it's a foil even at 5%.
Tom, first off, Happy New Year. Good to have you on. How much is the rest of the world's problems benefiting the United States? Sarah kind of alluded to it at the top, which is this is the place to be. The reality is the United States is the greatest economy in the world. The entire German DAX, their Dow Jones Industrial Average, you add up all the biggest companies in Germany, you total them all together, they are not as big as just Apple or Nvidia by itself. How much has Europe's woes, China's woes, how much has that benefited the U.S. economy, benefited the U.S. stock market, if at all?
It's hard to link causality. For a long time, as you know, outside the U.S., most of the rest of the world is small and mid-cap stocks. I think 95% of all listed stocks outside the U.S. are small and mid-caps. And I think it's the U.S. has really seen companies make the bets in the right places. U.S. dominates technology, healthcare, and financials. Those have really been the strongest industries and the ones that benefit from technology, and the U.S. edge is enormous, right? Outside the U.S., are there thousands or dozens of great technology companies? There really aren't. So I think in 2025, however, if industrials start to do better, then I think Europe and Asia start to outperform. But I think if it's a tech-led market, it's really going to be U.S.
Do you worry? We showed some of these gains, Tom. Listen, you're Tom Lee, you don't worry about a whole lot of things. But I would say when we're looking at stocks that are up 550% and 300%, okay, there are paradigm shifts which will bring in a lot of money to new things. Is there any part of Tom Lee, not the drummer, that does worry that things are a little bit hot at 40 times forward earnings on many of these, like an Oracle, a name that we didn't talk about much for years?
At some point, valuation becomes a liability when the market isn't able to be surprised or the market has overpaid for future growth. But to me, the last couple of years is really a story where investors have been underpaying for technology and the amount of innovation. I think 2025 is a year where we're going to find the AI and a lot of these applications actually do sort of re-architect the way America does business, and it's vastly cheaper, and that's why these companies are doing so well. But you're right, Brian. At some point, it's a bubble. I don't really think that that's the word yet, because I don't find that much ebullience in our clients. I think our clients are still pretty skeptical about valuations, which is why I think valuations aren't really a problem just yet.
One point I'll just raise on the skeptical note, which is on the call for small caps, Tom, which a lot of people were on the small cap bandwagon this year, and there were times where that really worked, but I don't know if December's a preview of what's to come. Small caps are still down 7% in December as the S&P has gone flat. NASDAQ far outperforming on the year of the small caps. Everyone hoped this was the time where the rally would broaden out, but then when the Fed pared back how many rate cuts it was going to get next year, small caps didn't work. So what makes you think that this will be the year?
Well, that's a really fair observation, Sarah. Small caps really are probably the best expression of when they believe the Fed is cutting for the right reasons, and there was a rug pull in December. I do think your viewers have to keep in mind small caps may not have hit escape velocity yet, but their underperformance for the last decade is 91 percentage points versus the S&P. It's the second worst 10-year underperformance since 1998. And then before
that's
that,
not
you have...
necessarily bullish.
Well, actually, it is very bullish,
right?
Sarah. It's super bullish because if you go back to 1900 and use FAMA data, it's the second worst in history. If you take the three worst instances, never have small caps underperform the next 3 years or 5 years. So what we've done is essentially discounted so much bad news. There's so much skepticism. I think almost everybody that talks about small caps says, well, they haven't worked, so they're not going to work. They're trading at a 10 forward PE. They're going to benefit from deregulation. 49% of small caps are cyclical stocks, which are really primed to do well next year. So I think that the probabilities for a very good year are high at a time when skepticism's high. I mean, isn't that what FANG was at the start of 2023? I remembered how many people said, put a fork in FANG at the end of 2022, they're done. And they just put in the 2 best years I think anyone could have ever expected.
Sentiment is key. And by the way, FANG having a great year this year and a great month too. Thank you, Tom Lee. Appreciate it. Happy holidays. Good to see you. Still ahead, how will companies use AI in 2025? Goldman Sachs has some new predictions. We'll bring them to you next. More Squawk on the Street when we come right back.
Welcome back, everybody. 9:21 here on the East Coast on December 26th. Well, after a huge year for artificial intelligence, what is in store for next year? I don't know. Kate Rooney probably knows because she read the Goldman Sachs report. It's great to see you, Kate.
Great to see you. Great to be here in person, guys. So I did speak to the bank's top tech executive. He shared his outlook on AI for next year. I spoke to Goldman's Chief Information Officer, Marco Argenti, exclusively on the topic. He spent the bulk of his career at AWS, Amazon Web Services, and Nokia back in the day, now handles Goldman's AI efforts. We first talked about what happened this year. He said right now in AI, it feels like the emergence of cloud when he was at Amazon. but faster. He says he's never seen anything like this in terms of the pace of development. He said the biggest surprise this year was this tech moving beyond things like chatbots into multimodal, which is pretty much a fancy way of saying AI that generates images and video. Says that next year, Fortune 500 companies are going to start to deploy this in a much more impactful way, and it eventually will evolve into what he calls a new hybrid workforce with AI agents working alongside people.
You might think of a future of a workforce where you're going to have managers that are going to manage both human employees and AI employees. You might have the role of human capital management functions that are going to become human and machine capital functions that are going to be working on both evolving the career of humans and also evolving the career of AIs.
Argenti says there will be an emergence of AI experts that have a very niche, specific type of industry knowledge. So think of banking, for example. In the case of Goldman Sachs, he's expecting major robotics breakthroughs as well. Says AI safety is going to become a bigger priority on company boards, not just for regulators. And then large language model commoditization, he says we're going to see, he described it as many cars, fewer engines. The engines here being the underlying models. As that happens, the data the companies train off, he says, are going to really start to emerge as an edge, guys.
Is it going to change the world now, or because it doesn't seem like it's quite ready for prime time yet?
That's one of the big predictions. I think this is also part of the AI narrative and the valuation story, that it's got to help margins at some point in order for this narrative to continue. So I think there's a lot of pressure for this to actually start to impact normal companies, not just tech companies. If that doesn't happen, I think it takes some of the air out of what's going on here. All right, well, it's going to be a fun year for you on the front lines.
Sure is.
Lovely to have you here. Taking another look at futures here as we count you down into the opening bell. They're lower. Dow futures down 230. More Squawk on the Street when we come right back.
What was that? Happy holiday. We got 3 minutes to go. Oh, how are we feeling today, retail traders? Are we bearish or bullish? Oh boy. Oh mama, I'm excited. I'm almost out of breath. Breaking new U.S. jobless claims, actual 219, forecast 223. That ain't bad. That's about average. So that ain't going to move the markets. That is keep them steady. Oh, I'm had enough of you already. gosh, they're so hard to listen to. CNBC. I mean, they start off with Beyonce, and I'm going, what the And then they got to talking about oil, and they're calling out oil all the wrong ways. I'm going, yeah. All of a sudden, they're saying the pullback is geopolitical reasons, and that's bullcrap. Because it's been like this for what, 3 years solid? These wars. The reason oil's down is because Trump's in office. Drill, baby, drill. That's the only reason. The sediment, I mean, the government is not, and regulations, number 2. But they were talking about all this other stuff. Then at the end of the story, oh, well, could it be regulations? Deregulations? More access to oil means, so yeah. If you're listening to them, you're on the wrong side of the planet. We have Tilray getting pumped. Tesla's at the first linear channel. Spies broke VWAP at open. Here we go. Probably get a little bounce and a pullback. The 27th is what? Oh, this is Thursday. The 601. Not moving much. Just wait. I think we're bullish bearish. Now she finally pops. Damn it. Why is that? Why is it? I mean, the thing didn't move, and then all of a sudden it just jumps up 8 cents. I would have been in and out of that trade. Now, this jobs claims are different than what I'm seeing. Okay, what is this? Continuous job claims. I heard there's a lot of people laid off in the last couple of years. It's a lot different than what they've been telling us. China. AMD looks good today, and so does Apple. They were boasting on Apple, pumping Apple this morning, saying it's better than Android. Damn it, I could have had me a nice trade right there. $170, 190 maybe, 200, 220. That's the 601 strike. So let's see. I think this will be tell us what's going to happen here. Well, that looks pretty good. I got a resistance right around 602.81 with a triple top at 601.88. And support will be back here at the 200. That's on the 5 minute or 1 hour. And on the 1 minute, resistance will be right around 648. they were trying to deny. They weren't. Well, they mentioned we've had such a great run. CNBC, of course. Well, no, we've had such a great run. Okay. Jimmy's going to need some business here. Let's look at the SPX. SPX is at a solid support now. There's 122 to 136 on the SPY. I think we're seeming like we're a little bullish right now. How did that come up? That's interesting. Position trade December 26th. Okay, we're back down at support here. Watch the 200 on the SPX. The 60, I like the 60/40s right now. $60/40s. The SPY's at 115. Let's get these up here so I can trade them both. We're at the VWAP and we're at the 200. SPX 450 to 5. We got a 1, 2, 3 draw. There we go, baby. SPX at 450. I'm going to get out of these real fast. We're at the 9. We break the 9, we'll go up higher to this next resistance level at 60, 28, 75, right there. So I'm going to scale one out. $6.20. The one. Now we're going to find out if we're bullish or not. We're at the 63. We break the 63, the next linear channel, if I think this is linear. Yeah. We had 3 white soldiers off the bottom of that linear channel. $5.70. See if we get a tweezer bottom here. This will tell us if we're going to stay bullish. Tesla's at 459. We had AVGO as a runner Friday, or what? Tuesday. $5.90. Tape still looks good, but it's slowed down a lot. A lot. Tempting to add one here back. Well, I was going to get 530. I got one at 450. AVGO pulled back to that second linear channel. And what was AVGO and SMCI? Mara. Yeah, we're not doing much. But it popped up. Got a double bottom on Tesla. Pre-market low. $455. There's 480. I gotta watch my SPX right here. I'm gonna add one more. If I can get, fuck, I want 480. We got a triple bottom down here, our quad. If I want to count, I'm going to count that one. I got a ready set up on the ready set go. We got divergence. So I'll go ahead and one at 5. There's 5 right there. $480. So I got 2 now, 480 and 450. And I'll stop at 450. Break it. We got 3 white soldiers with a higher low. Now let's run. 450 and 480. No, don't count your chickens before they hatch here. I want everybody to say Merry Christmas to Bobby. If it wasn't for Bobby, we wouldn't have equilibrium in here. Seemed like it didn't lose much right there. We just hit the 200. I didn't like that little drop right there. I'd say he's overweight. I want Sue to ask Bobby out on a date. Okay. Threatening with the 200 right here. I don't like it. I'm gonna get stopped out. Ugh. Fuck, I was up. I was up. This is it right here. If this doesn't hold, I'm going to get out. Three black crows. That's true. We can only handle one liberal in here. I'm still in it. I'd wait for that 200 to break, Randy, before you buy him puts. And that number, I'm going to use it at the bottom of this here tweezer bottom. $6.1983. Oh, God. Don't. Bears. Shit. We could hit the 63, 60-10. Huh. Well, well. Mister's down $15. They were pumping Meta this morning. I gotta try to make my money back now. Well, that worked up a sweat. I hit my first support at 598.34 that I called out in SPY. I just thought I had it right here. Damn it. Probably one of them where I think I should have hold. I'm not down much, but I'm down just a little bit. We break the 9, I'm going to get back in this. Nice spinning top right there, back to the 200. AMD pulled back after a breakout. So did Apple to the 200 on both of them. Tesla's still hovering at 455. Netflix did a hell of a job selling advertisement for its NFL Christmas games. Okay. Should I give it another shot? 380. Oops. Got another 3 white soldiers. I got in at 380. Go make some tea here in a second. 440. God darn it, if I'd have kept them contracts. It's all right. We made it up here. So we got 3 white soldiers, we got a hammer, and it's time to exit the trade. So I got out with $5, one of them. I'm holding one. I'm going to try it again. I got to figure out a way to stay in these trades longer. Scaling out's the only thing I can think of right now. And then buy, if it did like I just did, buy the dip. Sold one at 5. There's 530. Run, dude. We break the 63 or we get out. And it did break a 1, 2, 3 bits. God, you got 255? Break it. Go. We're above the 63. Now, we just hit that resistance that I was talking about. That's the right shoulder, left shoulder, right shoulder. And this is kind of like a little channel between 28.75 and 29.90. Could sell them now and be happy. But if we stay above the 63, we're still bullish. $6.30. Blanket. Oh, there we go. Still bullish. It's 9:07, been open 37 minutes. Damn boss, man. Somebody got in one of my buildings, been cutting it up. There's a couple more we took out right here, tiles. Then I walk into the back room. There's a piece they cut out. Took all these out here. Got a hose sticking up through there. There's a couple more we took out right here, tiles. Then I walk into the back room. There's a piece they cut out. Took all. We're back at the 200. Damn it. Could have pretty chunk right there. Now, he's a funny looking guy. It's kind of reminds how I had that set up there. What are they doing stealing my ship, man? He's got the same thing going on. But that's all cut. You got to cut that off, Anthony. He got it right. I used to look like that. That's funny.
The Fed kind of banging the drum on the hawkish front, and maybe they should have went in July.
Alex is back.
They thought, a week later, maybe we should have went in July, and you really.
I'm still in my trade. We didn't quite hit my support level, so. We got a 1, 2, 3 on Netflix. Break it. They said retail is gambling as unstabilizing the market. Screw them. They don't like it when we chop in on their territory. They should have never started a war with us back in 2020. Actually, it was a little sooner than that, when COVID. Because they'd be shorting the market into Trump. They don't like Trump. And they're just idiots. I would love to get on CNBC one day and just have a conversation with a few of them. I got into a big fight with rest in peace with a guy named Basscat about retail traders. He was right in a way, I mean, but things have changed. And I could see them changing back then. Oh, where's the other key at? Book. Where's the other key? Oh, there it is. Panic button. Panic button. Okay, I'm about ready to stop out here. Or add. I sold one. I could add one. Are we going to hold the shoulder here? Is the question. I think we will. So Jimmy's going to add another one. $3.8. Probably do the same mistake I did before. Man, I went and saw my mom. She's not looking too good. Figured we'd already had a bounce by now. So we've got left shoulder, higher low, higher low. Damn. Oh, my tummy growled. It says, Jimmy, feed me. Remember when I was an athlete, my tummy growled a lot. But come on. Better ready to sell these things. You get me some water. Today's loser is Mr. Coin, Tesla, TSM, Meta, Amazon, all the favorite ones. AVGO's up $1.43. That's on, oh, that ain't right. That's Sizzling Index. NVIDIA down 225. Now, what about Hillary? There's 430. Break it. Randy. $460. There's my $200. 400, 200. Triple top. Break it. See, normally I'd sell right here and take my profit. I'm out at 490. There's 5. Anybody taking their profit? Anybody in the trade? Let me know. Jimmy's gonna get out. I ain't playing games. $480 if I want it. I can get out right now. Come on, break. Make me, oh yeah, 5. Do it. There we go. Got to stay in these trades longer. But I'm telling you, I need to get out of it. The old Jim would be out of it by now. The new Jim wants to double top. I sell it because all I can think about is drink. It's 510. I can get that easy. Or I could have. That's right. I'm out. I'm going to get pissed off here in a second. Oh, mama, oh, you son of a bitch. Leah, Laban's older daughter, who became Jacob's first wife as a result of trickery. Genesis 29:16. So what did he do? Marry his sister? Woo! I have a regret that I sold these now. Fuck. There's 520. So that's, oh no. 530. I was right. I don't have to cry. I thought I was going to, but I don't have to now.
Appreciate that, Mr. Deming. Selling the put in Apple going into February next year. Managing partner KKM Financial coming up. Let's talk some more tech and perhaps the dark side of AI. How much is too much power that we would give to the robots? So far, we're enjoying the stock gains, but will there be blowback in 2020?
I think there's something going on here. CNBC was coming out with the same bull crap. I still think there's just a couple talking heads up there in the back room and said, we're going to pull the market back. So we got to come up with some kind of genre.
Like you with unlimited AT.
And what Randy posted in here today, bad-mouthing retail traders. I think that's what you meant, ain't it? You can't trust a fat cat. So the SPY, I have 648 cents. We hit the 600 level, and that could be a precursor to say we're at a resistance and we need to pull back. Yep, Randy said yes, sir. Oh, God, I love you. I'm not talking about you, Randy. I'm talking about her. Nicole. Sniff, sniff. That's a beautiful chart. fiddling around with resistance. Let me look at AV. I hadn't even looked at AVGO yet. I did this morning. You have a 1, 2, 3 on AVGO. Oh, somebody's got their mic on. Potentially financial. Don't say something you don't want to say. I was trading with Ascend Trading one time, and I got in a trade, and he was speaking, and I said the F word because I got too many contracts. He had like 200 or 300 people trading with him online, listening to him. And I think that's when I called out HAIR, HAIR. I want to see if that's still trading. That's Turtle, HAIR. Or HEAR, HEAR. Yeah, Turtle Beach. That had to have been 7 years ago. And I called it out right here. Right here. No pun intended. It might have been right in here. 2018, yeah. At $9. Dang, it's at 560 now. I'm so pissed off. I left $100 on the table there. Well, I left more than that because I had them other 2 contracts. Well, I left a lot about it. I left 500 or 600 on the table. If I'd have kept them first ones. You still think, did you get out? I thought you got out. Yeah, 560. It says 660. Do we hold the 9? Tesla's back to the 200. Yeah, my mom. I'm going to buy my sister a washer. Her washer went out. I'm going to go in the kitchen here and get my water going and get a burrito started. That's an inverted hammer right there. They call that sometimes a shooting star. That's bearish. I did good. I'm proud of that trade, Randy. Although I left $120 on the table. So I'll be right back. I got to get my morning routine started here. I got my shoes off.
Ironic that in the middle of the large language model revolution that is what's happening with AI and their computing, that suddenly we're going quantum. It's like maybe we do one at a time here. Like let's lock in one. You know.
Yes, I'm the one that said quantum.
That's just the nature of human nature.
Before everybody else.
Especially as a new year rolls around, we all like to have our New Year resolutions, for instance. And I think in investing, we like to think of the next things that are coming. I mean, mark my words, this is what's going to happen in the first quarter of 2025. There's going to be a lot of focus on quantum.
RGTI is my long trade.
Recent, shiny object that we can look at. And while the science, the physics is incredible. We probably will get there at some point, but the way they measure this thing in qubits, for instance, that we have a long way to go before there's practical applications. Google boasted about some complex problem that they solved that would take
I mentioned it to him.
Computers longer than the age of the universe. Things like this.
I'll check
really
see if I know I did.
The general investor. But you really have to understand what's behind it. And that problem that Google solved has really no practical application.
Exactly.
In the real world.
Yeah, that's a good point. Hey, Peter, what about the big crypto boom? Have you bought into the revolution, supposedly, of what's going to happen in the next administration if they clear the regulatory pathway for Bitcoin and cryptos and others?
I hate to sound like a negative Nelly, because so far all we've been talking about are things to avoid, and unfortunately this still falls in that category for me. Believe me, I am optimistic about other sectors. I hope we can talk about that in a moment, but when we talk about quanta, what are we talking about?
I'm setting you up as the contrarian here this time,
Yeah, I have a list of things I'm negative about, but let's just talk about crypto for a moment. I think that it is still, dare I say, a hoax, and there is nothing behind it in terms of some very impressive mathematical operations. And when this ends, nobody really knows, but I have been historically down for saying that I never have invested in crypto. I know that I've lost, on a great rally, but I still have to find the fundamentals of that. And comparing that to quantum computing, where you actually have physics behind it. I think this is totally speculative. And what's fueling it, of course, is the new administration's attention to it in a very non-traditional way. So there has a lot of momentum behind it, but in terms of what's actually there, I don't think there's anything there.
So it sounds like the ranking then of risk and speculation.
Yes, right.
Crypto on the bottom, quantum above it, AI above that, right?
Yeah.
And then your favorite for tech that seems like the most reliable is the cyber, the security side, and the data. So tell me what you do like in the growth tech category. Because I'm not a negative, Nelly. I just
Yeah, right.
But I also like to defend a fellow crypto cynic. So I got your back, Pete.
Okay, thank you, because I need all the defense.
Yeah, I don't know.
You can imagine, there's not a lot of us out there. We should start a secret society, I guess. But in terms of cybersecurity, that is a sector that is just not going to go away for a long time. Again, the science and the physics behind that is very solid. There may be some that will say, well, quantum computing can actually defeat that, but that is a long, long way off. Theoretically, that's true. So if we accept that it's a long way off, it is a technology that is in an arms race. There will never be a shortage of bad actors out there that are trying to hack into many different systems. So those industries, for instance, Palo Alto Networks is a name I've held for a long time. CyberArk is another one, CrowdStrike. So these are very strong companies, and I think regardless of what happens, we haven't even talked about interest rates, but that's another specter that is on the horizon for 2025. And regardless of which way the rates are going to go, I think that that's still a very solid investment thesis.
Understood. Peter, thanks for the conversation, fun one, and thanks for letting us paint you as the contrarian today.
You're welcome.
Appreciate that. Peter Anderson, founder at Anderson Capital Management. And he has been on the right side of a lot of the winning tech trades from earlier this year as we talked about being positive.
I didn't think about
being
Rumble.
positive on the semiconductors. Coming up, let's look at some of those themes on the charts. We'll take a look at software, cyber, and look abroad for the potential of a China comeback. Up next. Welcome to Market Overtime on the Schwab Network.
Quality Focus has worked pretty much across all 11 sectors.
Okay, SPX is pulling back.
We deployed a fantastic array of new technology.
Here we go, off the 200.
Doing well are almost too big to fail.
Have you set yourself up correctly?
It's controversial. The old guard is saying, away, off with their heads.
AI feels controversial and it's going crazy right now.
It is going crazy. So what does all of this mean for the market?
As long as people want to buy it, the price can go up. Oh my goodness, the Fed.
Oh my goodness, the Fed can do everything.
Instead of taking cues, set the cues.
I got him back. Oh my goodness, Fed can't do everything. They screwed the market up, is what they did, sir. Well, I don't know about that. I got 'em at 370 off the 200 SMA. Strike is 640. At 370 off the 200 SMA on the 1 minute. Yes, I do. Oops. Damn, Jim. $6.40. Oh. There's $200. Oh, let me do this. Oh, the 200 SMA with a double bottom, booyah. Okay. There's 470. Oh, 490. Randy. Stop it. There it is. Get out. $5 or we move up higher. God, I can't do nothing right. I'm shook up. Rum. I wish I'd have thought about that. I didn't even think about Rumble. Okay, so I don't know. I should have been on top of that one. That's a Mimi. Well, it made my grand. AVGO double top. AVGO double top. $5.50. Let's go, baby. We don't mess around in Missouri. Especially when I'm making my home brew. Let me see here. Forgot the name of the song. cards.
By Washboardjim. 1, 2, 3.
Floor's 570 now.
Save time and money booking your all-inclusive vacation with a budget beach finder, and you can be a little...
580. Keep going.
Hello. This is Boil Your Wart Right by Washboardjim, which is I.
There's my goatee.
Boil your wart right, boy. Boil your wart right. Can't wait till you taste it.
When the time is right.
Gather some my friends, boy. I'll share it around. The friends came over and we all hopped around.
We are at 590.
Boil that wood right. Can't wait till you taste it when the time is right.
We're at 620.
We're in the malted barley, measured pound by pound. Another friend came over and we all shared around. Boil that wood right, boy. Boil that wood right.
Keep going.
To taste it when the time is right.
Think I might take my profit.
Got every last drop. Turn on the cooker and
Oh my.
little hops. Boil that wood right, boy. Boil that wood right. Can't wait to taste it when the time is right.
Keep going, baby.
Thank you for the homebrew. Really mean a lot. Next time you come over, I'll share some of my crop. Boil that wood right, boy. Boil that wood right. Can't wait to taste it when the time is right. Thank you for the home.
Really mean a lot. Next time you come over, I'll share some of my crop. Break it. Break it. Give me $10. The time is right. When the time is right. It's right now. Couldn't be a better time.
Boil that wort right by Washboardjim. Thank you very much. Have a great day.
That's my hit record. He's going through the, I think I want to sell. My armpits are sweating. They don't do that in the wintertime. Yeah, I should sell. Break it. God, that's loud. Let out. There's George's father.
Be very surprised to see them cut much more than maybe 1 or 2 times in the first half of the year, if at all, because you're going to have a lot of spending, deficits are going to go higher, You're going to have changes in immigration policies. So I think the landscape is going to be much more challenging and not.
I can't stand this. Wall Street supports human trafficking. He supports his illegal immigrants. All of them are talking like that. This market will do just as good without them. This is bullcrap. How can you sit there? I mean, I wish I was up there to debate them. They got children working in factories, human trafficking going on right now as we speak. I don't get it. Am I missing something? It seems like I'm the only one that talks about it. Am I in the wrong? I can't listen to people like this. They're so negative about what they've been given. I mean, we printed $13 trillion for these guys. It's going to stop. I listened to some of the stuff that they've had in the last 4 years, or this last year. $1 trillion that did not need to be spent. A Sesame Street homosexual show in Iraq. Can you imagine that? That's just one. A Sesame Street homosexual in Iraq. They don't get it. We cut the spending out, but I don't know. They run on that spending.
Profit because they're going to be spending at such high levels. So I think they're going to be a little bit more prudent. I think there's going to be more competition that's going to develop. People see the profit margins in AI chips and AI, they're going to be gravitating. But the bottom line is corporate America has got to be able to make money. It's got to be able to monetize. And I don't think they're going to be able to do that as quickly because the adaptation by the individuals is going to be a little bit slower than I think people anticipate.
You're a liar.
Corporations are going to do it, but
they're going to free the range, you dick. Cut regulations. And we're going to chomp on you. He's worried about that spending. There was something in the CHIPS Act that they were talking about that shouldn't have been in there in that bill. I can't remember what they were talking about, but it was a lot of money.
the rest of the market is not expensive. So we're going to be looking for opportunities.
It's very expensive. I can't listen to this guy.
People start getting disenfranchised with these high valuations, and the stories are so well known that they start taking money out of the top 7 and putting it into other parts, the industrials, the energy parts of the market. You look at healthcare, financials. We think the
We also have a new administration. I can't leave that out. Any thoughts there?
I think we are fasten your seatbelts, because what you're going to see is an administration that is very outgoing, talking about changes in policy by the moment. So people are going to try to keep up. What's the difference between smoke screens and what's actual policy? But if you look at the administration, they're telling you that they want to spend some money. They want to change immigration policy, which can have a big effect on taxation and interest rates.
Oh,
You're
God.
seeing a lot of changes in healthcare take place. Consumers.
How much billions have we spent? We're still putting these people up. This guy has no clue what he's talking about. If we didn't have these illegals in here, it wouldn't have mattered. I don't think. Half of them, 3/4 of them can't speak English.
Major policy shifts. I mean, major policy shifts on every front about to take place, and I don't know how you can really measure that until you see what actually gets passed by Congress.
Right, understood. All right,
Yeah,
Max
you don't
Larson,
understand.
Miramar
You're just
Capital,
saying
thank
it
you so
just to
much
make him
for being
happy.
with us, and a good 2025 to you and to all.
Calm down, Jim.
Plenty more to come here on Trading 360. Up next, it's the big three. 3 stocks, 3 charts, 3 trades. Kevin Green will take us through the technicals, and Scott Bauer takes us through the trades.
LAES.
Boeing and Ulta Beauty. That's next on Trading 360 on Schwab Network.
I'm debating on selling these suckers. They ain't moved unless this thing's froze. They didn't move when they bounced up. It's not moving. I don't get it. I'm going to get out of them.
He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Now watch it bounce.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of
Freebird.
traders ready to tackle
I know
your
that
trading
one.
questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm
Oh man, that got me riled up.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl.
Schwab, a modern approach to wealth management.
Welcome back to Trading 360 and our 2024 special year-end coverage. I'm Nicole Petalides. It's time for the big three. 3 stocks, 3 charts, 3 trades. Kevin Green will take us through the charts. Here to take us through the trades, Scott Bauer, CEO, Prosper Trading Academy. Good to see you both. What a great year we have had. Scott, you want to give us a look back thought?
Yeah, the look back is I don't think anybody expected, this big of a gain, even with what's happened over the last several days. And today, markets, I'm looking up here right now, S&P's just rallied a little bit, but overall this has been a spectacular year. Now, is that going to be, a little bit of a question mark going into next year? Maybe, but I think things are still overall pretty decent, Nicole.
Right, understood. And how are you feeling about the year ahead for 2025?
Yeah, a little bit more cautious at this point, I think, just because the narrative has changed so quickly on rates and what the Fed might do. Economically, though, I think we're sitting okay. I don't think we're sitting great. I think we're sitting okay. The consumer is still in a pretty good spot. I mean, we've all been waiting for that part to kind of fall off, and it hasn't yet. So if we look forward there, the consumer is pretty good. And, I think we're going to have a pretty decent year. I'm not saying that the S&Ps are going to be up 20+% again, but I think we're going to have a pretty decent year.
Yeah. All right, let's talk about AMD. We think about AMD, Intel, NVIDIA, all those names. Why is AMD the name that points out to you, which obviously was a loser for 2024 in a big way, really paled in comparison to some of the other names of the group?
Absolutely, and it's been the one that's kind of been tossed aside, and that's part of the reason I like it. And there has been some pretty positive news lately with their relationship with NVIDIA, and it may take NVIDIA to get AMD going again. But just given the fact that it's really fighting to hold those 52-week lows as we're seeing here, and it's putting in a lot of volume down here, I think the upside is way better than the downside is for the entire year. I'm looking at a little bit shorter term trade, so literally just starting off the new year. So what I want to do is I'm going to sell, it's the January 3rd expiration, so literally 2 days into the new year, 2 trading days into the new year. I'm going to sell the 125, 120 put spread. And I can get $3 to do that. I can collect $3. My break even in a couple weeks from now is 122. Now that doesn't, give you the whole story for the year, though I am bullish in AMD for the year. But I think with the option volatility, the premium we're seeing now overall, that makes this a really, really a good trade that I want to look at because I'm able to collect so much premium.
Yeah, exciting, definitely very exciting. Kevin Green, let's take a look at some of the charts and some of your thoughts.
Well, when you're looking at the risk-reward structure from the price action here, you can make a case that Scott, rightfully so, may be bullish on this name. We saw this immediate run up to the upside at the beginning of the year, touching $227.30, and that's when we started to see it fade. But it's been fading in a way that has been, let's say, orderly for the most part. We saw first the 180 level kind of fail. We consolidated in this bear flag pattern, meaning that we have a bearish trend, but we do see maybe some green shoots. And then we came back, retested the 180 level again, and then flushed below the 200-day moving average. And now that has been an area of resistance for the stock. Now, what I do have highlighted here is around that $119, $120 level, or that range, is where we did see buyers actually step in earlier this year, right around August 5th of this year. So if you're kind of looking at the technicals, you wanted to take a shot to the upside here, the risk reward based on the past price action of the stock does kind of point a little bit more to the upside. Now, you do have the RSI that is still in a downtrend, making lower highs as well as lower lows, and it is in the oversold territory. And we do have the MACD, which is still in a bearish formation with the 12 EMA below the 26 EMA. Overall, we're still seeing some bearish signs, but once again, when you're kind of looking at the past price action, the risk reward setup to the upside here probably puts this in Scott's favor for now.
I see. So, hey, that's not a bad summation there, Scott. I think you liked that, right?
Absolutely. Thank you, Kevin. I appreciate that affirmation. And, with any position I'm going to put on, even if it goes against me, I'm always going to have my risk completely limited, which is why I would be trading a spread here. So I can collect 3. All I can lose is 2 on this particular trade.
All right, up next is Boeing. Obviously, the name that was plagued with so many tough, terrible headlines, but really gave it a go towards the end of the year, right? And what was interesting, too, the shares were starting to trade higher. The company reportedly restarted the 767 and the 777 production, 3 sevens. And on the Dow, it was the best performer for December. Some of your thoughts on where Boeing could be headed after being down, 30% in a year or so?
We've all been waiting for the news flow to stop in Boeing, and that news flow has been decidedly negative, and it's not just this year, it's been, for the last several years, and what we've seen, Nicole, over the last, couple of months, and maybe that's why we're seeing that outperformance in December, is that news flow has stopped for now. So if Boeing can kind of get out of its own way, and there's still some concerns about sales, but things are ramping back up again. From a technical perspective here, boy, there's a lot of room to the upside without a lot of resistance. So I really like Boeing for all of 2025. Again, things can change real quickly if, God forbid, something happens there, an exogenous event or something. But I really like Boeing.
Did you like it at 137 when I called it?
With a position for early on in the year. So I'm buying a call spread, pretty aggressive call spread. It's the January expiration 180, 195 call spread, somewhere between $3 and $3.50. And, 190 is probably the next stop on the upside for Boeing. And if it clears through there,
got a new high.
I could see 205, 210 by the end of January.
That would be great. I mean, if they can continue to get orders too, right around the end of December, we saw that Pegasus Airlines ordered up to 200 Boeing 737, 710 planes. If they can continue to get orders like that, that would be good news too. Let's take a look, Kevin, at the charts, please.
Well, yes, we did see a fundamental breakdown for Boeing pretty much all year, and the selling just really did not stop because of the news flow here, Nicole. And this one was, once again, kind of orderly when you're looking at the sell-off. We started off right at around the highs of around $260, and then we faded ever since. And we utilized that 20-period moving average as an area of resistance pretty much throughout the year. We had the initial flush to the downside, and then a consolidation between May and around July of this year until we saw a further breakdown. But now we actually have flipped this channel line here that we've seen on the bearish side that has now turned into support. We also have broken above the 20-period moving average, which was an area of resistance, now turning into an area of support. We broke through the 200-day moving average, a very key technical indicator for a lot of traders out there. Now we're going to flip that from resistance to support. The first level that is going to be a little bit of a headwind, though, is really where it's trading at right now, $180. And Scott's right. After we break through that, if we are able to, 190 is going to be the next area of resistance, and then you actually can see up to potentially 220 on this chart. You have the RSI continuing to move to the upside, making higher highs, higher lows. MACD has also crossed back in late November, 12 EMA above the 26 EMA, above that zero line. But here's actually the nail in the coffin, and I know that Scott's really, really smart. If you actually look at the weekly chart and you zoom out a little bit, there's actually a trend line that has been in place since COVID-19. Those COVID lows are actually going to be very key. And if you kind of look at the stock, it has been bottoming on that trend line. And recently, back once again in November, early in November, we touched that trend line again. And now we are seeing a little bit of a bounce higher. 194 is the 200-week moving average. That also is going to be an area of resistance. But you can make the case that structurally and based on past performance, maybe a near-term bottom has been put in for the stock, and the risk-reward, once again, could be to the upside.
I think you're both really smart. I'm glad you even brought that up, Kevin. So that's good.
God.
Scott, final thought here.
Stop your flirting.
Yeah, you know, like Kevin said, both from a technical and a fundamental standpoint here, there's a lot to like about the stock here. Obviously, that overhang of all that negative news we've received over the last couple of years, that's always a risk. There's no question about it, but there's a lot to like about the potential for an upside move here.
So the next name up is Ulta Beauty, which had a run up, you know, from after November. Then it started to turn and give it a go in December. And positive comments from UBS and Morgan Stanley and Loop Capital, many buy ratings, and even a 490 target.
I don't want to clean this up, but I need to.
A very nice one for Ulta. Scott, where do you think it could be headed in 2025?
There are two retail stocks to me that stand out that are just must-haves. Costco is one of them. Ulta is the other one. I think it is absolutely best in class and is positioned so well to really come out of this holiday season, this Christmas shopping season, as one of the big winners. So we did see that big pop a little while ago on earnings, and it's been pretty sideways since then, which I really like, meaning that, you know what, the market is comfortable where it's at. It's putting in a lot of volume, maybe a new base for that next move higher. So in this one, I think coming out of the holiday season here, it's going to be gangbusters. I'm giving this trade a little bit more time, so I'm going out to February instead of January on this one, and I'm buying the 450, 470 call spreads, $20 wide, trying to get that for about $5 or so, and I really think that again, this is a standout in the retail space, and I always like to be long or hold, you know, best in class in a particular sector. I really believe Ulta is one of those stocks.
Right, understood. You know, Kevin, I'll give you a word here.
SPX.
Are good than bad on this chart here, Nicole, but I would actually watch out here a little bit. We started off the year very strong when it came to Ulta. They were opening up really new stores, and there was a lot of enthusiasm for this name, but we did see a very quick and swift breakdown in the stock,
63.
so much so that we saw this gap between $500 all the way down to $468, and we never came back and tried to retest it over that week or 2 week period. We continue to flush to the downside, utilizing that 200 or the 20-day moving average in blue as an area of resistance. Then basically between July and around December, we actually had this wedge type of pattern. We made higher lows, but we were making lower highs, and then we saw this breakout to the upside. Now here's the bullish case. We broke above the 200 period moving average. That's obviously bullish. We could come back, retest it, find some buyers, and break out higher. We're also going to see a 20 period moving average crossing above the 200 period moving average. Once again, another bullish signal. But the RSI is making lower lows as well as lower highs for right now, since the highs that we have just recently seen. And the MACD does appear that it wants to cross. And on this chart, if you look at all of the bear crosses for that MACD, the 12 EMA below the 26 EMA, it has coincided with pullbacks in the stock. That's the bearish take when you're looking at those oscillators. The bullish take is those simple moving averages.
3 black holes.
Above the 200-day. Cautiously optimistic. Maybe we fill that gap, but this one still has some work to do to look a little bit more constructive to the buy side.
All right. Thank you, Kevin, for all those charts and thoughts. Scott will give you the last word today on the big three.
Well, I'm glad Kevin kind of agreed with me on all three of them, at least maybe 2.5 out of the three. But again, I think, what we've seen over the last couple of days or so, maybe more severe than we thought. That does not derail what has happened in 2024. In my opinion, 2025 is still very optimistic. And listen, Nicole, since we hit the air just a few minutes ago, the S&Ps are up 30 points since we started this discussion. So maybe Kevin and I should stay on a little longer for the viewers here.
Yeah, look, I mean, they say volatility could really be the early part of 2025, and that shows you the swings and a trader loves swings. That's how they make their money, right? Scott Bauer, Prosper Trading Academy, Kevin Green, thank you both for the big three. Appreciate it. Coming up next, we're going to spotlight NVIDIA and the big rally of 2024. Thank you to the AI revolution. Does it continue in 25? We'll break it all down. Trading 360. We'll be right back.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds.
Sorry, but I've got a tight stop on this baby. I'll add if we hit the 200. As long as we're under the 63, we're still bearish, but Jimmy bought it on the third crow. A little top heavy, so I figured that was bullish. Do you understand? Woo, baby. 550. I'm up $100. $550. Welcome to the room, potential. Swanson. Anybody else that's fairly new in here? We are retail traders. Zippity-doo-dah, zippity-day. I love to make money my way. We got 640, booyah. We got 640, booyah. We got 640, booyah. 3 black holes. Jimmy's out at 640. Jimmy is out at 640, yeah. Jimmy is out at 640. Time to go have another burrito. Yee yang yippity doo dah. Way hey hey. Jimmy's got out of another scalp on 3 black whores. Jim, that's racist. That one girl that was probably listening to Jim's a misogynist and a racist. I'm not a racist. I might be a misogynist. I love to massage. That nobody can deny. I should be getting some real good grades today. So I'll be going into the kitchen and whipping up another burrito. Nancy's in there waiting for me. We're going to have a shot of vodka and a smoochy smooch. Nancy, make sure you put a mint in your mouth. We'll see about that. Why, in case it breaks out, I got you. To me, that was a very professional trade. Now, you YouTubers, this is the second one I've done. And I held on to this one, and I got all out of this one because we're kind of, we've had a little breakout. 3 black hoes, 3 white soldiers, scale out. 3 black hoes, 3 white soldiers, scale out. Because it consolidate, just like it did here. It consolidate after that 3rd soldier. So this is the neckline. This is the shoulder line. neckline, shoulder line. Am I wrong? I want someone in the room and on YouTube. Am I wrong for thinking that these people support this illegal migration? As you can tell, that's been over and over. Well, it's going to hurt the workforce. Are we that naive on Wall Street? If we reformed welfare like Bill Clinton did, this market would fly. But somehow it got out of hand. That's why I'm saying these bills, like the Obamacare, when they passed it, I was against that. Now you got somebody dead because of it. And they were the idiots that wrote it up. Same as Wall Street reform. They got in there and they changed it because of retail traders. They changed the, what was that rule? You could only trade so many times a week if you didn't have 20 grand in your account. They found ways to get around that. But that put a lot of us in, we were just starting to trade back in 2008. And then they put that P&T rule on us, and it hurt a lot of us. We couldn't keep scalping like we were doing. We could only limit it to 3 times a week, every 5 days. So they've tried to already beat us under the bush, and they tried that back during 2007 when they passed, or 8 when they passed Wall Street reform. And same thing with Obamacare. You can keep your physician if you want, and if you got on Obamacare, it changes. I mean, there's one year where my insurance went up 300%. I had to switch it because I couldn't afford it. And I was fine with my insurance. I had Red Cross Blue Shield, and I mean, I was really happy with that, and I wasn't paying very much for it. But now, you go get it, it's going to cost you $1,500. Or at least that's what it says on Obamacare Marketplace. So do I believe these fat cats when they say that illegal immigrants is going to cause a problem in the market? I find it very hard to believe. To me, it would cause cleaning up the streets and stopping some crime where businesses won't close down. Like that all-in-one burger place. But I don't know. I'm not a professional at that. I can't see the correlation between illegal immigrants and a great economy. There's 720 on the SPX. Boom. But I could be prejudiced and wrong. I don't know. It seems like they just keep repeating it and repeating it. It's mostly A's. Gosh. You just go, hello, Go Trends Explorer. I'm glad you found me. Let's get a like on that one. I've been around for a long time, 20 years. So I'm going to go in there and make me another burrito, and I'll be right back. There's George.
Sector revenues in the artificial intelligence space, alongside its more stable revenues from the Department of Defense and the government. And if you look at the trends, obviously, even going into 2025, there's a trend on efficiency, and Palantir fits
770.
especially when it comes to efficiencies and producing higher yield to investment on investments in Department of Defense or defense in general. And so, as of course the next year rolls out or rolls along, there's going to be efficiencies that are going to be utilizing Palantir's technologies, both in the private sector as well as in the public sector. And the company's been growing its sales by over 20%. It's been growing its earnings. If you look at earnings last year, it was consecutively positive. Its profit growth has increased. Its margins have increased. And its price really reflects the growing demands for artificial intelligence, as well as the diversification.
Randy says we're going to fill the gap. Well, there it is. We filled it.
Yeah, you know, you mentioned the U.S. Army, these partnerships that they have, the Army partnership, they've strengthened that. Counterterrorism.
Randy, you can't trade better than me.
Had a blip and pulled back. People were.
Everybody give Randy an a D minus. Magnificent. He cannot trade better than me. 910. I'm gonna get my $1,000, and I sold them. What was resistance now becomes support. So we got two of them. Double top. And the 9. Wherever the 9 ends up at on here will be your first support. Then your second to stay bullish will be the double top. One top, two top. Rob's calling out Tesla. There's 1,000. That's going to go to 1,000. Watch. Don't look now. 640. I just left $300 on the table. I mean, I left 6. I'll be right back. I'm gonna go make my coffee.
The other thing is, in the next year, there also may be more of a favorable environment from a regulatory standpoint attributed to AI deployments across the economy.
Yeah, you know, I think about Palantir artificial intelligence platform that they have and how unique it is in the processes and the tools that humans can use. And that's what has really just made it so incredible, like you've pointed out. Thank you, George, for an incredible 2024 disruptor. Guess what, George? You have to come back in 2025 for more disruptors. George Sillis always does an incredible job breaking down our disruptor each day here on Schwab Network. Coming up next, our 360 round, and we're going to close out our year-end coverage with some crypto talk, right? The introduction of those Bitcoin ETFs really kicked things off in January. Now what? Because what a year it has been for 1 year. What is it? Over 130% or so. It's been an incredible year for Bitcoin. What's ahead? Trading 360. We'll be right back.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
It's time to look forward
Find the next trend.
from every click to every tick.
There's no fear of missing out on next-gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Welcome back to Trading 360, our special 2024 year-end coverage. So glad you're with us. It's our 360 round, and it's time to talk Bitcoin. We can't leave that out, and the new highs that we saw throughout 2024. What an exciting year it was. Much of the strength that came on the heels of those ETFs, the approvals for the Bitcoin ETFs in January, and then the Ethereum ETFs following that. Matt Kaufman, head of ETFs at Calamos Investments, Ryan Rasmussen, head of research at Bitwise, both with us now. So, Matt, some of your thoughts on Bitcoin, the ETF in January, that approval, and we got a slew of them, really made access more easier for folks and such. Tell me your thoughts on Bitcoin in 2024, Matt.
Thanks, Nicole. Appreciate you having me on. What a year for Bitcoin and for Bitcoin ETFs. 2024 is, shaping up to be a very remarkable year. We saw the launch of the spot Bitcoin ETPs in January, the fastest and largest growth in an ETF asset that we've ever seen before. We've seen these spot Bitcoin ETPs actually now holding more Bitcoin than the creator of Bitcoin itself. We crossed 100 million or 100 billion rather.
AVGO.
Assets, recently surpassed gold into $130 billion in assets into spot Bitcoin ETPs. So we've seen remarkable growth. I think that growth is going to continue. And if January brought in the spot Bitcoin products, the launch of options on spot Bitcoin ETPs and indexes that track spot Bitcoin ETPs.
Nailed that this morning.
That's going to be, in my mind, the future access points for Bitcoin, giving folks ways to access the price appreciation of Bitcoin, but maybe with less risk. You can take speculative positions without.
Man, look at Broadcom, AVGO, Santa. If you'd listened to CNBC this morning, you'd been bearish.
Monumental year for crypto, mainly because of the spot Bitcoin ETFs, spot Ethereum ETFs that Matt spoke about and the wild success that they had. But we expect that momentum from 2024 to carry right into 2025. We're really excited about the outlook for crypto. I've never actually been more excited about the outlook for crypto, and there's a number of reasons why. First and foremost being the pro-crypto reversal in Washington, D.C. and around the policy that crypto's been fighting for the past 4 to 8 years. There's this continued institutional adoption of ETFs through Bitcoin and Ethereum and potentially other ETFs that we expect to launch next year.
SPY just hit my resistance.
This, potential tailwind of governments purchasing Bitcoin, more corporations purchasing Bitcoin, And all of these things lead us to believe that we're just getting started in this rally.
Just getting started.
Right, understood. I want to talk more about that. I'm glad you're excited for 2025. And we talked about, Matt, recently new products from Calamos, even to hedge on Bitcoin. A quick thought that, because there's so many ways to do this, and I have a lot to cover. But a quick thought on what Calamos is bringing. I know you have a hedging product that you're putting out.
Yeah, that's right. So again, the launch of those options on spot Bitcoin ETPs, and then again on indexes that track spot Bitcoin ETPs, that market is going to continue to grow. So when you think about the options space, you can take one of two sides. You can be speculative in nature and get enhanced upside. Calamos is one of the largest risk managers in the world, and so we have filed for some risk managed Bitcoin products that we expect to be in the market sometime early next year. They're on file. We can't say a whole lot about those, but the story of Bitcoin is in fact a story of innovation. It's a tremendous breakthrough in how we think about money, a store of value. But a lot of investors have watched from the sidelines. They've seen these digital assets evolve from essentially an experiment to what's now an institutional reality. They've seen the potential, but they've questioned the risk. They've appreciated the innovation, but now they're demanding exposure to that, but with protection. And so we're giving folks an opportunity to be able to participate in the future of Bitcoin, to be able to preserve wealth along the way, really stay in that zone of participation and protection. So a pretty remarkable, adoption and involvement, innovation from Calamos coming to the market. But now you'll be able to access Bitcoin in a way that you can actually choose your risk level going forward. So Bitcoin historically a pretty volatile asset. 70-80% volatility at times in the assets, and so now you can access that in a way that may fit your portfolio a little better.
Right, understood. Ryan, your thoughts, because we don't have much time. I mean, how are people going to get into crypto and make it exciting for 2025? What should they be buying and doing?
There's so much to do in crypto. It's such an expansive space, super innovative, as Matt mentioned. But I do think that this new trend of more evolved products entering the market will usher in new capital. At Bitwise, we recently launched Trendwise strategies, which are momentum-based funds that buy and sell Bitcoin and Ethereum futures based on where the trends in the market are heading. And then when trends turn bearish, they buy treasuries. And so I think those kind of more mature products are coming to market and have been brought to market recently. And I think that's going to bring a lot of new investors in. This is the type of maturation that happens in other asset classes as they grow. And we're just seeing that same thing play out with Bitcoin, with crypto, which is a growing asset class that we're super excited for. So excited for new product launches, really excited for Coinbase, which is the largest crypto exchange in the US. We expect Coinbase's stock to double next year and for it to overtake Schwab as the largest brokerage in the world, with its price trading above $700, and that's a really exciting one. We're really excited about Coinbase as a company. For as far as price predictions go from Bitwise, we really expect the price of Bitcoin to double next year to 100K.
We're at the 21 now.
We expect eventually, it says here on the screen, in 2029 that Bitcoin will overtake the.
So, Go Trends Explorer, you still out there? I trade off moving averages, chart patterns, and being in the now. So this pulled back to the 21 right here, and I jumped in at 820, and it's already jumped up to a double top. Now you got a triple top coming up here, so I'm going to get out of this trade right now because I know we're hitting a triple top on an engulfing candle. But this is the 21 EMA, 9 EMA, and then we had a double top right here, or it could be a triple top. This is one I traded earlier, 3 black crows and 3 white soldiers. And I went ahead and sold them, and I regretted doing that. But that's the 21 EMA on the 1 minute, the 9, the 63, the 200 SMA, and the 200 EMA. I'm going to get me some water. In the videos, short videos I do, I talk about trades and it says 820 to 960 in a matter of less than a minute. Ascending triangle, stair stepping, how to trade snake, knife, snake breakout, pullback, boom. This is a megaphone expansion, broadening formation. I talk about how to trade that. Standard deviation. And each one of these is a lesson. So if you're new to trading, you can what?
And it means so much to me and to Governor Walz that you knocked on doors, you called. And it means so much to me and to Governor Walz that you knocked on doors, you called friends, you called in favors. You said, hey, you know, I showed up at your softball game, now I need you to show up at the campaign office. You put in the time, it was personal for you. Because of your efforts, get this, we raised an historic $1.4 billion, almost $1.5 billion. The work must continue of reminding ourselves that we have an ability to stay engaged in a way that will make a difference. The work that you all did, it's going to have lasting effect. You know, the election didn't turn out like we wanted it to. Certainly not as we planned for it to. And I know this is an uncertain time. I'm clear-eyed about that. I know you're clear-eyed about it.
I'm not clear-eyed.
And I just have to remind you, don't you ever let anybody take your power from you. You have the same power that you did before November 1st. And on this practical eve of Thanksgiving, I wish everyone a happy Thanksgiving with the ability and find the ability at this moment to take a moment and just reflect on all the good you have done.
Oh, here's the guy. Well, the Fed can't do everything.
I'm on the Schwab Network. Thanks for tuning in.
I think we're due for a little correction, don't you, Randy? Or are we going to break out? We're going to know here in 2 minutes. Breakout. I got drunk with Kamala. Oh, that's a good, I just come up with a song idea. I got drunk with Kamala. Rob has really turned out to be a great trader. There she goes, new high. I didn't jump in it. I sold it there.
Going forward and 4 versus 2, and here's what I can tell you. I'm going to tell our viewers the number one thing they should think about going into next year. The only thing I'm sure of, if there's a general consensus for what the market's going to do, I'm relatively sure that's not what the market's going to do. Right? Whenever there's a consensus, like last year, 6 or 7 cuts.
Right.
Remember that one?
Right.
Whatever is the consensus, something will happen to change that consensus.
Yeah, throw it out the window.
Be prepared for more than just, 2 cuts versus 4, and the market was disappointed. That's not what you should be focused on right now.
Yeah.
It should be focused on the health of these companies, the overall macro indicators, and what this economy looks like going forward. And that's the most important, because whatever is the prognosticators picked, that is what will not happen, Tom.
Most likely, and I think and that's not to say that the market's going to sell off,
no,
or anything that bad's going to happen out there. It's just kind of reflective that you've got to be nimble in these markets, especially with equity markets at really elevated valuations.
Firm.
He sounds like me.
High valuations, right? Some people are making the case we should change them.
He sounds exactly like I do. And they keep saying, sell your high-tech stocks. And look, every time they do it, they bounce up. So don't listen to that gibberish. Now, NVIDIA, they are definitely, I think Apple has a $4 trillion market cap now. Apple does. And NVIDIA will have a 3. This is one they just seem like they don't want to hold on to for some reason. I don't quite understand it. Had a 1, 2, 3 dip, boom. Oh, I get tired. AVGO. Why is it not on here? So here on AVGO, we got a left shoulder, a head, and a right shoulder. So we'll draw it straight across. If it doesn't break out, 250-50.
Let's look at the job market. Let's look at some of the other macro indicators to really give us a sense as to how we actually are performing. And then look at maybe some of these underloved sectors that could actually be seeing some tailwinds here with the new regime hitting the office. So that could be utilities. That could also be the energy market in some respects, depending on how you play that. Big tech is probably still going to get some positive flows. That could also still be a defensive trade out there. But I think there's still a lot of opportunity for some underloved sectors. And as Kevin was kind of talking about, the multiples are very expensive. But we can stay irrationally elevated for a very long time. I mean, if you go back to the 2000 era, we were at high valuations for about 2.5 years until something actually broke. We might only be in the third inning, fourth inning, or fifth inning of this whole thing as far as multiples continuing to expand. So you gotta ride that trend until the trend shifts. And that's going to really be reflected or probably show itself in credit spreads widening out, labor market deteriorating, or any type of credit event that's out there. I think those
I'm going to do a video.
Catalysts or things to watch for next year.
Yep, and we did see a pullback in some of those other areas of the market. The Eagle.
I think we want to break out again. We've got a kind of like a rising wedge. It's going to tell us something soon. Let me see here. Damn, 990. So we're getting ready to break out. Boom. So I'm going to get ready to do a video, YouTubers. Be a short one. Go pee real fast. Where's the TV at? I'll be right back.
They will be the biggest beneficiaries. And remember, TikTok just lost in the appeals court at the end of last week. So it's getting pretty close. I think it's January 19th.
19th.
Is that the day?
They might push that off, they said.
Right,
yeah.
but remember, TikTok or Meta will be the big beneficiary if that goes through.
Yep, Snapchat's always in that discussion,
Yeah.
Google off it. But KG, looking at this one going into next year, you got an example trade for us here in Meta Platforms. Or no, Kevin does.
Yeah, I do.
Kevin does,
I'm
not
trading
KG.
Meta. You back off there, KG.
Kevin, go ahead and give us your trade here in Meta Platforms with expectations going into next year.
So with all the news, with all that's going on, this stock has sold off pretty significantly, about $40 off its highs, and it was more. It's just rallied a bit. It's up $12 today. It's up 2%. So, about an hour or so ago, I looked at something. Remember, if you look at that 50-day moving average, right around 586. So you were right in that range, Tom. So I looked at it just a good, strong diagonal, a paper money trade going out to January 17th. Give yourself 25 days, buying the 590 call just above that 50-day moving average, and then selling this week's December 27th, only 4 days, 610 call. Now I put that in about $21. Tom, it's a dollar higher than that now. It's $22.40, so it's a little higher than that. But the key thing is the strategy. Look at. Could you change it now to a 595? Of course.
Well, hello retail traders. This is Washboardjim with a sneaky snake trading strategy, and I'm going to talk about a strategy today that you could have traded 3 times on the SPX. It's a fast scalp, in and out, in and out, and we're going to get right to it. So this is called the 3 black crows and the 3 white soldiers. I'm going to be talking about my moving averages, chart patterns, and being in the now. So being in the now, that's the most important part of the strategy. We're definitely going into what you call a Santa rally. We had a nice breakout on Tuesday, and then continuation today. And tomorrow we'll probably consolidate. But the strategy I'm going to talk about now is how to play the 3 black crows off the 200 SMA. So I've got the 200 SMA, I've got the 63, and I've got the 21, along with the 9 EMA. So that's the SMA, EMA, EMA, and then the 9's that blue one. So if you recognize 3 black crows right out of the bottom here, and we had a tweezer bottom off the 200 SMA on the 1 minute time frame. You got to look for that candles that are coming after those crows to see if it's going to consolidate or if it's going to break out or if it's going to pull back. That 4th candle is always the candle you got to learn to watch to make sure. That's a spinning top. Here we had a hammer, a tweezer bottom with a hammer, which is bullish, and it broke out a little bit, and then it pulled back again to the 200 and ended up with 3 white soldiers. That's what you see right here. 3 black crows with a double bottom, tweezer bottoms on both double bottoms with 3 white soldiers, and that was my exit idea to get out of the trade for a scalp. And I was able to make $150 on that there call right there on the SPX. So we had a continuation on up. We had 3 more soldiers. A soldiers is a bullish pattern. 3 white soldiers, usually you get a continuation to the upside. You consolidate, and then you have the breakout. You consolidate, you have the 3 white soldiers, you consolidate, bounce off the 9, boom, you have the breakout. So this happened a couple of times. You have one right here and one right here. So you got the 3 white soldiers with an inverted hammer. That's a bullish, with a tweezer bottom. That's a bullish call. And it did have a little red candle with another tweezer bottom right down there on the bottom of that. So you got your 3 black crows and then your 3 white soldiers for an exit idea for a fast scalp. Get in and out of the trade if you're new. If you're new to trading. Then she pulled back and ran up off the 9. As long as it respects the 9 EMA, you're still bullish in the trade. You can stay in the trade as long as you want. Then again, we had 3 black crows with an engulfing candle. Got out of that trade on that engulfing candle, was out within a minute and made $200. Had 2 contracts, boom, I got out of the trade. Then we consolidated, so 3 black crows. Then she just decided to go ahead and break out right now. These things are at 1280. Damn, I'm gonna sell these suckers. I'm in them at 9. $11.90. Boom. That's an inverted hammer. So Santa Rally, what is a Santa Rally? It's the last week before the new year. And to me, we've already had a great Santa Rally ever since Trump got elected. So hoorah for Trump. Hoorah, hoorah. I believe 2025 is going to be an outstanding year. You're going to hear a lot of fat cats talk a lot of gibberish and garbage because they don't get along with Trump very well, but I do. And they're already picking on the retail traders because they're wanting to pull this market back, but it ain't going to happen unless we make it happen. So I want to wish all you retail traders a happy trading season. This is the 3 black crows into the 3 white soldiers, and there we go at 1240. Called these out at 380 this morning. I'm going to show you how I called them out. Randy in the room said we might fill the gap. So the gap's right here. There's a huge gap right there. Jimmy called these crows, and we dipped on down, and we had the 3 white soldiers run up, hit 63, and we kept bouncing off that 200 EMA, and that created what you call an inverse head. That's an inverse head and shoulders right there, and there's your neckline. So once we broke that neckline, it kept respecting each moving average as it went up. But that's how we called it this morning, that big engulfing, and I was bullish this morning. So look at this spinning top right here. That's called a spinning top, almost like a doji, and that's bullish. You have these engulfing candles right at open, and then boom, you let out with 3 soldiers. Again, as I was saying, that's a continuation pattern in most cases that the market can be very strong. We still yet pulled back and bounced off that 200 with a double bottom. 1 bottom there, 2 bottoms there, boom. So each one of these patterns I'm calling out are calls. They're ideas because they're bouncing, they're a pattern. So I want you to type in bullish and bearish chart patterns, bullish, bearish reversal chart patterns, and then type in bullish, bearish candlestick pattern. And start learning and memorizing them candlesticks that come after them crows. And you'll start to learn how to scalp or how to trade, how to find a good entry by looking at that second candle that comes off that big engulfing red candle. That's a spinning. That's an idea to jump in the trade automatically. So that's it. Snake trading strategy, where I talk about chart patterns, moving averages, and being in the now. Have a great day. So the next resistance, we're going to go to the 5-day, 5-minute. Next resistance is right there at 60, 55. You take the bottom of that candle right there. Go to the bottom of the body of those two candles and run that straight across. And that'll be your next resistance to hit. Now remember, you got to use the moving averages. $60, $54, $39. And if it gives up on the 200 would be a great entry, especially if that 200 EMA crosses the 200 SMA. Oh, Caroline. Damn, what am I missing here?
To meet expectations, so haven't seen all that impressive.
I love you,
as of late. I know
Caroline.
we won't get Q4 deliveries until in early January. We need something.
I want to sing a song to you, Caroline.
Tesla needs to deliver something like 515,000 to actually be positive.
Merry Christmas to you. Merry Christmas to you. Are you listening? Caroline. According to me, according to them. You doubted. How dare you? She says, according to them. It is more than a car company. It's a tech company. Don't forget it.
It will be a regulatory-friendly White House after all. And if this BFF relationship between President-elect Trump and Elon Musk can continue.
God, you're so damn negative.
When I look at this,
you act like a liberal.
We're trying to figure out what kind of a company it really is. I think that's the key to trading this stock. If it's an
These people, I've been calling Tesla a tech company from day one. And I'm not kidding. And they still aren't convinced. They can shoot a rocket to the moon, to Mars. They got solar panels. The cars that they build are run off technology. You can get a recall and fix it with just a push of a button. They've got robots. They're involved in AI. Tell me it's not a fucking tech company. They store batteries for energy power. That ain't an auto company. That's a tech company.
City neighborhood as well, and constantly getting notices from my building to move your illegally parked Cybertruck because it's parked illegally because there aren't spots big enough to hold them. So I think it's going to have to be a culmination of all factors for Tesla to keep this stock running and to justify valuation. But I think the valuation is based much more on a tech company than it is.
They were talking, Tesla was at 185. It had a pullback from 500 or something, 300, and it ran back down to 185. And they said, oh, this company's doomed. And then 3-4 months later, you're at 1,000. You're at 2,200. The same stock. And they were bad-mouthing it back then, and they're still kind of doing it. I got a 510 target with 775, 750 by 2025, and it'll probably outdo that.
On the political backdrop and the fact that President Trump will help, expedite Tesla's autonomous vehicle regulatory approvals, Dan Ives said the same thing. He said, well, he has a $515 price target at Wedbush. He says, we believe the Trump White House in the next 4 years will be a total game changer for autonomous and the AI story for Tesla, and thinks that AI and autonomous opportunity is worth $1 trillion alone for Tesla, and thinks that
okay, we're back at the 63.
Fast-tracked because of the Trump White House. Mizuho,
Three white, three black crows.
We see less stringent.
Now I'm getting a little burned out on this trade.
Key tailwind to
I want to give you another part of my strategy. I'm getting a little burned out on these three crows. I mean, this is like the fourth set, fifth set. Does it have the mustard to go ahead and hold the 63, or is it going to run down and hit my 60, 38, 10 and find some kind of support there off the triple top? If I remember, that's a triple top. That's a double top. So it can easily drop down there. I think it can, because I'm kind of getting a little burned out on so many three black crows. We'll see if it gets down here. I'm not going to buy a put, but I'm going to watch my call here. I moved him down to the 60-40s. Could go down to the 40-40 or the 60-50s. And buy three of them. So I'm looking at the 60-50s at 330. Watch the tape. We've got the level 2 up. It don't show much on the level 2. Just the spread size. Let's see what the New York does. Bats on edge. Nothing, huh? NASDAQ full book. Nothing. Level 2. You ready, Randy? We're going to take it at the double top. Or you can take the 60-40s. $60-50s or the 60-40s or the 60-45s. I got to put on my slippers. Feetsies are getting cold now. I turned on the air conditioner. Got a little stuffy in here. Oh, today's commercial is brought to you by Deer Looms. Jim bought him a pair of sneakers last week for the house. Got a nice cushion on the inside with a fabric liner, a linen liner, plastic traction on the bottom for a low cost of $20. Now we're waiting. This is a double top. And your next one would be right here. You take and run this previous resist. You take it, do a price line. I'm going to watch this trade because I want to see if I can get run it from the body of that candle all the way across. Oops, that ain't the one I wanted to use. Take it from that to that right there. See how you got this candle right here, this candle right here, this candle right here. That's number 4. Pulls back and hits that line. This pulls back and hits this line. So if this doesn't hold, this double top doesn't hold, it's going to easily drop down and hit the 200 down here with a low support at 60.3212. I think I need a little bit more pullback. We got some resistance now, these moving averages. So I'm going to download this video while I'm waiting. Or upload it. Yep, she bounced. There's $100 right there. $140 if I got it at $3. That was the 60/50s. I got drunk with Kamala. I got drunk with Kamala on the 4th. On November the 5th. She was a sight in despair. Now she broke out. Get across, just so you missed the trick. Oh, I could have had that. Okay, now we got a double bottom. I still think we can go down. This is descending. We can go up and hit a little bit high, so I'm going to show you how to draw a descending triangle. That's bearish. And you got to look at the time of day. So fat cats will be back soon. Actually, it could be descending. It could be a higher low. So we'll do the descending one first. That's a descending triangle. Then I always say if that body does not touch the bottom here of this candle, it's a higher low, which means it could break out. So we're getting ready to squeeze. I don't know which way yet. It's a 50-50 chance. Back to this here double top. And then bounce back up and create a head and shoulders. Then break out, pull back, create that right shoulder, and then boom. They could always retest one more time. Hello, retail traders. Drop, drop, drop. I mean, it's a scalping chance, but I'm going to wait. I'm already up good. I don't want to ruin a good thing. Patience is one of the hardest things to learn. It's very hard. What was I going to do? Where am I? God, think. What am I going to do? Oh, yeah. What are you, brain dead, Jim? I posted a video one time during midday, and this guy said, I'm not going to follow you. I don't follow people that post videos midday. What? This is Washboardjim.
vertical and not just a call against stock, you keep your upside. If Apple were to rally, to $300, you would lose the width of the strikes, but you would keep the upside if you long the underlying and short this. So if you combine this with long stock, it wouldn't affect your big upside.
Yeah. And this is the type of strategy we talk about these all the time. You're staying risk defined. Right. So you know when you put this trade on exactly what your downside is. If you collect $1.30, you got $370 in risk. If you own the shares and the stock keeps going up, maybe you offset some of those losses. But if you're just speculating that's going to consolidate and remain below the 257.5 strike, this takes advantage of that over the next basically week and a half.
Probability out of the money 64%.
64%.
We're getting ready to squeeze.
All right, good stuff.
As you start tightening up here, it's like telling you got a couple minutes left maybe, or she'll break on down and hit that. I'm real patient with this trade because this is descending, and that's a bearish indicator. But also we had the higher low and it broke down below that, so pretty much think we're going to come down there and hit. And maybe if it builds enough strength, it'll come down and hit that. So get your calls ready. Where are we? Where are we? We're at 280. Now, I don't want to be too far out of the money. I got 3 notches out of the money here. So I'm going to type in this trade. 285, 275, 275. I'm going to grab 2 of them. Then I'll double up if it dips on down. Nope, not yet, huh? It's going to dip down. Jimmy will wait. I still want to grab a couple. Right, real soon. Right about now. At 2:15. December 26th. Oops. There's the 200, 185. That's right where I said she'd go. Strike is damn. Okay, I got 3 different entries. 3 black crows with a hammer. Average 190. We could drop more. It's a triple top quad breakout right there. So that's triple top quad breakout, and it pulls back and hits that support. We have a double, we had that touch right there. It still kind of feels a little risky to me. I got an average of 190. Now, if you're getting in trouble and you're scared, you get out even. But I'm going to hold on. If we break the 63 of the 200 EMA, I got 8 of these suckers. Resistance is going to be the double top or the 21. So if we got 3 black crows with a hammer, then with 3 white soldiers, I'd get out of this trade if we hit the 21. But it can go ahead and break on up and hit this bottom of this resistance or the top of that first crow. But I'm going to get out just to show you I can make a trade like this. 230. $250. Now, I mean, I'm going to get out. Out at 240. That's $50 a contract. It's $400. So traded exactly as I commanded it to. But I didn't call, I don't know if, did I call that? No, I called this. The 200. And we went a little bit below it, which gave me a better price. Good job, Alex. Good job, Randy. I'm going to tell you where to go. Make sure you take her to a luau and eat at some of them ma and pa restaurants. The fish is fresh. The beef is good. The beef is grass-fed. I mean, it's the best beef in the world. The beef you'll get on Hawaii. So if you order a ribeye, it's the best meat I've ever ate. Three black crows, three white soldiers. Again. I'll send you a list of things to do. But definitely take her to a luau. It might cost you a little bit, $300. Well, it's been 2004. It might have gone up. Take her skinny dipping. On Waikiki Beach. Woo! Take her to the North Shore and see the big waves. Right now, the big waves are there. Last week, I think. 30-foot high waves. That I never did try to do. I wasn't going to try to do that.
What if you could legally position yourself ahead of Wall Street's biggest moves? With Gamma Pockets,
Come on, ride them waves. There we go. This guy's got it. Bye-bye. I used to go out there and watch them do that on the end. I'd only watched them once. Man, look at that thing go. Son of a gun. What are we at? 260. Does that make sense? No. I had 190, so that'd been 8 times $60, $70, 80. There's another exit idea at the 63. I got out here. I could have bought the dip. Snake, breakout, pull back, boom. Randy. Honolulu's great. Rental cars are expensive. Make sure you have one. I was shocked. So I called a cab to my hotel. I only had $3,000 to live on till I found a place. I sold all my records to go there. Then I started trading in 2004.
And we will be diving into the technicals on some of these key sectors that we think you should be keeping on your radar into 2025. We will also be revisiting the year that was for Tesla. You have Trump, Tesla. It was a very busy year for Elon Musk, so we'll discuss more about how that's become such a compelling story, especially post-election. And we'll be discussing the nuclear energy outlook.
You badmouthed Tesla all the way up. And you said you were wrong. Don't come in here thinking you know what you're doing now. You understand? Same as Caroline. All you women get together and badmouth Tesla. Just because you're jealous.
On a lot of these names, Royal Caribbean especially, into 2025. So demand for travel is showing no signs of weakening. We saw a banner, TSA figures as far as the holiday period was concerned. We're expecting more of those same numbers for this upcoming holiday period. Travel has been one of the strongest themes, ever really since post-pandemic.
Actually, looks good right here.
It really has, and the cruise liners
I had 248.
are so illustrative of that. And the fact that we're going to spend some time with George at the end of the show to really highlight what is sort of been a stealth rally for those who haven't followed it. I'm so impressed by the comeback in that space, and if we were actually forced to eat crow on things we were wrong about, I would be eating lots of crow, I think, on what's happened for cruise liners. So always, and this is something that Kevin Hinks has taught me throughout the years, and it's something you, I think,
I'm going to eat some hummus.
Never say never, never say always. And there's always a chance that names, even like the cruise liners that look down and out during the COVID time frame, can make more than just a comeback.
No, I don't know how to surf.
Become one of the strongest performing areas of the market. And that's certainly.
No, I don't. I know how to swim. I'm a good swimmer, but I'm not built to swim anymore in an ocean. I've never surfed. I've paddleboarded behind a boat. Kind of surf on one of them boards, but with a rope, but that's it. I did try to fish with a stick. Had a Hawaiian try to teach me how to do that. Back then I had good lungs, but probably not now. But I will tell you a story about Hawaii. I got to Hawaii and I met this girl. I think I met her on an online dating site. And so I hooked up with her and we were going to go to a luau. And she lived on this island for most of her life and never been to a luau. So I took her to the luau and chumming up next to her, and all of a sudden she said, "Oh, I got 6 kids." I said, "What?" "I got 6 kids." I said, "Okay." So I think she was trying for me to hook up with her. And I took her home and gave her a little cheek kiss. And she calls me up, says, "Jim, will you take me on the boat? The river boat, so we can have dinner, and I'll make love to you." I said, "No, I already got a date." I didn't want to go out with her no more. But I ended up going out with her again. And then I told her I had to leave. We were going back to play in a band. And I had to come back to Missouri. And so I get a phone call. I moved back with my girlfriend. I get a phone call. "Hey, Jim, I'm here in Springfield." I said, "What?" "Yeah, I joined up to the police academy in St. Louis." I said, "Oh my gosh." She wanted me to hook up with her then. I said, I felt so weird because here she was back in Springfield, Missouri. And I told her I couldn't do it because I had back with my girlfriend. But I'll never forget that. Ding-a-ling-a-ling, ding-a-ling, "Jim, I'm here. I'm here."
Volatility that both Palo Alto had, and I think it was in the first quarter around earnings, and then of course CrowdStrike had in the middle of the year around that outage. But the CrowdStrike story, I think, really does highlight, that old kind of saying of there's no such thing as bad press, because man, that was a negative story. It was,
Anybody trade that SPX, Randy?
A mistake on CrowdStrike's end that caused it. There's been kind of ongoing litigation to kind of handle what those costs and how those will be handled. But in the end, it kind of also highlighted
you're still in it.
Embedded CrowdStrike is in the world's tech infrastructure, how important this particular company was to keeping things going on a daily basis. One mess up in terms of an update, oversimplifying it, of course, basically shut down Microsoft for the day, which is pretty crazy to think about. But even within this space,
We hit the third crow. First crow.
They're not having great years, and so. Just because a sector or a subsector or a theme is a winning theme doesn't mean that rising tide is going to lift all boats. Now, in some of these, that might be...
So here's another way of strategy of YouTubers are trading the 3 black crows, is to scalp it. I got out there, but to scalp it up to the first crow, top of that first crow resistance. That's another exit idea.
Range, especially when looking at
I'll be right back.
right now, for example. Sentinel-1 also recent dip to the end, to the back half of this year, but just sort of stuck now at these new levels. So we will now be leaving it there for all things cybersecurity, but actually a very similar theme is computer hardware. And this was seen, I believe, if my read on software versus hardware correct, as somewhat of the winning trade of the two, at least the majority of this year. Back half of the year, we saw real favorability, especially as far as post-earnings moves from software stocks. So that's now in question. A lot of people have called for the bottoming of some of these PCs and various electronics. And I don't think we've seen the bottom yet as far as at least price would tell you, because these names continue to see a bit of a mixed reaction to their financial guidance, a lot of which was mixed. But you look at the space, you have your winners, your Arista Networks, you have your Dell. Corning has also been a strong one, of course, the glass maker for iPhones. But then you have the very stark losers, your Intels, your Microchips, your Qorvos, I have a hard time putting it in this camp, but given where it was, I mean, Supermicro now is kind of an interesting story. But all things considered, there's a lot of names in this space that all are trying to recapitalize on computer hardware, the rise of PCs and notebooks and AI. And there's the believers that think this upgrade cycle will be a huge catalyst for this space. And then there's those that say this is still a market transition. It's going to take time.
3 black crows.
This is the space where I think success and I guess what would be relative failure is most stark. You have the names like the NVIDIAs, which kind of, I think, kind of bend between hardware and software a little bit, but even, let's say, a TSMC, a Taiwan Semiconductor, TSM, the stock ticker, such a strong performer. You mentioned Corning, you mentioned Dell, you mentioned Aristanet. Those names so clearly outperformers, basically had been the entire year, and some of them weathering pretty big drawdowns. A name like Dell had a pretty big drawdown in the middle of the year, and it really didn't set it back as much as that drawdown appears to have when you look at the overall performance. But then you have names like Intel. Then you have the kind of fall from grace that you see in Supermicro. The stock's still okay year to date, in real time, but it's so far off its highs in the case of Supermicro. There's the cloud of uncertainty that surrounds that company now when it comes to delisting, getting removed from the NASDAQ 100, after being added to the NASDAQ 100, and the accounting uncertainty. So to me, the big takeaway here is, in no other space is it more pronounced success and relative failure. What NVIDIA had done to its peers, they're not alone. You see it in Arista, you see it in Dell, you see it in Corning. The names that are winning big, and if you're not, you missed a huge opportunity. That's the spotlight clearly on Intel when we have this discussion.
Yes, and unfortunately for Intel, the turnaround story, even as far as their guidance, I mean, I read into the CEOs, the CFOs that are giving the most upbeat and optimistic takes they can possibly give. I still don't really see the story for Intel, at least in the near term. I think that they have compelling prospects in like 2027 and more of the long-term build of some of their Arizona facilities, but that's a long-term story.
One thing too, to kind of close this particular theme out, this is also a space that was a huge theme in 2023. So another example of how these themes, they don't just end at the end of the year, they can go on for quite some time, and new names join the party this year. In the case of the Aristas, the Dells, and the Corning, so it can expand and grow, and I think that's been one of the more fun parts to watch about this AI hardware build out.
I completely agree, and Dell is one that might surprise you, because if I had thought I'd be talking Dell in 2024, I would be actually probably thrilled that it's still been able to hang around as well as it has. Next theme today is a theme that has been, obviously the most, if not, I'd say the most important one into the end of this year. Definitely one to watch as we go into a new administration in 2025. That is crypto. And I think that one word to describe the way the crypto bulls have been feeling is vindication, especially following that Donald Trump victory, because we've seen this, instantly impact the entire space. Bitcoin surging over that key psychological $100,000 level for the first time. Driving these new highs, we had been, well off of highs for quite some time, and then had started to see that price activity creep up. But now, with investor confidence continuing to drive prices higher, you have names like MicroStrategy, which let's just call it what it is. It's a Bitcoin proxy, frankly. It's a Bitcoin holding company that's continued to gain success because of Bitcoin's rise in price. But I do think that there is then this sort of psychological proximity with the White House. So I'm curious how this lack of regulation actually impacts the overall crypto world.
Well,
It's not going to have lack of regulations, chick.
It went from this 60,000 range up to 100K. 100K.
They're going to regulate it. The lack of regulations are going to come from other things. It's not regulated yet. It's going to get regulated. Sometimes I think she wakes up on the wrong side of the bed. It wasn't regulated under the Biden regime. You got a president that wants to work with it instead of against it. It has nothing to do with regulations. Misogynist again. She's definitely a liberal.
of 10.5%. The widespread use of mobile phones, as well as, of course, the internet, but I think particularly phones and apps is what is driving a lot of the ease in which you can access these various, online gaming tools. Also, the sports category is on the rise.
You'll sleep on the couch.
Is also up collectively, and we're seeing betting, still remain on a healthy pace year over year, as well as more legalization, hopefully ahead in 2025. But it just has not been the same year of strength for these names. I will say, you look at Penn, which I know is still, I feel like, reeling from that breakup deal. It hasn't seen the same love from the street, the love from the earnings reactions. It feels like it's been a quiet space this year.
It has, and I think in some ways too, we've watched the evolution.
Put some tape on her mouth, Alex.
GMs. They're almost more hospitality companies than gambling companies now. They get so much revenue from lodging and experience and the services provided at their locations. And think about the overhead, all the employees and everything that goes on. They're almost like event centers in many ways. When you think about what goes on in cities like Vegas and Atlantic City.
290.
And so when I think of pure investment.
190 to 290.
In sports betting, DraftKings and Flutter Entertainment are a little bit more of a pure play into that.
Randy?
That's in that particular space because, while they are building out a little bit on the brick and mortar side and traditional locations, it's nowhere near the same footprint, and they're getting so much more from their online app. So, my favorite moment though in this space was towards the end of the year when DraftKings had its earnings event, and it basically said, "Hey, we didn't make as much because." The players or the payers, the people betting on our app, they just won more bets than we thought they were going to win.
I know.
This is just too much fun.
Frankly, as someone that follows a lot of these sports, I'm like, about time that maybe the house didn't win for once. But we'll leave it there on our gambling conversation. We'll be looking more at the themes of
today,
cybersecurity as well as, of course, crypto. How could you not when recap?
Today she's a tennis chick. She looks like she's ready to play a game of tennis. That was her ping pong outfit. So this sucker dipped down off these crows. It's been a 3 black crow day today. This is the 5th set now, 5th or 6th set. 3 black crows with a consolidated area. 3 white soldiers. Boom! 190. 290 from 190. See, you got your 3 crows. Hammer, hammer, and hammer. Sledgehammer. Hammer, hammer, and sledgehammer. That's something that I made up. Up to the 3rd crow. 1, 2, 3. Boom! That was around 160, and that was 190. AVGO bounced off the 200. That's a bull flag. Spy says it's going up.
much earlier in the year, near like February, near about 188 or so, it was kind of a repeated resistance point, and then after the breakout, it became support. So that's kind of why we keep track of these extreme high and low points, because they can come back into play. But you can see as well, August 5th, an important day for so many stocks, marked a significant low. It wasn't quite our 52-week low, but we did hit our purple 252-day exponential moving average. It also gives us the basis for our white upward sloping trend line here, and the overall shape, kind of a rising wedge here. We're making some new intraday highs today, but we're still short of a new closing high, still kind of having trouble staying above that 204, 205 level. RSI trending downward. A little bit of bearish divergence in play here. Price making new closing highs. RSI trending downward. Still kind of above that 50 midline though. Not really a clear breakout from either our green.
Another set of them.
So kind of
It's just all day long.
So if we were to also include
It's got to have to stop.
and standard deviation,
You got to stop
we can
winning.
see that the key trading areas in terms of volume are right around here. Maybe
I need to stop winning. I think it's about time for a song. It's such a pretty world today. Look at the black crows. Look at the nose. I will be back.
Price continues to climb. We can see also that we are on the verge of breaking out to the downside below our green trend line. The 50 midline would be the next stop. A break below that would be a bearish signal here. So now when we are to incorporate our other studies here, we can see that we're in a key trading range right here near about 315 or so. Heavy volume right around this area, kind of concentrated here. So look for this to be a sort of tipping point here. We topped out pretty close to the +2 standard deviation channel, and we bottomed out close to the +1. So once again, these are kind of our road signs that we could keep an eye on here. And you know, we can see also very heavy volume during that surge to the upside there. So big volume plus big price moves equals high conviction here. When we tie it all together, you know, kind of what I just said. +2 channel, 350, 355, that would be the high points here. Low point, +1 channel, and our 21-day EMA near like 304. And just to kind of a thought experiment here. 225, 170, and then all the way down here 125. They look really far away here, but if you were to sell puts at each of these levels, you could still get a $1 credit at 225, a 50-cent credit at 170, a 25-cent credit all the way down at 125. I'm not saying you should do that or anything. I'm just saying interesting that they're so far away but still relatively feasible to trade in terms of the credit received.
Yeah, and I'm glad you mentioned that. And I think key levels to keep on our radar here into the new year. And so appreciate that. And now, before we close things out, we have to talk the monster move that has been MicroStrategy. I mean, I have to admit, I was so wrong about this name, frankly, Rick. And I guess in an easing regulatory environment and with crypto on the move, Bitcoin in particular is a massive, massive part of this company, if not the entirety of this company, basically. It has been objectively one of, if not the biggest beneficiary of the move to the upside in the crypto world.
Yeah, I get it, and you know, just to, as someone who's been around the block a few times, these kind of high-flying names, you can get burned if you're not careful. I'm not saying that's going to happen, just volatility can cut both ways, so kind of remember that. But we can see we had a sideways grind for a long time. Another of these key price levels that we kind of got stuck at, near about 182 or so, kind of topping out around there multiple times. Then we started to push above our moving averages. We developed an upward channel in blue, and then we had another gap up, and then that's kind of this new price regime where we're kind of all over the place here between the extremes. You know, we were 300 to 543 since we had that period, and only the span of a couple of months is really quite extraordinary here. But for now, though, kind of a more triangular shape, kind of this mildly downward sloping trend line going across our recent highs was probably the most reasonable near-term way I could draw it here. But RSI also trending down, momentum trailing off here as price consolidates a little bit after our surge to the upside here. So when we look at our volume areas, once again we can see right around here 385 or so, 380. This is a heavy trading area. It really stands out. You can see it's very obviously the point of interest, so to speak, in the near term here. Volume profile point of control all the way down here near about 133. But notice again, heavy volume during the kind of the same time as our last chart here during this big push to the upside for crypto in general. We topped out right around here, 543. We're now between our +2 and +1 channels here in terms of standard deviation. So if we were to think about some upside targets, well, we've got this here. We've got our +2 channel near 465, and we've got our best close on the year, which came in at 473.83, so around that point. To the downside, +1 standard deviation channel, and our 21-day EMA around 379. And like our last chart here, all the way down here, 135. If you were to sell this put, you could still get about 50 cents for it. And that would be a 2/3 drop or so. You know, that's so just kind of crazy to think about the premiums that could still be in play even for things that are so far out of the money.
And I completely agree with you about the risk. I mean, anytime you see a name of any sort, so I'm not saying it the crypto world or not, I do think that it's important to know some of the downside potential when you, again, just become very much run up so far so fast, as we've seen in some of these AI plays that have also came crashing down. Not saying that's going to happen, but just be mindful of the risks. But appreciate the technical outlook and some of these trends we can now watch into the new year. Vic Ducat, of course, our chart master, Coming up next, it's time for FOMO, and arguably a name I think we've discussed the most on this segment this year is what we're revisiting today. That is Tesla, as shares had risen over 70% post that November election. Trump, Tesla, Elon Musk has had a very busy year. We'll dive into it coming up next.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Get each and every angle, the whole picture. Everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
We're sensing technical difficulties.
Schwab, a modern approach to wealth management.
Accelerate your market knowledge and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to Next Gen Investing's 2024 Year in Review. And so to discuss right now all things FOMO, and of course we're looking at Tesla, is Caroline Wood, Senior Markets Correspondent for the network. And Caroline, as we know, because we discussed this name probably multiple times every single day, there's a lot of themes now to watch into the new year, a lot of expectations, but it's been really a post-election move to watch. I have been shocked and surprised to the upside. So I'll walk us through your thoughts here as we watch now these key trends into 2025.
Hey there, Jenny. Yes, I'd say that Tesla is a perfect FOMO candidate, especially the back half of the year. More specifically, really the final 2 months of the year. We've seen this huge election, President-elect Trump tailwind for Tesla shares. Tesla was trading around $235 ahead of the election and then surged higher than $480 a share. So it's seen this really impressive run higher. And I think, in terms of the questioning around why is President Trump good for electric vehicles, knowing that he's been critical of EVs in the past, and we're actually expecting his...
Honey, he's not been critical. Oh, he's just saying don't go too fast. Wait until they're accomplished. Let the private sector deal with it and get the government's hands out of it. That's what he's been saying. You understand? He's not critical of EV cars. He's critical of the government taking command and picking and choosing winners.
Leave the Trump White House the next 4 years will be a total game changer for the autonomous and AI story for Tesla and Musk over the coming years. We estimate the AI and autonomous opportunity is worth at least $1 trillion alone for Tesla, and we fully expect under a Trump White House these key initiatives will now get fast-tracked as the federal regulatory spider work that Musk and company have encountered over the past few years around FSD and autonomous clears.
Poor people and middle-class people can't afford a Tesla if they got a family of 4 in this economy. We've got to get the prices down. Now, you were harsh on Tesla because he wanted to lower the price in Tesla for the middle class. You didn't want him to hurt the margins. We don't care about margins. We care about getting cars in people's hands.
Election move that you had mentioned isn't.
Look at GM. It's done crap for 20 some years.
Of what analysts were looking for in deliveries, while they did increase about 6% after 2 quarters of declines, they also fell shy of what Wall Street was looking for. So you wouldn't necessarily look at the numbers and think that they may justify.
We don't care about the numbers.
90+%.
We don't care. The stock still flew, didn't it?
Expect to achieve slight growth in vehicle deliveries in 2024. So I do think that this is very much seems to be more around the regulatory side than the.
They look at Tesla like it's an auto company. It's not. It's a tech company, and they try to compare it with margins and prices and profit, and you don't look at this stock like that. It's different. You got to have at least 200, 300 grand in the bank before you want to buy one of these. You got to be rich. It's like a diamond necklace that you're putting on your neck. Not everybody can afford a diamond necklace.
Basically, Elon Musk is basically, President-elect Trump's right-hand man.
Oh my God.
The Department of Government Efficiency, but they've really.
I can't take it anymore.
In this election cycle, and that's helping Elon Musk get richer. It's helping Tesla shareholders.
Oh God. Cutting costs and government's helping him get richer. She's definitely a liberal.
Victory, huge boon to the stock. Deliveries, though, kind of flat year over year if you're just comparing to 23, but 23 was a huge, performance jump from 22. But the stock's at all-time highs now.
Honey, Tesla, how many more cars does Tesla make compared to all the other companies put together? Do you get what I'm saying? They sell more cars than all the other companies put together.
Maybe not, but a product that looked like it was going to be niche, it's still niche, but maybe a little bit more widespread adoption than many thought. What are your final thoughts on what's been just a roller coaster ride of a year for Tesla?
Oh, God.
Alex, shockingly, I live in a high-rise with a parking garage that has pretty tight parking spots, and we even have Cybertrucks in there, and my building is constantly sending out emails asking people to remove their illegally parked cars, and more often than not, they're Cybertrucks because they're just so big. So they certainly are, more and more popular around where we are as well. I do think one thing that we haven't mentioned is also China. Obviously, there's increased competition in China, but there's also a lot of uncertainty about the U.S.'s relationship with China under another Trump presidency, given potential tariffs. And
that's because he ain't took no money out of their pockets like Biden did.
I think that Tesla will get some carve-outs in China, but that's certainly a cloud of uncertainty.
There's sometimes where I just can't listen to these people. The market desperately wants to sell. They don't want to be participating in this coming economy, but they're going to have to deal with us retail traders. And we'll trade with them. If you want to short the market, go right ahead and do it, honey. Three black holes. Inverse Head and Shoulders. I didn't even get ready to take it. 125. Ryan D. We dipped down to 105 and I missed it. Arguing with her.
For Tesla, because he looks at it as a car company and thinks that, you know, the rollback will be bad, but he's stuck with that very bearish price target all year, and it hasn't necessarily played out well for him.
I know, I can't believe how stubborn that is. I mean, it makes me mad because it completely skews the average and makes, I mean, the average then much lower with a $25 price target, basically. It's like $24.86, whatever. And that makes me mad. I hope that he updates at least modestly, but I guess really sticking to his conviction, which I can respect. But it's like, at some point, you got to get over yourself and assess price as it has moved. But
so do you, honey.
Always, especially recapping the year that was in 2024, and I'm glad you mentioned the Cybertruck. I'm a fan. I know it has some mixed feedback, but I do like whenever I see one. It's sort of like a slug bug where you want to like point it out to all your friends. But
some mixed feedback. You got a lot from me.
Appreciate it, Caroline Woods. But coming up next, time to talk.
I give them both mixed feedback. They start to sound like CNBC. Randy, they're upsetting me. I'm going to chart this out with all the black crows we had on here today. They're making me mad, Randy. $125 at the 60/50s. $140. $155. $170. Let's get it. $175. We hit the 63, scale out, 3 black crows with a hammer. Boom. I got to quit listening to them. They've been talking about bad-mouthing Tesla all day today. Like they want to bring it down. Yeah, I could almost call this a black crow here. And I could almost call it that, but I'm not going to. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 3 black crows. 190 from 125. Wonder if this chick will sue me now. Copyright. You need to start winning? Be in the now. After this week, after the new year, I'm expecting a pullback. Money, they're going to take money out of the market and reposition. Oh boy. Oh God, who got a downgrade? How come? Why'd they get a downgrade? I don't get it. I worked my ass off to do this. Because I missed a trade, probably. Oh. Did they run higher? No, they didn't. Just that one time. They're still at 170. Take it back. Take it back, Jack. George. All my rowdy friends are coming over tonight. Yeah. Get things started, yeah. My whole boots. Oh, hey, let's get it things started. You wanna party? Listen, old Hank, get the thing started. My rowdy friends are coming over tonight. That's right. George.
So the underlying stock. That's
Here we go back to the 200.
The day, irrespective of the revenue base, and that's Royal Caribbean, because the company didn't go into the pandemic with as much debt and has actually come out faster with less financial strain from debt, and that's really been very valuable to shareholders who have stuck with the company.
Yeah, and like anything, George, less leverage, you're going to be less exposed in the tough times, but you want that leverage when things are going well. So excited for 2025, and time will tell if this rally can continue. George Tillis, appreciate all you've done for us here in 2024. Always a pleasure. Jenny, as we close things down here, I think it's important, too, as we kind of just look broadly at what a year it's been. Across the board, and there's been up and downs, of course. I mean, I think of August of this year, it looks like everything's falling apart, and how quickly things can change.
How quickly things can change. It just goes to past performance is, of course, not always indicative of what we can see in the future, and we've seen that really in the back half of 2024. But that
the 60-50s at 130.
For today and for this year, we appreciate your viewership all year long. So thank you for tuning in, of course, for Next Gen Investing.
I love you. SPX at 130. The 60-50s. We're at 150. There we go again, baby. 155. Take profit. Ooh, yeah, take profit.
Dominic alongside Schwab Network's options experts as we explore the second derivative.
What's going on here?
Gamma On is a brand new limited series to take your trading skills to the next level. Subscribe to Schwab Network's YouTube channel now.
It's been a fast scalping day today. Off the 200, you got an inverted hammer with two black crows. Engulfing candle back to the 200, out of the trade. Best way to drink water is out of a Yeti cup. I'm about done winning. Can't win that much. I'm tired of winning.
Beyonce, Beyonce, dance party with Beyonce, dance party with Beyonce, dance party with Beyonce, dance party with Beyonce, 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 party with Beyonce, 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 dance party with Beyonce, dance party with Beyonce, dance party with Beyonce. Dance party with Beyonce, 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 Beyonce.
Dance party with Beyonce.
Special year-end coverage. I'm Nicole Petalides on the floor of the New York Stock Exchange. It's been an action-packed year for stocks, major indices hitting all-time highs again and again and again, and Bitcoin crossing the 100,000 level for the very first time, as so many said it would. The AI revolution hitting tech stocks and propelling them higher, and much more. We're going to cover all of these top stories from the year 2024, and of course, we'll get you ready for 2025. So it's 2 p.m. Eastern time. We're on the corner of Wall and Broad at the New York Stock Exchange.
I see what you're saying.
Show for you. We'll dive into the year.
But I did keep trading it. Magnificent. I did keep trading it. I did get out, but I got back in on a dip. But I didn't take it there, no.
Panel standing by to discuss the year in energy. The market had really highlighted things like all kinds of news from geopolitics, the demand that we'd seen for nuclear energy. So much to discuss there in energy.
Could be a double bottom.
What's going to drive 2025? Now let's take a look at what's shaped the markets in 2024. Joe Persuelis is with us, Chief Economist at RSM. So glad you are with us. So we saw the Fed cut the 100
I'm tempted to go on a treadmill for a second.
2024, you had a fit.
I think I will. I'm going to go do a treadmill. It won't take long because I ain't been doing it that much. I'll do a lap. So I'll be back. I'm going to put on my shoes,
We
though.
look forward to 2025, where we expect a 2.5% growth rate. That actually may represent a bit of a deceleration, because in the current quarter, the final quarter of 2024, it looks to me as we're going to have above 3% for the second quarter in a row, and we're seeing a real risk of a 3.5% close to the year.
Yeah, let's talk about the new year. I mean, where does that go?
Well, we think that there's a 55% probability that the U.S. economy grows at or above 2.5%, an average of 4.2% unemployment. We think that the U.S. 10-year will average 4.5% over the next year, but with the risk of moving to at or above 5%. And we clearly think that the Fed is poised to cut the rate, or the policy rate, to a range between 3.75 and 4%. That would represent an additional 150 basis points. And we think that likely is at or near the trough. So peak to trough, the Fed will have cut 150 basis points before they stop. And then we're going to see how we all adjust to the new regime in the American economy. And I don't mean the political sector. I mean higher rates on a permanent basis for an economy that's going to grow faster and have a lower unemployment rate going forward.
That seems to be what the Fed's worried about, right? High inflation and less so about labor. There was a time in 2024 that, Jay Powell came out and he sort of took everybody's surprise, because he was super focused on labor and the concern that he was having, maybe that it may be slowing. He just wanted to make sure it stayed where it was. You may remember that meeting, only to get back to inflation by the end of the year. And that is the concern for 2025, is that we see inflation. I mean, are you still on board with the 2 cuts that they're saying?
Yes, I am on board. I'm on board with the 2 cuts. In fact, we think there's risk that there'll be less cuts and a shallower rate path, simply because the U.S. economy may outperform. Well, we had that 55% probability. For the first time in years, the alternative to our baseline forecast is not a recession. It's that the economy grows at or above 3%, which would likely mean no rate cuts next year. And that's something we're going to want to watch, simply because if you take a look at the income stream in the households, 5.8% through the end of November. You take a look at just how strong spending is. When you inflation adjust it, it's up 2.9% on a year-ago basis, and we clearly saw that gaudy 3.7% increase in spending in the third quarter of the year. Jobs market remains strong. Real wages are rising above inflation for over a year and a half now, and the American economy and American households are beginning to finally catch up following that price and rate shock which followed the pandemic.
And how concerned are you about the strength of the dollar? 107, 10 whatever, it early kicks off the new year, but certainly saw strengthening by the end of 2024. Okay with that?
The incoming administration is going to cut taxes. We're going to have a lower business tax rate, probably from near 15%. We're likely to see an increase in the state and local deductions tax on your mortgages. So money's going to be pumping through the American economy at one point in 2025. I do expect that to increase overall personal income, increase demand, which means the trade deficit's going to get wider, but it also means the dollar's going to get a lot stronger. That's going to cause some issues in the manufacturing sector, which has yet to really get off the mat after a year and a half of just basic stagnant activity. And of course, that does mean there likely will be some trouble in emerging markets that have too much dollar denominated debt, or don't have adequate capital buffers to absorb what's going to be a big aggregate shock to their currencies.
When we think about stocks, I know you're an economist, but how do you think the market may react? I mean, people would love the stock market that they saw in 23 and 24. And hey, they would love to get in those big wins again.
So if you see an incoming administration that's going to cut business taxes, it's going to have a very light regulatory touch, you should expect to see leverage increase. In fact, the proxies that I look at to monitor leverage coming out of the banking system or the shadow banking system are all at or near historic lows. As those spreads narrow, you're going to see an increase in risk appetite. And that bodes well for the market. That bodes well for private equity. It also bodes well for private credit. But let me say this. In a market priced to perfection, if you just get the slightest deviation, you can have very large sell-offs, like the modest surprise that Jay Powell provided in his 2018 press conference and policy statement. So we'll want to watch that. Lastly, Nicole, we've seen trillions of dollars flow in to tech in general, and specifically the artificial intelligence or AI. I think that we're going to need to see proof this year that those chips that NVIDIA is producing can be integrated into the provision of goods and production of goods and provision of services, and results in an increase in efficiency and productivity. And if that's the case, then we're right to talk about valuations at or near where they're at now. Now, if that's not the case, we'll be talking about a correction.
Yeah. You were also watching the trade tensions and how that could go in the big picture, too.
Well, so when you are going to put tariffs on traded goods, you're going to see one-time increases in the price level for the goods that those are applied to. Now, like the Federal Reserve, I'm waiting till I can see the whites of the eyes of the tariff policy before we begin to model out the shock to different industries and the overall economy. Now, my sense is if it's more of a trade skirmish, which is what we had in 2018 to 2020, it's not going to cause too much of an issue. It'll cause some noise, and we'll want to make sure that the retaliation by the Chinese against the agricultural sector is covered either by increasing fiscal expenditures or outright subsidies to the ag sector, right? But what's important is that this does not turn into a generalized trade war where we have tariffs across the board, very large tariffs on our main trading partners, the Canadians and the Mexicans, because I want to make this clear here. Everybody should understand this. The economic conditions that prevailed prior to the pandemic no longer are in operation. We're in a completely different economy, one that's prone to inflation due to the great structural changes that followed the pandemic from a macroeconomic point of view, the developments on a micro view as we've just seen trade already distorted, and of course the geopolitical tensions that will continue to proliferate. So that's going to be one of the big risks in 2025.
Completely different. This year is not last year, it's not next year. Next year is different, it's its own year, and that's why we have you on, and we will have you on throughout 2025 too. Joe Brusuelas, RSM, thank you. A good look ahead to the new year. Thank you. Coming up, Options Corner. Tom White standing by. He'll highlight unusual options activity surrounding Apple, NVIDIA, and what's been trading on these names. Why are there some big trades happening here? We'll find out.
Wrap up the trading day with me, Oliver Rennick. For the biggest earnings coverage, 3 p.m. Eastern, it's Market on Close. No place better than the Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl? Schwab.
Schwab, a modern approach.
Welcome back to the watch list. It's time for Options Corner, where we analyze unusual options trades we're seeing throughout the day. Tom White, host of Fast Market here on Schwab Network. You're taking a look at two of the top traded stocks of the year 2024. There's no doubt that semiconductors was a best performing group on the S&P 500. NVIDIA was a best performer. Morgan Stanley came out late in December saying that it was still attractive, key AI drivers. And while they downgraded some of the other names, they still had NVIDIA as a top of the top. So let's hear about a trade that you found that is bullish on NVIDIA.
Yeah, thanks, Nicole. So we typically see really high volumes in NVIDIA on a daily basis, Nicole. Today's no different. Millions of contracts using the option markets, trades on a daily basis, people positioning. You saw that drawdown in early to mid-December in the share. It was in correction territory, down over 10%. It's made some ground up going into the holidays. And I think that's the part of the sticking point here. Maybe some people were selling shares, but at the same time, the derivatives options market is still on fire at this point with the expectations that, hey, going into 2025, maybe we're going to see a rotation out of those big tech names, the Mag 7 names that they had pushed into and pushed against in NVIDIA. And we're seeing that in the option flows on a daily basis. Typically, we see a put-call ratio below 0.7 in there. That means for every call that's trading, only about 0.7 puts are trading. And that's typical of bullish activity that you see in a name like NVIDIA. Still seeing some price target hikes. Nobody's really downgrading the shares over the month of December, even though it was in correction territory. And I think options traders are setting up for some big gains in here going into the January monthly expiration, because once again, as we've talked about repeatedly on the 140 strike out in January, over 20,000 of those calls were bought up today, and average debit of around $4. Yesterday, they were paying a little bit more than $4 for these also, but they're building up a big open interest position on the 140 strike. With the assumption that it's going to recapture that level. By paying $4 on this, traders think that stock's going to go above 144 over the next month, 3 to 4 weeks or so. That's roughly, only about 8%, 7% above the current share price, where if it's trading around 130, 132. So you got to keep that in mind. But typically when we see dips in names like NVIDIA, especially, that always have one of the top three as far as option volumes goes on a daily basis, that anytime you can see drawdowns, the option traders usually lead the stock traders in a name like this, with the expectations that, hey, I'm giving myself duration on this because every option is finite, right? There's an expiration date. So yeah, January 140 calls, that's one to watch going into expiration in January on the 17th, because they're building up a massive open interest position on that strike.
Yeah, really interesting. And I know as we watch some of the price action, as I mentioned, with the Morgan Stanley making it the top pick, I think they had $166 as the price target at that time. And who knows what the growth potential really is for the Blackwell chip. I mean, it was just really felt like it was just getting started. So that's that group. I mean, semiconductors certainly were a best performing group overall. We'll give it to Apple too. With its new Apple Intelligence and new iPhones showing that too. You found a bullish trade on Apple.
Yeah, this is the same type of setup here in Apple. I think one of the key things you have to watch with Apple, as you can see a chart there, it was up over 30% so far this year into the end of December. hitting all-time highs this month also, so you got to take that into consideration. But one thing I think people are overlooking is the PE ratio on this one. It's at all-time highs, above the 40 level. So it's getting stretched on a valuation basis. I don't think anybody cares about that right now because everybody thinks we're going to be in the midst of a multi-quarter super cycle. I know we've had guests on the network repeatedly talking about a super cycle that was supposed to start when the new iPhone 16s went on sale in September. Well, it hasn't materialized, and the AI into Apple Intelligence products that they had built into the iOS, those are slowly getting rolled out. We'll get some more in 2025. So I think a lot of the moves that we're seeing in Apple aren't based on fundamentals. I think they're based on optimism going into next year that, hey, there's 1.4 billion devices out there that are going to, at least a percentage of them are going to have to be upgraded to the iPhone 16 and higher to get these Apple Intelligence features on those phones. So this might be a longer term story, but as we all know, stocks get bought up with the expectations that, hey, where are they going to be in 6 months, 12 months, 5 years, something along those lines. So the ecosystem's still intact here. And we saw some more positioning in Apple also out in the January cycle, so 28 days to expiration if you were looking at about the 20th of December. But you've got a few weeks until expiration on these. The strike is a 250 strike, so they've built up a big open interest position on this strike. Traders like round numbers, and 250, which is where the stock is currently trading at, is the number that they like in here, over 100,000 on open interest in there. Saw some more call buyers in there today, over 5,000. They paid an average debit of about $6.50, so paying hefty option premiums for these calls with the expectations that, hey, this stock's going to continue to rise. That break even if they pay $6.50 is going to be all-time highs here. So yeah, I think options traders pretty optimistic in Apple going into next year. And then you've always got to look at the volumes on these. Put call ratios matter a little bit, but just the flows when the momentum builds up like this, the options traders are betting that it's going to go higher. They give themselves some duration. They know exactly what their downside is because you pay a specific debit. There's your risk on those positions. So yeah, a lot of bullish flows into Apple this year. And for the most part, throughout 2024, those have worked out pretty well because the stock's done pretty well.
Yeah, and in addition to the iPhones, there are the wearables. Remember, they were talking about the watch and the heart monitors and the ear pods, AirPods, and hearing aids, and. I mean, it's probably the beginning for how other things that could come down the pipeline. I know there was a sort of a lack of innovation for a little while, and people were feeling some frustration, but maybe this is the moment that will start. As you noted, at least some people are going to have to upgrade, and we're going to talk to Dan Ives, who always loves Apple, for the long run. In the big picture here, as we think about 2024, there's no doubt in my mind, because I hear it, I see it, people ask me about options. This is not something that people talked about as much 5, 10 years ago, 15 years ago. Sure, they were there, but it is much more prevalent way to trade, right?
Yeah, definitely, Nicole. It creates a lot of leverage, a lot of opportunities. I mean, I've been doing this for 30 years in the options market, starting on the Board of Options Exchange here in Chicago, and just the amount of volumes that have picked up on a yearly basis, pretty substantial. 2024 is no different. Record year for option volume. Now, that may play into the fact that equity markets have rallied. So we've seen a lot of option volume just basically on the speculation side of things. But then also you can use options as risk control mechanisms, speculation mechanisms, staying risk defined while your options trading can keep you in the game. Remember Warren Buffett said this about 20 years ago, that options were financial weapons of mass destruction, while at the same time he was trading options for his Berkshire Hathaway on the floor of the Chicago Board of Options Exchange. So that's what you have to take a hold of. And then 0 days to expiration options, now nearly 50% of the volume. So continue to see options volume pick up.
Woo, there we go.
And our trading platforms like Thinkorswim pick up.
All right, great story, Tom. Great to see you all the time. Options Corner is a very
What time is it?
popular segment
Oh,
here
damn,
on
these things are
Schwab
cheap.
Network with Tom White, and I'm sure it will be in 2025.
60-45s.
Options Corner with Tom White. Thank you. Coming up, Dan Ives from Wedbush is here to discuss the outlook for the tech sector. Names you know, Tesla. Will it be a big winner in 2025?
Three
under the
black
Trump
crows.
administration? Dan Ives' favorite AI names for the new year. You don't want to miss it.
They're still on it. Tesla. God. What is it with them about Tesla today?
Empower your portfolio
I don't get
with
it.
the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy?
60-45s
Choose
at
from over
160.
40 games, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
Get each and every angle, the whole picture. Everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical...
We're sensing technical difficulties.
Schwab, a modern approach to wealth management.
Accelerate your market knowledge.
And shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
We're experiencing technical difficulties at 160. The 60-45 strikes. We're at 175.
Welcome back to the watch list. I'm Nicole Petalides. We are on the floor of the New York Stock Exchange and so glad you are with us. The NASDAQ 100 has been such an incredible performer, more than doubling over 23 and 20.
We're experiencing technical difficulties.
The rally, and can this hot tech market...
Now don't you start bad-mouthing Tesla, honey. All your other chicks have done it. 180.
Gotta give it up to you. Palantir, Tesla, Apple, and you
185.
so many of these winners when people
You can take some profit.
What gave you the strength to really stick to your tech calls? Especially, we've had some days
I'm still in
like
it.
early August, remember that big sell-off? We've had some wild days in the year and you stuck by it. Why?
Because I'm bullish on Tesla.
And based on sort of a blip, a macro geopolitical Fed moment,
I got to get this guy's voice down.
throw the towel in. And I think we're
Throw
in the midst of
the
a
towel in.
industrial revolution. And as that
I
plays
saw the
out,
towel in.
it's still only 10 p.m. It was 9 p.m. earlier this year. It's 10 p.m. in the AI party. AI party goes to 4 a.m. Haters will hate. Get the popcorn out. I think we're only year 3 of it's going to be a 5-6 year bull cycle.
And when they talk about the AI revolution and how it goes into so many, it's not just semiconductors.
Well, that's the key. I mean, for every dollar spent on an NVIDIA chip, there's an $8 to $10 multiplier across the rest of tech. Software, cybersecurity, infrastructure. That's the key. That's why this is only just getting started for $2 trillion of AI capex. And that's why names like, if you look at yesterday, that was a pound the table moment in time. Just like Tokyo Black Monday.
And so with that, you have all of these positives. You said how it's going to move on to software, cybersecurity, infrastructure. These are how it affects other sectors, big picture. We have names that we're watching when it comes to the Mag 7 that grabbed our attention. How about Tesla? And you project it to be a huge winner?
I mean, it's the bet for the ages when you look at Musk's bet on Trump. Because when it comes to autonomous, I think autonomous is worth $1 trillion alone. And for all those Karate Kid fans, it's a sweep the leg moment. What's happened in the Beltway when it comes to regulatory. And that's a huge, the biggest beneficiary from all of this is going to be Musk and Tesla. And that's why you've seen a lot of bears go deep into their caves in hibernation mode over the last month.
When we think about Tesla, we may not have EV subsidies, but Tesla is so much more than just an automobile. Tesla is so much more, right? And people shouldn't even think of this as just a car company
It's
or
not.
an EV company.
Look, calling them a car company, I think is actually it's an insult. This is a disruptive technology company that now, when you look at autonomous and robotics, that's the next step in the Tesla story. The gold at the end of the rainbow. And that's why I think we're just getting started in this next stage of Tesla as autonomous now becomes front and center over the coming years.
What's your I guess base case and bull case for the new year for Tesla?
Look, base case is 515 is base case, bull case is 650. And Nicole, I think it would be conservative when you think about $2 trillion. I mean, I think this is one of it. If it plays out, because we assume no value for Optimus.
Break
You
that
start to put
63.
Optimus value in there, you get a lot more than $2 trillion.
All right, you called Palantir before people didn't know how to spell Palantir.
Ooh, baby. I love Dan Ives. It's more than a car company. They build batteries and solar panels and code and go to Mars. I love Dan Ives. As my stock rise, break that 63 for me. I love Dan Ives. Speak, Dan Ives. Speak, young man.
An enterprise. And Nicole, it goes back to the second, third derivatives of AI. Now that party we talk about, software is invited. They're on the dance floor. Benioff, Salesforce. Now, Carp's been on the dance floor for a while, but this just starts out to our view of the Palantir story.
Blake.
Yeah.
Blake.
I know you mentioned Oracle. We'll watch for what goes on with that name. How about Apple and NVIDIA? Still love them both for the new year, right?
They're table pounders. I like what we've seen in NVIDIA. That's just a knee-jerk reaction digestion period. Demand to supply is still 15-1. If there's one red phone, you need that chip. There's only one company in the world. It's Godfather of AI, Jensen, NVIDIA. I think $4 trillion is the first one to make its Apple, right? And then second will be followed by NVIDIA and ultimately Microsoft. But it shows when it comes to Apple, the consumer AI revolution will go through Cupertino and Cook. And I think more and more that investors are starting to recognize that. You know, I think as this ultimately plays out.
Okay. The squeeze will begin.
Base case and bull case on your stock price there.
I've had a couple chances to get out of this trade, but I'm holding on. It can drop down to here if it doesn't hold that there, but we're squeezing any moment. Either way.
Well, you're starting to see even
Boom.
ones like Snowflake, Elastic, and others. My whole point is that
That
it starts
sucked.
with NVIDIA, but now it's real. The monetization's happening. And I always said, like, the bears have missed every transformational tech name the last 20 years because they can't find it in their spreadsheet. The point is, this is no different. We're talking about a
125
revolution that's being built out. And the bears, you know, will miss it again. And
This could be my fucked up trade today.
As the second, third, fourth phase of AI, you know, ultimately start to come in 2025.
I would love 3 predictions, maybe a little quirky or a little out of the comfort zone, whether, you know, it's for Tesla or NVIDIA. Some predictions for 2025. I'd love 3 of them.
Break
that
it.
will leave me scratching my head as I go to bed and I dream about the new year.
Okay.
Dream
So
about me.
One, autonomous in terms of cybercab, a year from now, that's something that ultimately starts to be in production for cybercab, and those are on the road by early 26. That'd be 1. 2, with the nightmare from tech gone, from the FTC, we are going to see tech M&A up anywhere from 50 to 75%. I think it's going to be just pandemonium, the type of M&A that we see in tech. And the third thing, I ultimately believe it's really going to be when it comes to Palantir. Can Palantir start to make its road to what I believe could be the next Oracle over the next 4 to 5 years?
Do you have worries about AI? I mean, does it get to be too much in any way, shape, or form? The worries that people have. There was a time that Elon Musk was actually clamoring, slow down AI for the good of the people. What happened to that conversation? Remember that?
Well, ironically, Musk is going to be key, in terms of the bromance with Trump, that we're going to actually see AI innovation center within the U.S. I mean, you're going to see that's a huge piece that we're going to see within the Beltway. Look, my view is regulatory going to be there?
Might have to get out of
There's
this.
some safety concerns down the road, of course. But right now, this technology, we're talking about something that's going to change the world. And I think many investors haven't really thought out, in my opinion, the scope and the scale of what this is going to do. And that's why, I believe a few, call it 12, 18 months from now, we're talking about NASDAQ 25,000. I mean, Tuckman's going to have to start to get those hats out.
And then buy on the dips. You buy on all dips, so you're not worried about recession or inflation or some crazy pullback or volatility.
Well, Nicole, my view is like this market's going higher. You buy the winners on the geopolitical, the Fed, the black swan events. All you buy it. I mean, that was what we talked about last night with investors. In other words, like, has anything changed in the market? No. If Fed's a little less dovish, is that moving the needle for us? No, because Fed's cutting next call it 100 bips, next call it 12, 18, 24 months. And this AI revolution, it's still 10 p.m. in this part. It goes to 4 a.m. China tariffs, there's a lot of other things going to happen, but I think Bark's ultimately going to be worse than a bite when it plays out. And that's our view, right, in terms of, as this plays out, 2025.
Great to see you, Dan Ives.
Great
Thanks for playing along.
Uh-oh, somebody's spamming.
And giving me the outlook of all kinds for 25. It's been a great year, Dan, and we love having you on.
Woo! There we go. Break it.
Of Wedbush. Happy holidays.
Haha, 175.
Good, folks. Still ahead, we'll dive into the year that was made for crypto. People love when they saw
God,
Bitcoin
come on.
cross 100,000. Right? Where's the next stop? What more in crypto do we need to know?
Yeah, this price, it's at 160 now. I can sell it. But I want to get to the 200. Are we going to do it, Randy? Rob? I can sell it now. I think we're going to do it. We got a wick here we got to fight. How dare you? Should I sell? If I sell now, I'm up 300. Ooh. Keep going. We're at 185. I'm at $400. There's it. I'm at resistance. Right here at the wick. I think I'll take profit. $185. I can get it. 2468. Who do we appreciate? Give me $2. Give me $2.50. Give me $2.25. We have 3 white soldiers. I should sell it. 190. Jack, what are you doing, man? Get out of that trade. Come on, Joe. Give me 210. Give me 220. 205. 215. Yeah. 210. 215. Okay, that's it. I can't play around with this no more. Out at 215. What do you think about that trade? Rundy and Rob. There's my 210. There's 215. There's 220. Dadgummit. You're still in, you cockroach. Jim goes for a treadmill walk for 12 minutes and 50 seconds and comes back and makes a trade. Runs it up to 215 from 143 average. That's just chump change. $650 in 5 minutes. Well, more than that. 1, 2, 3, 4, 5, 6, 7, 8, 9. Oh, God. 230. $245. Magnificent. I'll let you grade me a B+ on that one. Fuck. 265. I hit the 200. You're supposed to come back down. Yippee-yi-yi. Who called that one? Sorry, trade ES. No sorry. I can trade ES. I don't do sorry. Yes, I do. When you're a monitor, you have to be sorry. Oh, not EM.
Arbitrary kind of actions from regulators impeding their progress in a surprise way. So all the layer ones, we'll talk about some of the other layer coins and how they're going to operate.
And how they settle onto Ethereum, which is so different from Bitcoin.
Right.
Ethereum is so different from Bitcoin, and when you think about blockchain, people really can have both of these in your portfolio. From all the experts I've spoken to, they talk about how different they really are. So with that, we talk about the different products now. Risk management, we're going to see a lot of hedging products too.
Yes, the derivatives, the options on Bitcoin ETFs are important. There are options on Bitcoin ETF indices. That's important, along with the futures contracts. As more institutional players come in who need risk management, who need enterprise-grade risk management, and need to know where that's priced onshore in the United States, it's been a fantastic year. It's really amazing how much in the Bitcoin ecosystem we were able to accomplish in 1 year. Going forward, as you mentioned, Ethereum's different. Ethereum also has competition. There are a bunch of other blockchains that are vying for that stablecoin business, that meme coin business, that NFT business. There are other decentralized exchanges like Uniswap. There are other stablecoin competitors like Ripple. What we think is that you're going to need just as much access and just as much risk management for that broader set as well. Our CoinDesk 20 index is a great representation of that. We think that investors, rather than token picking, are just going to kind of want to buy the index.
And are you in the camp that everybody should have some sort of crypto in the portfolio?
I think that people need to know what they're
290.
what they're doing. MicroStrategy is now in the NASDAQ 100, so in effect you have some exposure in there through that avenue. If people feel comfortable that they understand what Bitcoin does, it's a great place to start. We don't make an investment advice. We don't really see why it wouldn't be healthy to have an alternative asset with interesting return and correlation properties in a portfolio. But of course, people should speak to their financial advisors.
Right. And you predict maybe some less volatility too among that. So it's great to see you, Andy. Thank you so much. Everybody loves crypto. I mean, we think about stablecoin, we think about, then you get Solana and all these others that we like to talk about as well. We'll talk about those in the new year, Andy. Andy Bear of CoinDesk Indices, thank you so much for being here. Still ahead, we bring in our panel to discuss the year that was for the energy market. Focus on the rise of energy demand.
Canadian Justin Trudeau called us a misogynist. I'm so sick of political correctness. You just can't have fun no more. You just can't. You can't tease women. We used to have ball back in the 70s. Having a ball. Girls would wear them Levi's and slit Levi's shorts. You'd kind of think we was having a party at Diddy's place. But it wasn't like his. Ours was with mushrooms.
Schwab Investing.
Woo!
Customizable themes, up to 25 stocks in just a few clicks.
I don't think anybody here's partied like I have. Randy, did you party like I did? You know what I mean? I'll show you what I mean. I'll show you exactly what I mean. That's me. He's Mark Bussell. He's passed away. That's my girlfriend. And that's Dodie. He's passed away. I don't know where he went. But I'm the only one living. And her, she ended up weighing about 250 pounds. That's an 8-gallon keg of Busch or Bud Light. See him pouring that beer? He filled it up and it started to spill out. I thought it.
But obviously with a new administration in the White House, a lot can change to the new year as well.
Yeah, understood. And what do you make of it, Kenny Sue? I mean, what do you think this year really told us, to be clear?
Yeah, certainly. So 2024, again, like you said, it's
Randy's done.
Kind of all over the place in terms of the energy.
I wore him out today.
Kind of touching on oil there. I mean, during the summer months, we saw heightened geopolitical risks coming out of the Middle East, but also, you know, earlier during the year, there were high expectations with regards to Chinese consumption. We've made it to the end of the year, and, you know, energy price volatility is somewhat diminished from where we were seeing it before, and a lot of that is because of the weakness in China, and that consumption has failed to play out. You know, a lot of the risks we think continue to be weighted on the demand side. Supply side's a little more muted. I mean, OPEC Plus extended its production cuts into the first quarter of next year, and that's certainly provided some downside support. But, you know, you have a lot of factors over the horizon. You have the uncertainty of tariff impacts, particularly with regards to the United States and Canada. And then you have other impacts like, you know, what the trajectory might be for global demand and currency impacts. So hard to paint an actual direction until we get more color on the fiscal risks in 2025. But we think that the risks currently sit at the margin on the demand side.
Right, understood. How about all the nuclear energy? I mean, this was not something we used to talk about. We were so busy talking about renewables and green energy and this and that. And then we just realized how much more energy we will need. I mean, it started with having to plug in your EV, but then it became those AI chips and data centers and infrastructure that needs to go along with that. And nuclear power became front and center. Tomorrow, I mean, we saw some of those names doubling. There's a lot of action in that group. Do you expect to hear more about that type of power?
Yeah, the power story is going to continue to be a really dominant theme, and actually we think that natural gas, the commodity and the producers probably benefit more under the Trump administration than even their oil counterparts. For the themes that you talked about, they're not going away. Rising EV penetration, more countries globally becoming wealthier, adopting air conditioning, AI, as you mentioned, that's all power source. And we've made huge inroads with renewable, but at the same time, we continue to need a base load supply. And natural gas is I think, a likely beneficiary of that. But then also, we see technology companies going directly to create their own nuclear, to source their own nuclear energy because of their commitments from a carbon perspective. We expect that will continue. The grid is going to be challenged in the new year and beyond for all the more demand needs on it. And we expect that there'll be more off-grid demand sources for supporting the AI theme.
Right, understood. Kenny, what do you make of 2025? I mean, we were around the $70 mark, below it for much of December. We weren't at 100. We weren't at 55. Where do you see oil headed? Why does it matter in 2025? What do you think is the most likely direction?
Yeah, certainly. So 2024, right? We continue to see oil trade in that $70 to $80 range, and then we saw that downside cap kind of weaken closer to the end of the year. For 2025, I don't expect a whole lot different. Slightly bearish outlook on the oil price trend, maybe 65 to 80 rather than 70 to 80 going into 2025. And again, a lot of that continues to stem on the China narrative, right? Recent data out of China continues to disappoint, and while the markets were, optimistic about announcements coming out of Chinese conferences overseas back in September and October, we've actually seen that trade reverse a little bit, given the lack of actual sustainable action coming out of the government. So until we see more monetary policy over there or fiscal support out of China, the outlook for oil prices continues to be somewhat muted, but ideally we think those oil prices
Damn, 280.
That's a level at which U.S. producers can continue to maintain profitable output. But again, given the fact that the margin right now for the oil trade continues to remain weighted on the demand side, any impact on consumption would have ramifications in 2025.
Yeah, a lot to discuss for the new year. You guys hit on so many great points, and of course, energy independence for the USA is certainly a focus for the new administration. And we are going to have some great conversations in the new year. Tamara and Kenny, thank you both so very much. Tamara Esner, Principal Vectis Energy Partners. Kenny Zhu, Income Research Analyst at Global X. Great to see you both. And thank you, friends, for being with me here on the watch list on Schwab Network. In fact, download the free Schwab Network app, available Apple App Store. Tune in 24/7, schwabnetwork.com. I'm Nicole Petalides. Thanks always for being with me on Schwab Network.
Join me, Oliver Rennick, alongside Schwab Network's options experts as we explore the second derivative. Gamma On is a brand new limited series to take your trading skills to the next level. Subscribe to Schwab Network's YouTube channel now.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage
Down in the content, YouTubers,
That means you can stop waiting and start investing in
you could hit my page.
money market funds and more.
This is
Get more with Schwab Bank Investor Checking.
1980.
Built for investors.
Then and now, 2024. Me on the right, me there.
Your market knowledge.
Hee hee.
Perspective into full view. Real-time example trades. A full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Fly, baby. Still at 285. Not moving.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
There it is. $3. Do 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 do. Do 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 do.
Knock knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
I'm Nicole Petalides, host of Trading 360 and The Watch List, live on the floor of the New York Stock Exchange, where we bring you breaking news, experts, CEOs, influencers, and analysts. It's all available on Schwab Network.
It's now Power Hour.
Hello, I'm Oliver Rennick. Welcome to Market on Close on the Schwab Network. It's our look back and our look ahead today, looking at 2024, ahead to 25, and checking in on the live market throughout it. We got a lot to talk about. It's going to be a very fun one and a timely one as we close out and get close to the real last exciting week of the year as we record here. We're going to talk about some of the major themes as we monitor the market's response to the Federal Reserve's most recent cut, ending 2024 with some action. We'll talk about Elon Musk, Tesla, and the incredible comeback story. We're also going to look at NVIDIA, obviously. Apple involved in the AI conversation as we balance the discussion on artificial intelligence between hardware, the semiconductors, software, and the services, somewhere where Apple has some overlap for both. Of course, that's in the context of a holiday season approaching with a lot of spending indications, big implications for the iPhone cycle. We're going to discuss Bitcoin too. Again, one of the biggest stories of the year, whether or not anything can get in the way of it, of course, including some of the recent volatility around rates. Mr. Ross Gerber, President and CEO at Gerber Kawasaki Wealth and Investment Management, rejoins me here. Ross, thanks for being here.
Oh, my pleasure, my pleasure.
All right, Ross, what did you learn this year?
Well, hello, retail traders.
I'm setting
well,
you up.
I learned that some things change and some things stay the same.
Okay.
You know, and you know, that's one of the reasons. You know, you might have a lot of opinions about companies. I'm an activist investor, and a lot of people perceive that I had like sold all my Tesla or this or that, which is not true. I sold about half or 40% of my Tesla position, but it was mostly as a rebalance and evaluation thing. And what's happened in the last, 2 months with, Elon's amazing support of Trump and then helping Trump win, and now Elon's president of the United States, it really has put, Tesla in this new light that it's almost like a meme stock now. We've moved to all-time highs. The valuation makes no sense, but that's okay. And we've made us back. Now Tesla's back to our number 2 stock position behind NVIDIA at my firm. And, again, we're trimming. We're going to continue to take profits here because as much as I love the potential of Tesla, I think there's a lot of risks in the stock.
Okay. I think that's a very
Jesus, what's wrong with these goofers?
The valuation obviously makes it high beta. Though I
They just
thought
don't
maybe
get
you
it.
were going to say, I learned not to invest on politics, because last time we talked, and a lot of that throughout the year, it seemed like you thought the alignment with Trump was going to be an ultimately negative thing.
Well, yeah, and I think it's still yet to be determined. Just because the first 2 months have gone smooth, now we've got
Smooth?
right thing as Doge should be shooting down these pork bills. But, Trump comes in kind of looking weak, and now we're all calling him President Musk. So I don't think...
Oh, bullshit.
On the short
These
term,
people, man, I'm telling you what. I learned one thing in life. You are who you hang with. You are who you hang with. I got friends that still hang with the same old people that sit around, smoke deep weed, and drink all day and look like they're half dead. And I'm running circles around them. I decided not to hang with that bunch, and I decided to hang with a different crowd. I used to hang with a bunch of musicians. We travel around, chase women, play music, have bras thrown up at you out on stage. You are who you hang around with. Now I'm hanging around with a bunch of intelligent day traders. If I was still hanging around with the crowd that I was doing before, I wouldn't be doing what I am today. If I was, it would be a lot harder on me. I had to give up one crowd to move to another. So if I was president of the United States, I'd want smart people around me, not people that I choose just because of one's color of skin or one's gender or, tranny or whatever, I'd want to hang around with smart people. I'd want a smart people, but I couldn't say no better than Jack Ma said. Jack Ma says, I just sit around and do nothing. I'm just same as Elon. My executive team is the smartest team out there. So, these guys, it's like they didn't have 4 years of Trump already. And we had a great economy. We had better employment than we'd had in 40 years. We had no wars. And what's going to happen after the first term when all the wars have stopped? Are they going to still be bad-mouthing Trump? Bad-mouthing Elon? These guys are nuts. I couldn't trade with these clowns. I'd be getting into it with them all the time. I'd be sitting there arguing. I said he was held back. If Biden would have, we wouldn't have had to spend billions and billions and billions of dollars if Biden would have listened to Elon. These guys got money; they can spend it. Why use my tax money? Why give Rivian $7 billion here in the last month, and they were getting ready to go bankrupt? Why would one do that? It's definitely had a bounce because, that free money. I'm telling you, they've got so much free money here, 13 trillion. And that's not counting the unfunded liabilities that go along with it. In 4 years, 3 really. That's over budget. 13 to 14 trillion. That's what they want. That's why they can't say it. They ain't saying it. If they come out and say it, then we could believe them. Trump's not going to do that. He's going to cut that budget. That's why they're all pissed. They're coming up with any kind of excuse to bring this market back. I just have to get off. It's been Tesla. It's been Elon all fucking day. What's the deal, man? Can't they shut up? If you ain't gonna talk, if you ain't got nothing good to say about somebody, don't say it. Why ain't they picking on Bob Iger or someone else? Tesla has a bad day and they're freaking out on it. Biden's gift to Trump, golden opportunity to supercharge the economy. Dismantling Biden's infrastructural policies would greatly harm the U.S. economy growth. I disagree. We got to stop the spending. We can't keep spending like this. They look at it. Well, I might be crazy. But the liquidity's got to stop. They found $1 trillion just last year that they didn't need to spend. That went to junk. I'm going to do a video about it. Just show you all the pork that did not need to be spent. And you think it's good now. It could have been a lot better. I've been arguing with these guys all day long. It's been about Musk. That's what got the Democrats in trouble, all that fake news. I'll turn them off if they're going to start on that tomorrow. Every single person got on here. It's been about Musk. I'm going to complain. I want you to turn this on and be Musk.
Or endeavor in that space. So we're cautious on that. I'd say we're also cautious on staples. It's not that people are not pricing in low risk, which they are. We do think that the market is is really looking toward the growth that's likely to happen both in the economy and in earnings. But the reality of staples is they're not cheap either. And also some of the profit margins for the staples sector could come under pressure. So we don't think.
So I listen to these guys because I want to get in the now. I want to feel how they feel. And if I disagree with them, I'm going to say it. But there's definitely fear. They're trying to throw. They want to pull back, so they can get some of the people that have been sitting on the sideline. And here's Sarah. Oh God, I got to put up with her now.
Great conversation, Cameron, Aya, and Young Yu. We are keeping our eye on the commodity space. Natural gas prices falling today. Our Pippa Stevens with the details behind the big move, Pippa.
Hey, Sarah. Well, nat gas did break above $4 overnight for the first time in nearly 2 years before a pretty steep profit-taking pullback ahead of expiration, with the contract now down some 6%. Now, forecasts for cold blasts have stoked heating demand, and EBW Analytics said one key question is whether it will be severe enough to cause freeze-offs and therefore production disruptions. Now this year we have seen a big divergence between oil and gas. While oil's been stuck in a range, gas has broken out with two key tailwinds behind it. That's LNG demand and data centers requiring enormous amounts of power, which could benefit gas-focused drillers like EQT, Antero, and Expand Energy. On the LNG side, Cheniere is a name to watch. They are the largest exporter in the U.S. and the second largest producer of LNG globally, and that stock, Sarah, up 23% this year.
Okay, Pippa, thank you. Let's send it over now to Kate Rooney for a look at the biggest names moving here into the close. Hi, Kate.
Hi there, Sarah. So U.S. listed shares of Toyota climbing today on a report that the Japanese automaker aims to double its return on equity target to 20%. The company also said its global production declined for a 10th straight month in November, although worldwide sales increased for a second month in a row. Meanwhile, retail stocks such as Walgreens, you got Dollar Tree, and Target all up today as the holiday shopping season comes to a close. MasterCard's spending pulse out today as well showed total U.S. retail sales this holiday season grew 3.8%, and the consumers were driven by a search for value, Sarah.
Yeah, they're also the worst performing stocks of the staples. Target, Dollar Tree, and Walgreens getting a boost today. Thank you, Kate. We're just getting started here. Up next, the tech sector setup for 2025. EMJ's Eric Jackson standing by to break down his top picks heading into the new year, including one name that is already up more than 100% in just 3 months. We're live from the New York Stock Exchange. You are watching Closing Bell on CNBC.
I'm sending my message to Schwab. Schwab Trading. You all overdid it today on Elon Musk.
Underwriting Insurance.
You do.
Welcome back. Tech stocks leading the charge in the past week and set to close out another year with double-digit returns. Our next guest is on pullback watch, but is seeing potential in a few names in the new year. Joining
Pullback
me now
watch.
to discuss is EMJ Capital founder
Ah.
and portfolio manager Eric Jackson. Welcome. It's good to see you. Happy holidays. Thanks for joining us, Eric. You there?
Yeah, Merry Christmas, Happy Hanukkah from the 51st state.
Okay. Oh, you're in Canada? Where are you? Just kidding.
Yeah.
Eric, you are actually. So let's talk about the names, because you have a very high risk tolerance. You always go for names that make people maybe a little squeamish. I know you got Carvana when times were tough. That turned out to be a really good bet. And now you're looking at Peloton. How long have you been in this one, and why do you think it's promising?
Yeah, a couple of months now, Sarah. I mean, this is a name that, like Carvana, dropped something like 95% from its all-time highs post-COVID. And this is a name that has been forgotten about. But
Not
it's
really.
got a bunch of loyal subscribers
Yep.
that are not going to cancel, that are high margin revenue.
Oh, Piton.
And, they are in the midst of a turnaround. They have a new CEO starting next week, actually.
Oh,
there is more
again?
to cut at Peloton in terms of admin and marketing costs. And so I'd say it's sort of me and
Wow,
David
that's at a
Einhorn
good
who
bounce.
Really like the stock. Everyone else has kind of forgotten about it. But this is a stock that has potential to triple in 2025. And I think these are the kinds of names you want to look at going into 2025, because the market's rallied for the last 2 years, basically. So you want to look for names that have been unloved up to this point, or are at the beginning of like a new secular trend.
Why do you say it has the potential to triple? Because the knock against Peloton is it just doesn't have that much room for growth in terms of fans. Like its high point was in COVID when everyone was home and everyone was doing Peloton, and we haven't really looked back at that time in any meaningful way. And most people I know who have Pelotons do not use them.
Well, the ones who have them are still sticking with it. But I agree. Every time I pass a Peloton store in the mall, it's empty. Just in the last couple of weeks, actually, I was surprised when I walked by and actually saw real customers strolling through there. Clearly, they don't need any stores. They have spent way too much thinking that when they were $155 stock, that things were going to continue that way. And so so you can do well because they are on the verge of tipping into profitability. And have been forgotten about and ignored. And if they can pull on some levers to cut the costs and show just a little bit of growth, I mean, Carvana, keep in mind, didn't have a lot of growth, but they just didn't die. They didn't go bankrupt. Sure. You can see those kinds of names do really, really well.
Okay, so one that has done really, really well already that you still like is MicroStrategy. And I'm always eager to ask people who own this stock,
Up to
why
200?
MicroStrategy if you can just buy Bitcoin?
It's a levered play on Bitcoin, Sarah. You're right. So you got me caught there. So if you believe, like I believe, that Bitcoin is going to end 2025 over $200,000 rather than $100,000, then why not have a more levered bet on that through something like a MicroStrategy? I just think there are a bunch of catalysts going into next year. Obviously, you're going to have the strategic reserve get started in earnest by Trump. And we know that nations like Russia and the UAE already have been stockpiling Bitcoin. I think there's going to be sort of a rush, everybody through the exit doors at the same time in terms of other sovereign nations following suit. People talking about, hey, there's 19 million of the 21 million Bitcoin have already been mined, and sort of a panic buying could set in. I also think we'll see in 2025 a broadening out of the rally, not just to the small caps and the Russell, but to in crypto world to altcoins, who really haven't participated as much as Bitcoin has over the last year and a half.
And you like the whole space. You like going through Robinhood, some of these other stocks, just any exposure you can.
Yeah, I mean,
do you think Bitcoin's going to double?
Yeah, I mean, I trimmed Coinbase recently because I had exposure to names like Galaxy, Hut 8, which is in the mining space. I like DeFi Technologies the most because they're a crypto ETF provider in Europe and Asia that is still only like 5x forward PE. So I think all those names will do well. There aren't that many public equities to invest in that are crypto exposed, so I have a bunch.
I mean, Eric, don't you kind of need the Fed to be cutting rates for this riskier portfolio to work, and they just told us they're not going to cut rates as much next year.
Well, many of these growth names, Sarah, haven't
Oh, she's
really
definitely-
participated in this 2-year-old rally, which is, all these arc names that were popular in 2021 in the heyday. Like
I need to come up with my own show.
Firm, my own upstart.
65 subscriptions, you're going to see that, right? That's going to come out. It's a wait and see, but optimistic play, but we've got to see what happens once these start getting rolled out to the enterprise. And I don't know if there's a consumer pricing angle to this yet. I would say that would be much farther off than their enterprise opportunity with Copilot.
Okay, great. Thanks for that. Last point, Ben, on NVIDIA. I kind of leave it for last because I feel it's the one with somewhat ironically the least amount of uncertainty around it right now. Valuation's been around like mid-40s since basically the summer. The numbers keep delivering. It seems like no one's even close to them competitively. So do you have strong thoughts on where it could go next year or what's been priced in?
Yeah, I think you're just seeing the continued growth cycle for them. I completely am on board with that, right? It's just really about what degree of growth year over year they're going to have. Obviously, and I think we've talked about this before, right? It's not going to look as magnificent year over year. It's not going to be triple digit quarter over quarter, year over quarter like it's been. It's going to be much more modest, but they're definitely well positioned for growth. One of the things I'll say about this stock that I think is actually super interesting is it reminds me, like my conversation with investors and the industry now reminds me a lot of early conversations I had with them at Apple, where it just felt like the broad consensus was they're just going to be disrupted by the next lower cost competitor. And with Apple that wasn't true because of platform value, obviously customer delight, the stickiness they had in the ecosystem. And so I sort of always lob out this same analogy, which is if you just look at the broader ecosystem that NVIDIA has, the platform play, it's not really that indifferent than the narrative that you've got around Apple. Now, they are threatened by competitors, obviously the hyperscalers who want to make custom silicon. That's really the argument to be had, but that's a small part of the semi-infrastructure spend coming over the next few years. A lot of this massive, capex that's going the next couple of years, and really huge numbers for cloud AI forecasts. Anything from 300 billion to 600 billion by 2028, based on different ranges of forecasts. That's just greenfield growth. That's added TAM, and NVIDIA 100% well positioned there. Obviously Broadcom is that name comes up. Marvell, and then even just Intel and AMD and CPU side. Those are really those players that are going to jockey and battle for this massive TAM expansion that we're seeing in data center infrastructure.
All right, so a few others that might still be in the mix. We did learn that Broadcom was underpriced around its earnings, clearly. Ben, thanks a lot for the context and the thoughts. Appreciate it.
Yeah, anytime. Good to see you. Have a good one.
Absolutely. Ben Maheron, CEO and Principal Analyst at Creative Strategies. Some good thoughts there on a few of the most magnificent companies around. When we come back, we're looking at options, and we're looking at the S&P 500's relationship with volatility and options flows. As we this year began our options segment focused on gamma trading, second derivatives. It's been a very informative one. KG joins me next. Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Get each and every angle, the whole picture. Everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl.
Schwab, a modern approach to wealth management.
Accelerate your market knowledge.
And shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome to Schwab Network.
Daily live exclusive content tailored to today's investors.
Broadcasting 24/7 from our studios in Chicago.
And from the heart of Wall Street at the New York Stock Exchange.
Up to the minute market insight.
Let's say I got in it here at the 200. And I run it up. And all of a sudden I notice a left shoulder. So I want to put a trend line. Or price line on that left shoulder on the body of that, using the body of the candle, not the wicks. Boom. Then you got this shooting star or little red doji, and then we pulled back. So that would have been a good exit, left shoulder and the right shoulder, and get out of that trade. You see it on the way coming up. So you have an idea where you want to get out of the trade when you're scalping it off the 200. And you're one of the first ones that notice it. So you get out of that trade. And you beat everybody else. You're ahead of everybody else getting out of the trade. And then there's people stuck in it. So you're getting out on the way up. That's why you catch me a lot of getting out of trades a little too soon, but you never know. I mean, the thing can knife on you like it did here.
Those vol spikes have been fairly quick as well, and I think that's because you are able to spread out risk across multiple expirations, giving the market a little bit more, direction or a little bit more comfort in order to be able to hedge positions to the downside. Now, when we do have very outsized days, it could also create a little bit more of a push to the downside or even to the upside if we're seeing a squeeze. But I think overall, a lot of the 0DTE options flow, which is around 60 to 65% of the total S&P 500 flow on average on a daily basis, has actually been a pretty good thing for the market rather than a bad thing for the market, because it's been able to dampen once again vol, and then also kind of creating this like melt up over time type of environment for the markets. And let's see if that's going to actually hold true into 2025 as well.
One of the things that I definitely got some more awareness, familiarity, knowledge of this year is the stuff that you track on the market maker positioning and where those kind of pressure points are. I found it enormously useful, especially when we are trying to kind of assess when a move is unique in the market, because to me, the fun stuff happens in markets when there's surprise involved, basically. A company, has a big earnings beat or a miss, or Powell does something people didn't think he was going to do. It's basically surprise. So what we're monitoring a lot is when there's a degree of surprise on behalf of the biggest participants, they then have to make adjustments.
Yeah, that's usually after a one standard deviation move. So usually when you're looking at options premium itself, those market makers that are actually making the pricing or trying to make the pricing for options, they're going to try to give themselves enough premium in order to try to weather the storm if they do see an event to the upside or downside. But you could see these massive squeezes in the market where there's just so much outsized buying of call positioning and to the upside, whereas the stock continues to move to the upside and more calls are being bought, those dealers have to kind of continue to buy stock, and that's where you get these melt up scenarios. A really good example of that has been Tesla as of recent, where we did see Tesla just rocketed higher. Now, did they have the news flow? Yes, obviously post-election, but you started seeing a lot more optimism, and a lot of individuals and investors were actually looking towards options rather than buying stock in order to get exposure, because you have a little bit less of an outlay when it comes to the premiums. And so that type of excessive call buying really moved the stock up to all-time highs in a matter of 2 weeks, 3 weeks, Oliver, which is something that's very remarkable. Let's see if stuff like that's going to really hold on for the new year in 2025. That's just one example of among many that we have seen. The other example that we actually have here on this chart is just the volatility of the VIX index. Now, this is a seasonality chart, and this is really showing, in that red line is showing you the average of what the VIX was on a 10-year basis, and then the blue line is showing you what we did for this year. Now you see in the middle of that chart, we had this massive spike to the upside. And that's when we had this kind of yen carry trade type of scare in the market, the unwinding of those carry trades. Would we see the Bank of Japan making excessive actions when it comes to the foreign exchange markets? And we saw this blowout in volatility in the S&P 500 options. But the reason why we saw volatility spike so high is because now S&P 500 options are traded 24 hours a day. And we saw a lot of illiquidity overnight, which is one of the reasons why we saw that huge spike in vol and also the huge drop in volatility the next day when we started seeing liquidity coming back into the market. So options continue to evolve. These markets are continuing to evolve here. And we just have to get used to these new dynamics that could actually put a little bit of pressure in the market, but also could give us a little bit of favor if you're a bull over the long term.
Yeah, I like that. Very well said. And we did see a lot of that real juicy price action happen in the heavy options trades. So it really is no mistaking in my mind where some of the extra grease on the wheels can come from, and it certainly is from some of that back and forth within the options market. The other thing too I love about this chart is it tells us some of our big volatility spikes this year were at like the most inopportune moments at which people are usually expecting a low vol, whether it was August and the midsummer or in the Santa Claus seasonal rally time.
Yeah, exactly. And actually, when you're looking at the Santa Claus rally time here, we could see vol maybe reverse. And that is something that we will have to see here, because it's going to be an environment, we will have an environment usually towards the latter half of the year where liquidity actually does dry up, volume dries up a little bit, and that actually gives a little bit more favor to price action, either to the upside or downside. But the market generally is bullish over time. You can see that on a 10-year chart, 20-year chart, max chart. You can see that the market generally tries to melt up over time. And even though we had a recent vol spike, if you kind of look back at that chart, they usually don't last for that long, maybe 2 sessions, 3 sessions. Then we have a normalization and we continue to move forward. The market is able to digest some of the unknowns or some of these kind of recent volatility spikes a lot quicker than what we have seen in the past. And that once again gives credence to the fact that this market has been able to continue to push higher. And I think this is one of those dynamics that's rarely talked about, but something that has provided a little bit of fuel to the fire for the bulls in this market as of late, because a lot of the bears just can't short this, no matter what news has been given to us throughout the year, with its yen carry trade scenario, Trump and potential assassination attempts. I mean, we've seen it all this year, and the market has been able to digest it fairly quickly.
Yeah, really has been pretty fun stuff. And the irony that the one thing that wasn't a problem basically all year, bonds, which were the biggest problem a couple years ago, kind of came back to haunt us a little bit. The Grinch, the bond market Grinch. So at least we got kind of one vol spike here that was a little bit more kind of familiar, but I don't know, it might be the kind of worst one, because we got bonds and stocks selling off again. So the bond vol is about to pick up as well, which had been pretty quiet all year. We kind of awakened the sleeping beast. Give me a last thought on that.
You know, it's actually very interesting. If you're looking at bond vol just in general, is it elevated? Yes, but compared to the actual realized move, compared to what's being implied in the market, you're not really seeing a lot of juiced up premiums when you're looking at the bond futures. And that's really what I judge a lot of bond volatility on. That actually has been, for the most part, subdued, even though we have seen the increase in rate volatility on a day-by-day basis. And that's something that may need to normalize in 2025, Oliver. I know that you're the bond guy, and I have never seen bond volatility like this, or when you're looking at the actual realized moves in the interest rate complex, I haven't seen moves like this sustain itself for as long as we did this year. And hopefully that actually moves to the downside or kind of subsides next year, and that's going to make it a lot easier when it comes to trading equities, as well as when it comes to the premiums for options, because even though it's a very small part, bond volatility and rate volatility is actually in the math of the Black-Scholes model.
For sure. Good stuff, good connection there into the options pricing. And as we have this discussion, this is on a day in which we basically had a failed 5-year auction where dealers took down a ton of bonds. So equity traders are hoping it cools off. We'll see what happens. Thanks, KG. Great stuff on the options corner all year. Great eyes on the technicals and how they overlay with the options flows. A very good, unique coverage here KG's been bringing us throughout 2024. Coming up, we're going to continue the review. By the way, markets are pretty calm right now, so it's actually turning out a good time to do some of this backward-looking and forward-looking stuff, too, as equities are a little changed and the S&P still green, only by about 0.25%, though. We'll be right back.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me, too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
Let's get back into our discussion about some of the biggest moves of the year. Phil Striebel joins us as we branch out into the world of the commodities and more. Chief Market Strategist of Blue Line Futures. Phil, you've been a great asset this year in our Friday chats. Good to see you, sir.
Oh, thanks a lot, but it's not Friday yet. It's only Thursday, so maybe I'll see you tomorrow.
Hey, we're going to be running this throughout the holiday. Don't say any dates, okay? I'm just kidding. Hey, so one thing we've talked about that I want to knock out first is basically crude oil, because in the world of commodities, I feel like this was one of the biggest letdowns there was for anybody looking for volatility or for anybody looking for upside.
It was one of the really difficult market because of the fact that it seemed like it was really geopolitical headline driven. And a lot of traders were positioning for kind of a widespread Middle East conflict. And it was really you buy the rumor of a ceasefire and you sell when the conflict seems to be at its major escalation. And then you start talking about, how is the demand structure coming? How is the supply? Things like that. We just never saw any major supply disruptions. So because of that fact, we kind of trended lower most of the year, and then also weak Chinese demand. They're one of the largest consumers out there, second largest economy. So 80 being about the peak, and then traveling down into just about below 60. So that's kind of the widespread range there for most of the trade. It seemed like you were either on the north side of the 100-day or the 200-day moving average or on the south side of it. And right now, it's kind of bumping around near those lower levels.
What do you think we learned about the role of Middle East conflict in the pricing of crude, Phil? Because at the risk of leading the witness here, it seems like the U.S. production played a pretty big role in keeping price tapped out.
It definitely did. I mean, I thought that more of the hurricanes played more of a role on impacting prices, but that was another thing that was just a buy the rumor, sell the facts. So I mean, this is where you really have a game plan. You really manage your risk. You know, you use the minis, the micros, the options, things like that. And you know, I can't give you any real secret sauce on it because it just never broke out to the upside and it was never a sustainable rally. So, you know, this is something where we're just trading back and forth in this market. So maybe if you have some more filters to see something where like it's truly breaking out to the upside and you see those higher highs and higher lows, then you have something. So I think you got to be a little bit less kind of headline and emotionally triggered by the crude oil market and focus a little bit more on the technicals.
Seems like also if you want exposure to energy, natural gas is the better play and way to go. I mean, natural gas is breaking out heading into the final weeks of the year again.
Pretty shocked by that. Well, I'm shocked in a sense because that contract had disappointed me so many times. But it's another market that now it was following a little bit more on the fundamentals. If you look at those weekly injection numbers, they've been coming in lower. They kind of peaked a few weeks ago, and now they're dipping into those draws, and we finally got that turning point on it. It's another great contract where they have a one that's $1,000 every dollar move, 2,500, 5,000, and 10,000. So you can really position size that one well. The options are quite liquid in that market. You know, no telling how high it'll go, but it is also a market that you see like an eastern cold front come in, and people buy that anticipation, and then once it touches, touches base, then you want to sell that market off, and you always want to be. You know, when they start saying polar vortex, that's when you want to be out the door.
Yeah. All right. I like that. We'll keep that in mind. Hopefully we won't get too many polar vortex headlines in Chicago, but anything's possible. Phil, let's talk a win or two that's buckling, though, into the end of the year. Gold, precious metal. Hit a high 28. Was generally another great year for gold, but what are we learning in the last month?
Yeah, I really learned that, Trump killed it with the tariffs. That was kind of the first blow to it. The Fed doing it a complete about face.
He ain't had no tariffs yet.
The number of interest rate cuts is going from 3x expected to 2. And
What has gold got to do with tariffs, you ding-dong? I don't get you. Tariffs. He's not even president yet.
Fed can't do anything. The problem with the economy now is we've got rising inflation, but we've also got rising growth. So it's not a great product to own. Your best inflation product is going to be one of these other proxies like crude oil, like gasoline, things like that are great measures of inflation. So it's really a matter of getting the specific economic regime right in order to get gold futures traveling in the appropriate direction.
Like that, okay. Well said. Phil, thanks a lot. Good thoughts here to set us up, cap us for the year, and get us ready for the next. Appreciate you.
Yeah, thanks a lot, man.
Yeah, absolutely. Phil's Chief Market Strategist at Blue Line Futures. Coming back, we got the Schwab team for big picture discussion. How a potential shift in policy around the election reshaped 2024 and beyond. Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
That made no sense, what he just said.
It's fast market. Ready for you, ready ready to go. I'm Kevin Higgs.
So gold ran up on a great economy and recession. He's looking for a recession. We've had a great run. I mean, a huge run. I agree with that, but I'm not going to call a recession. The economy sucks around where I live. $150 all the way to $257, $100 in 2 years. I mean, that's huge. I can see it pulling back, but I'm not going to blame it on a recession. I'm going to blame it because it's overbought. It's at a 20-year high. It's way overbought. There's nothing, it has nothing to do with, everybody just got on the bandwagon and overbought it. It's up, what, 500% in 20 years? GLD. This one I'm going to go long in. If he can stop the wars, I should start holding a small position right now in Baba. You like 10 shares of it, 20 maybe. Kind of missed it last week on that dip.
Deterioration in small caps and even breadth up the cap spectrum in the S&P, then I think it would be a little bit more concerning.
Okay. The bond market making a return to volatility, Colin. Also at the end of the year, it seemed like our old nemesis as equity investors was quiet throughout much of 2024. What in particular do you think awoke bonds here in this last month?
It really all comes down to expectations for Fed policy in 2025. If you look at what we saw over the past year, really, you saw this ebb and flow in long-term Treasury yields as expectations for the Fed terminal rate or how much they're going to cut in the years to come varied, where we saw yields initially pick up following a decline at the end of 2023. Then they came down again during the summer when we started to see some labor market weakness and the idea that inflation was coming down, only to see that reverse again over the past 2 months on the idea that labor market weakness has stalled and inflation is proving stickier than expected. So it really comes down to, how those two economic policies and outlooks play into the Fed going forward. And now we're seeing the 10-year Treasury yield, at the high end of its recent range on the idea that the
oh boy, 6 more minutes.
Less than expected next year. So as we look into 2025, it's really going to come down to the magnitude of those rate cuts should we get a few more.
Colin, thinking about the way the curve is steepening out, arguably one of my top stories of the year, steepening that is combined long end going up in yield, the Fed's going down, the middle doing different things depending where you look, but mostly steepening. So how do we reconcile this with the history? Is there any precedent for this moment?
Well, you can sometimes point to the steepening of the yield curve or the uninversion as the idea that maybe there's a recession coming, because if it is driven more by falling short-term rates due to Fed policy, that could signal that they're cutting rates due to nefarious reasons. That's really not the case right now.
We got bear steepening.
Yeah, but we expect that steepening to continue, but we think it's going to be more of the bull steepening fashion. Because if you look at where T-bills are right now, 2-year Treasury, it's still very close to the Fed funds rate at the end of 2024. And assuming they cut 1 or 2 more times, we should see them continue to fall. As we look at the 10-year Treasury yield, we think they'll trade range-bound. They can move a little bit higher from here, but we think more of the movement's likely to come from falling short-term rates, probably closer to that 4% level, versus the 10-year Treasury yield, say, rising to 5% or so.
Okay. It's quite a move right now. Kevin, I wonder if stocks care what form of steepening, or if they just don't like certain nominal rates or rate of change, as you guys have also argued. Do you think equities care if it's bull or bear? Because I could argue till my breath is out that we should want bear steepening way more than bull, but I don't know if stocks are looking at that detail.
Yeah, I mean, I think the key is really going to be, and this is where it gets tricky, I think, for 25, and not just the calendar year, Jan 1 to December 31st, but
James
really
Bond
this cycle, whether it's 6 months, whether it's 18 months. I think what's going to be tricky from an equity market perspective is finding this balance between
Kent
is the
Clark
Fed holding back because now inflation is becoming a concern versus is the Fed going to then have to potentially go back into maybe more aggressive cutting mode because the labor market is a concern. And you still have, you're kind of in this not uncomfortable space, but potentially uncomfortable space from in a trend, and I would say lowercase s, emphasis on the lowercase s, stagflationary, trend, if that happens to be the case where you do for some reason get more labor market weakness in 25, but also a little bit of a firmer inflation backdrop. I don't think that's catastrophic, but I think that's going to be the key, is to sort of avoid is for the equity market, is avoiding those really fat tails of inflation really getting out of the bag again, but then also the labor market weakening, and then thus basically hamstringing the Fed and not allowing them to really move much either way. So that, I think, from a dynamic standpoint, in terms of direction, that is probably going to be a more key driver for the equity markets. I would say right now, it's probably more on the inflation side, because you're starting to see that correlation between bond yields and stock prices turn negative again. So all else equal, every time you do get this rise in rates, it's putting downward pressure, or is consistent with downward pressure on the stock market. And if I think, if we stay in that environment, that probably means that inflation, at least from a supply perspective, is becoming more of an issue again.
All right. I like that conversation, guys. Really good thoughts there. Appreciate you, gentlemen, and the commentary throughout the year. Always bringing the market session into a nice close there. Kevin Gordon and Colin Martin. Equities just finished trading. We'll be right back for Closers Panel.
Join me, Oliver Rennick, alongside Schwab Network's options experts as we explore the second derivative. Gamma On is a brand new limited series to take your trading skills to the next level. Subscribe to Schwab Network's YouTube channel now.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Accelerate your market knowledge
and shift your perspective into full view. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Ameritrade is now part of Schwab.
bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who
I got supper made in less than 5 minutes.
and sharpen your skills with immersive online education crafted just
Boom, 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 boom.
Also, you can
Okay. Today, I was really in an argumentative mood. You can tell by me going back and forth with these guys. To me, they're kind of saying people ain't going to pull money out of the market until next year, or the beginning of next year, to move their funds around so they won't get taxed on what they pull out this year. So I do expect a couple weeks pullback before Trump gets in office. We'll see how that goes. So that's what I'm getting out of all this gibberish today. We've had a great run since the election. We've had a great run for 2 years in a row with hardly any correction. So it's got to happen. We used to, back in the day, every 4 years we'd have a recession. Every 4 years. And it would be mandatory. It always happened. But now times have changed. We've got the retail trader in here. We got more people working from home. We live in a totally different economy. We're in a gig economy. That is what Hillary did not want to see. When she campaigned, she was totally against the gig economy, which did make no sense, because I was doing gigs at the time. I was out playing music and still trading, but I wasn't doing it as much. And then this is a gig. Sitting here at home making a living on stocks is a gig, because you don't have to be out there in the workplace. So I'm still think we're going to we need to have at least 10%. If you look at just the SPX in 3 years. And these pullbacks these days, they probably ain't nothing like they used to be. So I'll pull up a 3-year chart. We were at 34.91, and we've ran up $2,600. That's a lot. That's a huge gain. If you go back 20 years without a correction, a decent one, you go back 20 years, all that liquidity. See, I talked about the triple top last year. I didn't know what we were going to do. If we were going to pull back off a triple top, these are yearly candlesticks, and they were all about the same. And then all of a sudden, the election year, and it's not, it doesn't do that during election years. You don't have bounces like that during an election year. You have a little bit of bounce because you think everybody's, but we've been run by bureaucrats. They're not going out to get reelected. This country's been run by bureaucrats. Biden's been in a shell. So I could say 50% pullback. I just can't say that, but I could say at least 10%. The low was at 666. When we had this sell-off, it was at 12,000. Well, I don't know, one of them was at 12,000. Something was. So, we'll just have to see. Today was a great day. I mean, 3 black crows. We had, I counted 10 and I stopped counting. So go back and watch that tape if you're not familiar with 3 black crows. I'm going to pull it up. I'm going to watch it over again, see where I screwed up on it, if I did. So I wish everybody a great day and see you tomorrow. But today I'm definitely argumentative with these guys. I mean, they're just Elon. Every news article, every person that come up here, Elon. I said, come on, you're overdoing it. I sent him a message. I said, what is it? Look, for one, it's had a huge run. They think Trump's president. I mean, Elon's president, which I don't think Trump wants to work. I mean, he's going to work hard. We're definitely way above that market cap when we sold it at 2,200. And the shares have split. It's had a huge run. We broke past resistance on the 3-year. So it could come back to, I'm not going to say. 510 was our target, and 775. It's had a huge run. That's probably what they're thinking. Something that breaks out like that. I think the same thing. Like when Mr. run up to $1,200 and it was at 34, that didn't make no sense to me at all. $34 and all of a sudden 2 years later it's $1,200 just because of AI and Bitcoin. Well, Mr. went to 2,000. I think it was SMCI that went to 1,200. I mean, that was nuts. So, Amazon's going on strike. Starbucks is going on strike. Boeing will be a great trade this coming year. So I'm going to go have my lunch from dinner, then watch my videos, and I hope everybody had a good time today, besides me getting down. I usually don't get into it with these guys, but Elon. You can't talk bad about Elon around me and get away with it. I do more than options, but when we're at these high levels, like this coming year, I'm trading RGTI, and I'm going to have some Boeing shares, and I'll do a video about my swings for this coming year, what I'm going to be looking at. I used to trade penny stocks for 15 years. And then Vegas tucked me into trading options, and I make a ton of money trading options, a lot more than I did trading penny stocks. They're easy to scalp, and now I'm finding this SPX is just like it's the easiest money I've ever made. If I just traded the SPX all year next year, I think I can average 2,000 a day. And it's a lot less headache. So, I'm going to get on out of here. A lot less headache. I've left a lot of money on the table this week already. Not counting today. Today was a good day, but the other day could have been 60 grand, 30 grand, every bit of 100,000. today I've got out at 610 or 810 something, and it ran to 1700. Had 8 of them. That's just the SPX. I mean, I'm just in love with that stock. Called Disney out, and it ran up and pulled back now. So, yep, I'm going to get out here and eat my lunch before it gets cold. And we'll catch you later, YouTubers. Make sure you hit that like button. I don't see any likes in there. Yeah, I do. There's 12 of them. I see a lot of likes. We'll catch you later.